In this video, I'm going to do something you have never seen before. My name is Corey Ganem, and I've sold over $14 million worth of brand name products on Amazon in just over 7 years. So I'm about to pull back the curtain and show you guys exactly how to do the whole thing, A to Z, completely for free. Successful Amazon sellers tend to charge a lot of money to show you this information, but I'm getting rid of all the gatekeeping. And if you go through this course step by step and do everything that I'm about to teach you, you're going to be making thousands of dollars in profit in just a few months doing Amazon wholesale. So with that, let's jump right into the video. All right, so we're going to go ahead and dive right in, and I'm going to break down the three main business models that you can utilize when it comes to selling on Amazon. Now, obviously, this is a free course about how to grow a wholesale business, but we have to understand the three main models to really get a feel for how the marketplace works and why what other people are doing can sometimes impact what we're doing on the wholesale side. So the first model that we're going to jump into, and I'm really going to take the time to explain, is called private label. All right. Private label involves creating your own brand from scratch, marketing that brand, designing the packaging, and launching it to the consumer on Amazon for them to buy. Now, private label can be a very lucrative business model. It can also be a huge waste of time and money. And in my experience and in my personal opinion, is only a good business model for a very, very small subset of people who want to sell on Amazon. So if we go through some of the things required to build a private label brand. So first and foremost, like I said, creating a private label brand involves creating a brand from scratch. Now, this business model is so difficult because you're doing just that. You're creating a brand from scratch. There's no demand for your brand. Nobody has ever heard of your brand. Nobody has any idea what your product is. They've got to find you. They've got to click on your listing. They've got to look at your listing, decide they want to buy your product versus your competitor that might have hundreds or even thousands of reviews. And then they've got to take the time to decide they like your product. So as you can probably start to see, private label is a very difficult business venture, but it can be very lucrative. Now, when you're building a private label brand, you've got to invest so much money into advertising on Amazon. Most of the private label sellers I know, even those that are super experienced and that have done private label for years and have done it very successfully, some of them are spending 20 to 30% of their revenue is going into ads. So if you're selling a product for, let's say, $50 is how much your private label product costs on Amazon, some of these sellers are spending anywhere from $10 to $15 per sale. So they're spending $10 to $15 on ads to make one sale, right? 20 to 30% of their revenue is going right back into ads. So it can get very, very expensive to run a private label business on Amazon because you're having to spend so much money on ads. Amazon has become a pay-to-play platform where you've got to spend money on ads to get your product discovered and to get customers to buy it. Now, the third reason, or really the third thing to keep in mind if you're ever running a private label business, is the lead times that you're going to experience from your manufacturer. Now, in the wholesale business model, which I'm going to break down here shortly, we'll see that our lead times are relatively quickly. If we're buying from a US-based supplier, which is really the only suppliers you should be buying from if you're doing wholesale, your lead time is going to be anywhere from 2 to 7 days typically. But when you're doing private label, when you're having to manufacture a new product, typically you're going to have it manufactured overseas in China. And to get that shipped from China to the US, you're going to have to put it on a boat. It's going to take 30 to 60 days to arrive here by boat. Then it's got to get through customs. Then you've got to send it to your prep center or to your house if you're going to be doing your prep yourself. And then you've got to send it to Amazon, which can take another 1 to 3 weeks, depending on where you have to send it. So the lead times in a private label business can be extremely long. You also have to split test your main images, the packaging of your products. You have to really make sure that your entire listing is dialed in, right? So instead of just putting up a listing and hoping that people buy it, the real legit successful private label sellers, they are testing everything about their listings. They're testing everything about their products. They're trying to see, well, hey, is this main image going to get better click-through rate than this one? Or is this title going to get better traction than this one? They're having to split test their imaging, their packaging, their listings, their titles, their keywords, all of this. There's so much more that goes into creating and launching a private label brand then goes into creating or doing an arbitrage business or a wholesale business, as we're going to see here shortly. Now, another huge con of the private label business, this is one of the reasons I hate this business model, is that the upfront investment required is massive. It's pretty much impossible to have a successful private label launch in 2025 and beyond, spending less than $10,000 to $20,000 on a launch. Now, typically that doesn't even include your advertising spend. So basically what I'm telling you is if you want to start a private label brand in 2025, you're going to have to invest $10,000 to $20,000 into just your inventory. That doesn't include the thousands of dollars you're going to have to spend every month on advertising your product on Amazon as well. And that just assumes that the product does well, right? You might not even get a dime of that investment back. There are so many horror stories of private label sellers who spent 10, 15, 20K on a launch and it completely flopped, it completely crashed and burned, and they lost every dime. They end up having to liquidate their inventory for literally pennies to a liquidator, and most liquidators won't even take them. A lot of times they just end up having to destroy the inventory and taking it as a write-off on their tax return. Now, the success rate when it comes to private label sellers successfully launching a product and launching a brand on Amazon is anywhere from 5 to 10%. Now, that's being generous. I know countless people who were successful wholesale sellers, they were successful arbitrage sellers, so they weren't new to e-commerce, they weren't new to selling on Amazon, but even then they failed at 90 to 80% of the time, right? The success rate for even successful established private label sellers will tell you that 1 in 3 products they launch is a hit. So you're telling me that the best of the best only succeed 30% of the time. That's not really a business that I personally want to be a part of. Now, the upside to the private label business, and really the silver lining here, is your exit potential. Because when you build a private label brand, that is an asset that you own. You're not reselling somebody else's product. You're not building somebody else's brand. You own the trademark, you own the intellectual property, you own the inventory, you own the supplier relationships. So although it has the lowest success rate by far and the highest risk and the highest upfront investment, it has by far the highest exit value potential. There are private label brands that have sold for millions, tens of millions, even hundreds of millions of dollars. But obviously those are the exceptions and not the rule. All right, next we are going to look at arbitrage. What does the arbitrage business model entail and how does it work? So when you are participating in the arbitrage business model on Amazon, you are piggybacking on the demand for existing brands, right? We're doing the same thing when it comes to wholesale on Amazon, but with arbitrage, instead of having to go out and build relationships like we would with wholesale, we are literally just doing just that. What the title says, we're making an arbitrage on the price that we can buy the product for at, say, Target or Walmart or Dick's Sporting Goods, and the price that we can sell the product for on Amazon. But because people are already searching for those brands, the demand is built in. We don't have to spend any money on ads, and we just make our profit, ideally when we buy, assuming we're buying at a good price. Now, one of the huge cons of arbitrage and one of the reasons that I didn't like the model is because it's just hard to get enough stock of a good product. So let's say you find a really good arbitrage lead. Most legit websites, they're not going to let you just buy out their entire stock of that product. Most websites are going to limit you to 5 units or 10 units or 50 units. Some websites will let you buy a couple hundred units, and there are ways around some of these limits. But in general, I don't want to have to do gymnastics just to get enough stock for a product that I want to sell. All right. A lot of good legit retailers make it difficult for you to buy enough stock that you need to make good margins. And if you're doing retail arbitrage, which involves going to a store and buying products off a store shelf to then turn around and resell on Amazon, it gets really hard to buy enough stock because most stores might only have 10 or 20 units of a particular product on the shelves. So if you want to sell more of that product, you've got to drive around to every store in your town and buy up all the remaining inventory that they have. That is why a lot of people that do retail arbitrage, they liken it to you're starting a new job every week, right? Because when you find a new product, you're having to then make your rounds to every store in your town and buy up all the product. It's labor intensive, it's time intensive, and personally, I want nothing to do with it. Now, another con to the arbitrage business model is you are at the mercy of the sales and the promotions that these retailers offer. Because in order to make good money with an arbitrage business model, you're having to stack discounts on top of one another to get products at a price that you can sell at a profit. So what that means is that if I go to Target and I find a really good product, typically that product is going to be on clearance, right? Usually I'm not going to be able to buy a product at the regular retail price and then turn around and flip it on Amazon for a profit. Sometimes you can, but a lot of times you're kind of hoping that Target has put that product on clearance, or they're running a sale on it, or you can buy a discounted gift card for 15% off and use that extra 15% as your margin. There's not a whole lot of control you have in the arbitrage business model because you're at the mercy of a lot of these sales and a lot of these promotions. Now, my biggest beef with arbitrage, this is by far my biggest beef with arbitrage, is the transactional nature of the business model. You are in no way, shape, or form building relationships with these retailers. You are literally just buying low and selling high, which is fine if you want to side hustle or you want to make some quick cash. But as you'll see when we break down the wholesale business model, relationships are where you make your money. This is a transactional model. You have no way to build relationships. You have no way to create a moat around your suppliers because anybody can go in and get the same deal that you can get. It is very transactional, and there's no way to differentiate yourself in this model. It's difficult to scale for the reasons that I mentioned earlier, mainly because it's hard to buy enough stock. And another reason that makes it difficult to scale is, guys, a lot of times when you're buying arbitrage deals off of these websites or in store, sometimes these retailers will cancel your orders, or maybe you ordered 10 units and they only ship you 8 units. You've got to have a really strong system for keeping track of exactly what you bought and making sure you got what it is that you bought, because you guys would be shocked how often a Target or a Kohl's or a Dick's Sporting Goods or one of these huge retailers that you would think have their operations dialed in, you'd be shocked how often they ship you the wrong product, or how often they ship you 7 units when they were supposed to ship you 10, or how often you buy a product and it arrives completely broken. Then you've got to go and get your money back, and it just becomes a huge hassle and a huge pain. Like I mentioned earlier, there is zero barrier to entry when it comes to arbitrage. Anybody in the world, not just in the US, there are people that do arbitrage in other countries. Anybody in the world can be your competitor, and there's literally no way for you to build a moat around your business. So you are at the mercy of the market, and you are at the mercy of how many other people found the same deal that you found, which again is not a business that I want to be in because you have no way to elevate yourself above the competition. That being said, right, you might think I'm shitting on arbitrage. That's not the case. It is a fantastic business model for beginners because this is the best and lowest cost way for a brand new person to learn how to sell on Amazon and to make some quick cash in the process. So if you're brand new to selling on Amazon and you don't want to start with wholesale, which is a slightly more advanced business model, arbitrage is a great place to start. And I have a lot of friends who do arbitrage very successfully. It's just not for me. All right, so let's get into wholesale, right? What this video is about. Let's talk about not only the pros of wholesale, but some of the cons of wholesale as well. So we'll start with the cons. I'll get right out in front of them. First of all, wholesale is a very capital intensive business model. All right, so a couple of sections in this video from now, I'm going to tell you exactly how much money you need to start a wholesale business. But take me, for example, right? I've been at this for over 6 years. I've been doing wholesale. I've been selling on Amazon for almost 8 years now, but I'm 6 years into my wholesale business, and I am routinely spending anywhere from $150,000 to upwards of $300,000 every single month on inventory. Now, of course, you're not going to start at that level. You're not going to spend that much money until you scale to that point. But guys, just know that there's a lot of capital that is involved in scaling this business. If you want to do big numbers in terms of revenue and profit, you've got to spend money. This is a business where you've got to spend money to make money. So if you have access to capital, or if you have a high paying job where you can invest some of your earnings into scaling this business, it can be a great business model for you. But if you have no money or you're starting out on a shoestring budget, it's going to make more sense to start with arbitrage and then transition to wholesale as you scale the amount of capital that you have available. A second con, and this is a huge con. Again, I'm not going to shy away from some of the cons associated with this model. You can make some really costly mistakes. And I have shared a story before how I spent $75,000 on this Marine two-way radio that I had sold successfully for a long time. But one day, completely out of my control, the price on Amazon tanked It went from me making $22 in profit per unit to me losing $5 in profit per unit. I ended up losing about $10,000 on that $75,000 purchase. And guys, that is just one of countless times that I've lost money selling products. When you're operating at scale and you're buying a lot of products, the wins are bigger for sure. You make a lot more money, but the losses can be bigger too. So just know that you can make a lot of costly mistakes in wholesale if you don't do your research properly. And sometimes even if you do your research properly, there's factors outside of your control that can cause you to lose money. And we're going to go into those later in the video because guys, this is going to be a fully comprehensive guide. This is going to be very good. So we'll keep going on the wholesale business model. And now what makes it a good model? Well, first of all, it is extremely scalable. All right. Your ability to scale a wholesale business is only limited by the amount of capital that you have available. Because this is how I like to explain a wholesale business model. Every wholesale seller on Amazon is at any point in time, they're in one of two phases of their journey. They either have too much capital and not enough deals to buy, or they have too many deals to buy and not enough capital. And every single Amazon seller is going to start with the first scenario and they're going to end up on the second scenario, where you're only limited by the amount of capital that you have to spend. I could get a $1 million loan today for inventory and have it spent in the next 30 days on profitable inventory because I have access to that many good opportunities. So again, you're only limited by the amount of capital that you have, and this business can scale very quickly if you do proper research and you do it safely and you have enough capital reserves. Now, in my opinion, this is the biggest pro to the wholesale business model, is that it is purely relationship based. This is in no way, shape, or form a transactional business model. You are never, ever going to see me buy a deal from a brand or buy a deal from a distributor and then not follow up with them or not reach out to them in some way, right? Whereas arbitrage, if I'm buying my inventory from, let's say, Dick's Sporting Goods, nobody that works at Dick's Sporting Goods is ever going to know my name. They're not even going to know I exist. Whereas with wholesale, if I'm buying directly from the brand or if I'm buying from a big authorized distributor, I have a sales rep that I work with, that I talk to, that I build a relationship with, where I find out about their family. I find out about what they're interested in. I send them gifts at Christmas, right? This is a relationship business. And if you're not willing to create relationships, or you want to hide behind a keyboard or hide behind a screen and just crunch numbers, that's fine, but you're not going to be very successful with wholesale. The success in this business is determined by the strength of your relationships. All right, another reason that I love wholesale is it gets easier as you scale. All right, so like I said, I'm 6 years into my wholesale business specifically, and it is now easier than ever for me to buy products and me to keep building my relationships. Because the suppliers that I work with today, a lot of my best suppliers I've been working with for anywhere from 2 to 5 years. In fact, my best supplier I've worked with for almost 5 years. I'm to the point now where I can send them a text message and buy $50,000 worth of profitable inventory that's going to profit me about $15,000 literally with a single text message. And that is because I've spent 5 years cultivating the relationship with that supplier, which is one of the many reasons that this business gets easier as you scale. Now, the best way to actually increase the value of your wholesale business, and one of the reasons why I love this model so much, is you can get exclusive agreements with brands to be the only authorized seller of their product on Amazon, or to be one of a small number of authorized sellers on Amazon. And a great example of that is a brand that I work with. The name of the brand is Berkey Filters. All right, this is a probably $50 to $70 million per year brand, not just on Amazon, but in total. And I am one of, I think, 15 or 16 authorized sellers for Amazon. And that is a contract that I signed with them. It's a 1-year contract and it renews every year. So just by my business having that contract in place, my business is worth multiple 6 figures more just because we have that contract in place, because that contract and that brand makes me tens, if not hundreds of thousands of dollars per year in gross profit. So when you have a few exclusive deals like this in place, just like the one I have with Berkey, you can see how the value of your business can grow exponentially over time. And when you decide to sell your business, it's probably not going to be worth anything unless you have these exclusive deals in place. like I mentioned, and we're going to go in this video about how to land those deals. That's going to be part of this video as well. Now, two more reasons that I love wholesale. One is that it's the safest model. Aside from owning your own brand, which is private label, working directly with brands and reselling other brand name products when you're buying from the brand themselves is the safest way to sell on Amazon. There is no way for the brand to come after you because they know who you are. They know you're a seller. Why would they try to shut you down if they know who you are and you're doing good business with them? So it's a very safe way to operate a business on Amazon. And then lastly, just like with arbitrage, we are tapping into existing demand. We're not having to create demand from scratch. We're not having to launch a new business from the ground up. We are tapping into these products that are already selling well. We are just inserting ourselves into the middle of the transaction and arbitraging the price that we can buy the product for versus the price that we can sell the product for. All right, now let's jump into some new seller frequently asked questions. So these are some questions that I get all the time, either on Twitter, either on Instagram, either on email. These are the most common questions I get, mainly from new Amazon sellers. So most common question I get is, what is the best way to start? And the answer is, it really depends. All right, if you have no money and no experience, then start with arbitrage. If you want to build a brand, if you want to build an asset that you can then exit down the line, then start with private label, but just know that your chances of success are less than 10%. If you have a decent amount of capital, even if you don't have experience, but you have a desire to learn and you feel like you're a relationship focused person, then wholesale is going to be the best way for you to start by far. Now, what if you don't have any e-commerce experience? How should you start? Like I said, I would start with arbitrage and then I would transition to wholesale. Now, people that have no experience can still start with wholesale and be successful. It's typically the people who are both new to e-commerce and new to business as a whole that should start with arbitrage. I've met plenty of people who are, let's say, retired executives, or they own their own business in some other niche for 20 years and they want to start selling on Amazon. I tell those people to start with wholesale because they already have a business mind. They know how cash flow works. They know how to manage people. They know how to talk to people. It wouldn't make sense for them to start with arbitrage. It makes more sense for them to jump right into wholesale. Now, I probably should have put this question at the top because this is the most common question I get by far, aside from how much money do I need to start? And that is selling on Amazon oversaturated? And the answer is a big fat no. Think about it. That would be like asking somebody, well, is entrepreneurship oversaturated? Is real estate oversaturated? Is XYZ oversaturated? The answer is always going to be no, because even though 2,000 new Amazon seller accounts are created every day, and this is a legit stat. That's a legit stat, and what I'm about to say next is a legit stat. So 2,000 new Amazon seller accounts are created every day. 6 months later, only 10% of those accounts are still active. That means 90% of people quit within 6 months. So Amazon is in no way, shape, or form oversaturated. Also, don't quote me on this number, but it's something like 2 million different brands on Amazon, not products, but brands. 2 million different brands are represented on Amazon. If you can capture 0.00001% of the market, you're going to have a 7-figure business. All right. So no, the answer is no. Amazon is not oversaturated. It never has been. It never will be, because most people don't stick with it, and there's only going to be more opportunity over time. Now, another super common question. Where's my mouse? Here it is. What tools do I need to start? And I'm going to answer that shortly. I'm going to go through the main tools that you need to start with Amazon wholesale. And guys, it's not that many. So it's so easy to get bogged down with a huge software budget when you start this business. There's thousands, no exaggeration, thousands of different software tools that cater to Amazon sellers. But guys, there's only 3 or 4 that you need to start. 3 or 4 paid tools. There's a couple free tools that I recommend. But your software budget starting out is going to be less than $100 a month. So when you ask what tools do you need, we're going to jump into that here shortly. Next question people ask when it comes to wholesale, do I need an LLC? The answer is yes. Now, an LLC is going to be a good fit for probably 99% of people. That's the business structure that I use. But for you and your personal situation, I would talk to your CPA or talk to your accountant. I'm not qualified to give that advice, but for 99% of people, an LLC is going to be what you need to start a wholesale business on Amazon, because suppliers and brands only work with other businesses. They would never sell to you as an individual at wholesale prices. And in one of the upcoming sections, I'm going to show you, literally screen share, how to set up an LLC for your specific state. It's super easy and you don't have to pay anyone to do it. You can just go through your state. The last few questions here that we're going to touch on. Can I do this if I have no money? The answer is no, right? Specifically when it comes to wholesale, if you have no money, no, do not start wholesale. Start with arbitrage. But even to do arbitrage, I would recommend you have at least $500 in startup capital to start with. If you have less than $500, guys, go get a job, because there's no sense in starting a capital-intensive, inventory-based business if you don't have any money. Now, a lot of people ask, well, can I do this part-time or can I do this on the side? And the answer is yes. You can start and scale an Amazon wholesale business on the side. In fact, one of my mastermind members, his name's Dylan. He is, I believe it's like an engineer consultant by trade. That's his day job, but he's a 7-figure wholesale seller on the side. He works exclusively with, I think, 5 or 6 different brands. Those brands make him an extra 6 figures per year in profit from his Amazon business. But all day long, he's a consultant in like a very specialized niche, making a ton of money from his W-2. So the answer is yes, you can do this part-time, you can do this on the side, but it's harder because naturally you're not going to have as much time or resources to dedicate to the wholesale business. So if you do this on the side, just know, be more patient. It's going to take a little more time to scale. And then again, one of the more common questions I get, well, how much money can I make with the wholesale business on Amazon? And the answer, the true answer, is you can make really an unlimited amount of money, right? I personally know people, and one guy in particular I can think of, he made $1 million net profit on Amazon last year. Now, he had to do about $30 million in revenue to make $1 million in profit, but it is possible. And the largest Amazon sellers make millions or tens of millions per year in profit. The #1 seller on Amazon, not just the #1 wholesale seller, but the #1 seller period, is called Pattern. They're a multi-billion-dollar company. They make probably $100 million per year in profit, if I had to guess. Probably more, but they are a private company. So the answer is you can really make as much money as you want to, depending on how large you're willing to scale. All right, now we're going to jump into some key terms. What are some key terms that we need to know as Amazon sellers? So first and foremost, when I say brand, just know that I mean the manufacturer of a product. You'll hear me use the terms brand and manufacturer interchangeably. So just know that that's what I mean when I say brand. Next, we have distributor. A distributor is a company that sells a lot of different brands to retailers like you and me. All right. So as a wholesale seller, we are either buying directly from the brand or we are buying from a distributor. And a distributor might only sell 3 or 4 brands, or they might sell 1, 2, 300 brands. All right, some distributors are very large and they sell hundreds of brands. Some distributors are smaller and they only sell a few brands. When you hear me say retailer, when I say retailer, I mean a company like you and me. Even though this business model is called Amazon Wholesale, we are not wholesalers. We are retailers. We are buying our inventory from at wholesale, right? So every Amazon seller that's doing the wholesale business model is a retailer. So when I say retailer, think of me or you as the person who's starting this Amazon business. Now, dealer means the same thing as retailer. That is an industry term that literally means retailer. So when you're talking to a brand or you're talking to a distributor and you want to sound like you know what you're talking about, refer to yourself as a dealer. Never call yourself an Amazon seller. And you can call yourself a retailer, but if you call yourself a dealer, they're going to take you just that much more seriously. Next, a key term, Keepa. You're going to hear me refer to Keepa hundreds of times throughout the course of this course. It is the one tool that is 100% required. There is no replacement for it. It is an absolute must-have. I'm going to break down Keepa and I'm going to give a full Keepa tutorial later in this video, but just know that Keepa is the tool that we use to gauge the supply and demand of any given product on Amazon. It shows us the price history of the product. It shows us the demand history of the product. It shows us how long that product has been on Amazon. It shows us who has ever sold that product. Keepa gives us every single data point that we need to make a buying decision on Amazon. Next, MOQ stands for minimum order quantity. So when you talk to brands or you talk to distributors and they say, well, hey, we have a $2,000 MOQ, or we have a $500 MOQ. Or some brands or distributors might say we have no MOQ. Just know that that means, well, that is the amount that you have to order minimum in order to do business with that brand or that distributor. You're going to hear me talk about being gated in a product or brand or being ungated in a product or brand. And if you're gated in a product or brand, it means you are not allowed to sell it on Amazon. If you are ungated, it means you are allowed to sell the product on Amazon. Now, if you are gated in a product, meaning you're not allowed to sell it, some products and some brands, Amazon allows you to apply to get ungated, and some products and brands you can't apply. Amazon has fully restricted you, and you are not allowed to sell that product or brand on Amazon ever. All right. Now, what brands are gated, what brands are ungated, it really depends. It's constantly changing. But just know that as a new seller, a huge limiting belief that a lot of new Amazon sellers have is that, well, all the best brands are gated, or I can't find anything profitable because everything's gated. That is not true. That is a limiting belief. And you're going to see throughout the course of this course that finding brands and products that are ungated is actually very easy. And I'm even going to give you guys 5 sources that you can use. These are legit wholesale suppliers that I'm going to give you that you can go and you can use their invoices and use their paperwork to get ungated in specific brands and specific products. I'm going to make it super easy for you guys. All right, next we've got storefront stalking. All right, what is storefront stalking? Storefront stalking is the process of literally just like it sounds, stalking another seller's storefront on Amazon, and I use stealing in parentheses or in quotes, stealing their leads from other sellers. Now, we're not actually stealing. We're literally just looking to see, all right, what are other people selling successfully? We're going to make a note of those products, or we're going to make a note of those brands, and then we're going to go find those brands ourselves. All right. So storefront stalking is probably the most powerful way to find really good brands and really good products, because somebody else has already done the legwork. If they're selling that product or they're selling that brand, it means it's profitable. They're just getting it from somewhere. We just got to find where they're getting it. So it's a really good sourcing strategy. Next, FBA, it stands for Fulfillment by Amazon. This is just the fulfillment method that we use for selling on Amazon. So if we're selling a product FBA, it means that when I buy my product from the supplier, I then turn around and I ship it all to Amazon in bulk up front. And when Amazon receives it, that's when a customer can buy it from me on Amazon.com. And when a customer buys it from me, Amazon then ships each individual order to the customer 1 unit at a time. So I do all my shipping up front, all to Amazon at once, and then Amazon ships out each individual unit. And by participating in this Fulfillment by Amazon program, this is what allows my products to qualify for Prime shipping. Because if Amazon is the one responsible for shipping each individual unit to the customer, Amazon can guarantee that it can get there in 1 day or 2 days, therefore giving my products the Prime badge. Which is a little different from FBM, which stands for Fulfilled by Merchant, which when you think of Fulfilled by Merchant, it's kind of like selling on eBay. If I'm selling FBM, I am fulfilling each individual order to the customer myself. So if I'm the one responsible for shipping each individual order out to the customer, then I don't get the Prime badge, because how is Amazon supposed to guarantee my customer that I'm going to get it to them in 2 days, right? They can't, because I'm the one shipping the product, not Amazon. So that's the difference between FBA versus FBM. And then we have SPD, which stands for Small Parcel Delivery. This is just going to be one of the shipping methods that we use to ship our inventory to Amazon via the FBA model. So when we're sending our FBA shipments to Amazon utilizing SPD, Small Parcel Delivery, that just means that we're shipping individual boxes to Amazon. We're not shipping products on pallets. We're not shipping truckloads at a time. We're literally sending, a box, 2 boxes, 10 boxes, 20 boxes to Amazon via Small Parcel Delivery, which literally just means sending it with UPS shipping labels. It's just a typical shipping process. MAP, M-A-P, it stands for Minimum Advertised Price. This is a policy that a lot of brands are going to have when it comes to the pricing of their products. So you guys are going to see that as you start to contact brands and you start to get pricing from brands, a lot of them are going to say, well, hey, we have a MAP policy. And a lot of them are going to make you sign a MAP agreement. And what that MAP policy means is, say, for example, take this Carmex toothpaste, this Carmex, why am I blanking on it? Chapstick right here, right? If I call up Carmex, and I don't know if this is true, I'm just using this as an example, they might say, hey, Corey, you can sell this Carmex little tube of why am I blanking on it? You can sell this tube of chapstick, Jesus. You can sell this tube of chapstick, but you are not allowed to price below $9.99. $9.99 is our MAP price. Now, the reason that brands have a MAP pricing policy is because they don't want sellers undercutting each other by a penny and then dropping their prices, to where if a customer goes to buy this product on Amazon and they see that they can buy it on Amazon for $5, but they go in store and the stores are selling this for $10, then the stores go yell at Carmex because they're like, hey, you've got a bunch of people on Amazon undercutting us, so we're not going to order any more from you guys because people are just getting it cheaper on Amazon. So they end up cannibalizing their brick and mortar store business when a bunch of their Amazon sellers are undercutting the price. So that's why they make you adhere to a certain minimum price. You can price higher than that. You just can't price lower than MAP. Otherwise, it ends up pissing off all of their other brick and mortar retailers. PO simply means purchase order. So again, this is just another industry term that we use when we're talking to brands or we're talking to distributors. When we're buying from them, it's called placing a PO or cutting a PO, right? It just means purchase order, and a purchase order just details what exactly you're going to buy, the exact product you're going to buy, the number of units you're going to buy, and the price that you're going to pay, along with the total that you're going to pay. And guys, I've got a really solid, really simple purchase order template that I'm going to let you guys download. We're going to go through it in detail later in the course, but if you want to skip ahead, there's going to be a link in the description below where you can get my PO template completely free. It's the exact template that I use to place my purchase orders. It's just going to make you look more professional and make you look like you know what you're doing when you use a legit purchase order template. So I've got that as a free resource for you guys in the description below. Now, SKU, which a lot of times you'll hear people just pronounce as SKU, it stands for stock keeping unit. And this is basically just the unique identifier that you have within your Amazon inventory for a specific product. All right, so every product that I sell on Amazon has its own unique SKU. Amazon will not let you duplicate a SKU. And I'm going to show you guys an example later on in the video of what a good SKU looks like and how you can use your SKUs on Amazon to store critical information about a product to easily determine where you bought that product from, how much you paid for it, and how you can best replenish it. Now, next is OA/RA. That simply stands for online arbitrage or retail arbitrage. Like I mentioned to you guys earlier, that's just the one of the other business models for selling on Amazon. So when you hear people talk about OA, they're talking about online arbitrage, which is buying products from online websites like Target.com, Walmart.com, DickSportingGoods.com. And when you hear people say RA, they're talking about retail arbitrage, which is buying products from in-store at Target or in-store at Walmart or in-store at Dick's Sporting Goods, for example. ASIN, you're going to hear me say ASIN frequently throughout the course of this video. It stands for Amazon Standard Identification Number. It is basically the unique identifier for every listing on Amazon. So you guys will see every listing on Amazon has its own ASIN. There are no duplicate ASINs. It's basically the number that's, or the string of characters that's specific to that listing, and it's always going to start with a B. ASINs always start with a B. All right, next let's talk about how much capital is required to start wholesale. And the reason I made this its own section is because, oops, let me move myself up here. The reason I made this my own section is because this is the #1 question I get out of every FAQ that we went through earlier. This is the question that I get more than any other question when it comes to starting a wholesale business. How much capital is required? And the answer is 10K minimum. All right, I used to tell people, all right, if you're going to get into wholesale, you want at least 3 to 5K, up to 10K. But guys, nowadays, if you really want to give yourself a good foundation and you want to set yourself up for success long term, you're going to want at least $10,000 in capital for inventory. All right. Now, if you plan to buy a course or if you plan to join coaching or mentorship, anything like that, which you probably won't need to because this video that you're watching here should be more than you need to get started, then that's an addition, right? So if you're going to buy a course for $2,000, which would be insane with this video that you're watching here, it's going to be way more valuable than that. But then you would need $10,000 in cash for inventory and another $2,000 for that course. All right. So I always recommend minimum $10,000 for inventory. Now, one thing you don't want to do is if you have that 10K for inventory, please, 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 for the love of God, do not spend it all at once. All right. If you have 10K for inventory, I want to see you spread that out across multiple products and ideally multiple suppliers. So if you find a really good supplier, and maybe it's your first supplier that you found that's profitable, you have 10K to spend, and maybe you find 10K worth of products to buy, I still would not spend all 10K. I would spend 2K or 2,500 or 3K, test it out, make sure that supplier is good, make sure the products sell well, and then use the remaining 7,000 or 7,500 on some other products or some other brands or some other suppliers. 5 tips I would give myself 7 years ago when I started this business. Okay, so I guess technically I started almost 8 years ago. I started wholesale January 6th or January 9th of 2019. I started selling on Amazon May 22nd of 2017, which is 2 days after I graduated from college. So if I could rewind 7.5 years, almost 8 years now, and give my, I guess, 22-year-old self some advice, these are the 5 main tips I would give myself. And I'm going to go into each of these in a little detail because, guys, I promise you, the sections that we're going through here now, they might not be the most exciting, they might not be the sexiest, but bear with me because this is very important for setting a strong foundation for building a successful long-term business. This is stuff that 7.5 years ago, 8 years ago, I would have killed for. So bear with me. All right. The first tip, and this is the number one tip, this is the number one reason why people quit. This is really the only thing that matters at the end of the day, is that this business takes time. All right. It takes time to build this business. So please, when you see the Instagram ads or when you see the people talking about they just started selling and they're doing 100K in their 3rd month and all this, don't buy it. All right. Sure, that's possible. I know people that have scaled really quickly, even as new sellers, but guys, they are the exception. They're not the rule. In general, it takes 2 to 5 years to really build a strong, solid, sustainable business on Amazon. Now, that doesn't mean that it's going to take 2 years for you to make profit. No, you should be profitable from day one, but it's going to take you 2 to 5 years to really establish good relationships with your suppliers, to build your network of other Amazon sellers, to learn how to evaluate products profitably, and generally to figure out what it is that you don't know. Because you could watch this entire course 50 times through, and you're still not going to know everything that there is to know because you've got to get in the game. You've got to make the phone calls. You've got to buy the products. You've got to make mistakes. And that is what's going to allow you to learn and build this business over time. And guys, last point I'll make on this first tip is you really don't meet any Amazon sellers who have been consistently working the business for 2 years who are not successful and who are not making good money. So if anything, just commit for at least 2 years, and I promise you it'll be very worth it. The longer you give it, the more time you give it, the more worth it it's going to be. All right, next, being visible on social media makes your business and your life fun. I say 10 times easier. I would argue 100 times easier. All right, guys, for the first 5 years of my Amazon selling career, so from 2017 until about early 2022, I knew 2 other Amazon sellers. All right, one of them is named Philip. He's now, I think he's an 8-figure seller now. He's in my mastermind. He is crushing it. He was one of them, and the other one was named Jack, and I no longer keep up with Jack. But guys, I knew 2 Amazon sellers by name in the first 5 years of my business. All right. Now, fast forward 2.5 more years to where I am now. If I look at my phone contacts, I probably have 100 Amazon sellers in my phone. We have 160, 170 Amazon sellers inside of our wholesale network community, all people that I'm collaborating with and hanging out with on a daily basis. Guys, if you look at my business, first 5 years, it went kind of like that, but then years 6 and 7, it went like that, right? And it's simply because of the people that I was able to meet, the connections that I made, because of so many factors, I got tips from these guys. I learned best practices. We pool our money to do group buys together. They tell me, hey, don't talk to that supplier. They're going to screw you over, or they'll cut you in on a good deal, right? Like there's so many benefits you get from being on social media and therefore meeting other people who are doing this business. So I know it's not fun. I know that, you probably heard it a million times, but just get on social media and just talk about what you're doing. You don't need to be teaching people the business like I'm doing. If you're brand new, just document, right? Throw up a quick Instagram story of, hey, this is what I learned today. I called 3 brands and all 3 of them shut me down, but I'm better for tomorrow. I know what to say better tomorrow. Like that is the type of stuff that people want to see. And when you do that consistently, people take you more seriously, and you're going to be a magnet for people who resonate with what you're doing, and you're going to make some really cool friends in the process. All right, third tip I wish I knew back in the day is when you come across a really good brand or a really good product or a really good supplier, it's easy to get excited and it's easy to just drop a ton of money on that deal because you think it's a great deal, right? But again, if you're new, you might be missing a key point, or you might be missing that one piece of data that takes it from being a really good deal to down to being a so-so deal, or maybe even a not profitable deal. So when you find a deal that you get really excited about, or a supplier or a brand, please discipline yourself and place a test order. All right. Now, a test order, we're going to go deep into how to place test orders and what that looks like throughout this course. But that's usually anywhere from 2 to 4 weeks worth of inventory. And the point behind a test order is you're verifying a few things. One, you want to verify that supplier and how they operate. You want to make sure that they ship your products on time. You want to make sure that they communicate well. You want to make sure that what you're buying is actually what you thought you were buying, right? And if you do your due diligence in vetting your supplier, that's not a huge risk, but there are still times when they ship you the wrong thing, or that there's any number of problems that can happen. So place test orders, and if the test order goes well and the product sells well and you make good money, then you can go back and buy more inventory. All right. Now, fourth tip is please, please, please do not fall into the comparison trap. Now, this is advice I still have to give myself every day. I've been at this for almost 8 years, and I still find myself comparing myself to other people who are selling on Amazon, or other people on social media, or other people here on YouTube. Like, it's so easy to compare yourself to others who maybe they're newer at this than I am, but they're already ahead of me, right? It's so easy for me to compare myself to them and think, well, why am I not where they are, right? I'm more experienced, or I've been doing this longer. Or, you see these people posting their screenshots of their orange bars on Twitter or on Instagram, and you're like, well, he's only been selling for 2 months and he did 50K. I've been selling for 10 months and I'm only doing 10K. Like, what's up with that? Guys, block it out. It's complete useless nonsense. It is noise. And the best tip that I've gotten when it comes to this specific point is a lot of times we compare ourselves, like our story, to somebody else's story, but we don't realize that we're not even reading the same book, right? Like they could be doing something, or they could have a completely different goal, or their life circumstances could be completely different than ours. So why are we comparing our results or our efforts to their results and their efforts when we don't even know the full story? All right. So don't fall into the comparison trap. Again, it's easy to do, especially if you're a younger person like myself, or if you're in your early 20s and you see people on social media doing better than you. I promise you, it's not always as good as it seems. In fact, it's never as good as it seems. Just focus on you, focus on your journey, and focus on getting 1% better every day. All right, last tip is have fun. Guys, have fun with this business because it is a lot of fun. I don't know about you, but it's exhilarating when you find a good deal for, let's say, sticky notes, right? Like, oh, I found this really good deal on these sticky notes. I can buy 100 of them for $2, and I could sell them on Amazon for $10, and I can make $1.50 in profit per unit. Like, I don't know about you guys. That's exhilarating for me. It probably is for you too, which is why you're watching this video. So have fun with it, all right? Enjoy the business, enjoy the process, enjoy getting better every day, enjoy the people that you're gonna meet. It is a lot of fun. But the caveat here is that it is a business, all right? You can have all the fun in the world, but if you're not making money and you're not keeping track of your expenses and you're letting things slip through the cracks and you're not being professional and you're not replying to people and all these things, then what's the point, all right? So the key is to have fun with it, make connections, build your network, but treat it like a business, all right? And when I say treat it like a business, that means Get a bookkeeper, all right? Have professional bookkeeping. Reply to people on time. Answer your phone. Respond to emails in 24 hours or less. Text people back quickly. Do all the things that professional business people do, and you're going to have a professional business as a result. All right, in this next section, we're going to be going over how to set a proper foundation for a wholesale business on Amazon. So this is going to cover a few different topics. First and foremost, we're going to go through exactly how to set up a business entity. And guys, each one of these steps, I'm going to be showing you how to do it step by step. I'm not going to be telling you what to do. I'm going to be showing you how to do it. So we're going to set up a business entity. I'm going to show you guys how to get your EIN number, which is basically just the social security number for your business, which is required to set up a business bank account. We're going to show you how to get a professional email address, one tied to a domain name that you own. Then we're going to show you exactly which business banks to use, so how to set up a business bank account. Then we're going to go into the top 3 credit cards you should be using in your wholesale business, the ones that you can use to get the most points, and the ones that you can use to get the most amount of cash back. And then lastly, we're going to touch on how to get a resale certificate. So that way, when you buy inventory from these brands and from these distributors, you don't have to pay sales tax. You can be sales tax exempt. So first and foremost, we're going to go into how to set up a business entity. So if we jump into my screen here. Now, guys, keep in mind, this process is going to vary state by state. So I'm going to show you guys how I would set up a new business entity in my state of North Carolina. But just know that the steps are very similar for every state. It's always going to involve going to your Secretary of State's website and registering your business online. You can use a service like InkFile or like LegalZoom, but just know that those are going to cost you more money and take more time. You can just do it just as easily through your Secretary of State's website. So first, I'm going to go on Google. I'm going to type in North Carolina Secretary of State. I'm going to, here's the website right down here. I'm going to click on business registration. Okay, so on the North Carolina Secretary of State website, I'm going to come down here and register your new business. And it's going to ask me a few questions. So first and foremost, it's asking, has this entity been created in another state or country? The answer is no. Choose which type of entity you want to create or register to do business in North Carolina. All right, so again, the answer to this question is going to depend on your specific situation. So ask your accountant, ask your CPA. This is not advice from me on which entity to set up. This is just what works for my situation and for about 99% of people's situation. And that is going to be a limited liability company. So we're going to click that, and then we're going to begin creation filing. All right, so it's going to tell us this is the form that we use to register an LLC, which is what we use in this process. And there's a filing fee of $125. If you use a service like a LegalZoom or like an InkFile, etc., it's probably going to be $300 to $400 because they do it for you, but it's a convenience fee that you're paying. So you start filing. Next thing that we're going to do once this loads is start filing online. All right, if you've done it on paper, then you can upload a signed copy, but that doesn't make sense. So we start online filing. Enter the business entity name you would like to register. So for the sake of this example, we'll just say example LLC, save the name. Is the registered agent a North Carolina resident or an existing North Carolina business entity? In my case, I just make myself the registered agent. So I'd say the agent is a North Carolina resident. The name of the registered agent is my name. So I'm going to put Corey K. Ganem, save the agent name. Email address of the registered agent. So we'll just do example@gmail.com because I'm not actually going to file this. The street address and county of the registered office of the entity. So this is asking you, well, hey, if you have an office, what is the address and the county that that office is located in? So I'm going to say 123 Example Street, Charlotte, North Carolina, 28209, county, Mecklenburg County. That's the county that Charlotte is located in the United States. We're going to save that address. And next it's asking, is the registered agent mailing address the same as the street address? I usually click yes. Does the corporation have a principal office? No, because I operate out of my house. Attach any other provisions which the corporation elects to include. Since I'm the only member of my LLC, there's nothing really for me to include there, so I confirm. The name and address of each organizer is as follows. So here I would just put my information. The entity is an individual. First name Corey K. Ganem. Capacity, both member and organizer. Address 123 Example Street, Charlotte, North Carolina, 28209. Save. And next, we're going to save those organizers. The names, titles, and business addresses of the company officials, if any, of the organization are, and it says no entities listed. So again, this is where I add myself as a company official, an individual, Corey K. Ganem. And then for title, you can choose anything that you want here. I just do owner manager, 123 Example Street, Charlotte, North Carolina, 28209. Then save. Will the statement be effective upon filing? So you'd click yes. The only reason you'd click no is if you want to go ahead and file your LLC, but then make it effective at a future date, which doesn't make sense because people that are watching this are action takers. They want it to be effective right away. So we click yes. Enter the email address to send notifications to about this filing. So you can just do anything here. example@gmail.com. Save. If filing on behalf of a client, there's no client because we're filing this ourselves. So we'll click skip. Pick the name of the officer or company official. In this case, it's you. Signature, Corey Ganem, Corey Ganem. Basically, I certify that I'm authorized to sign. You check those boxes, and then you save the signature. And that's pretty much it for filing your LLC in the state of North Carolina. So super simple. We've been recording for less than 6 minutes. This process is incredibly easy. The next thing that we're going to do is we're going to set up, or we're going to get our EIN number. All right. So guys, services like a LegalZoom or like an ink file will charge you like $100 to get an EIN number for you, and it'll take them a week or two to get it. Guys, getting an EIN number is completely free and takes less than 2 minutes, and I'm going to show you how to do it. So we're going to Google Get EIN, and we're going to skip all the sponsored ads here, all right, because these are services that are going to make you pay to do what's completely free and is going to take you 2 minutes. So we're going to look for the URL that's actually the IRS website. So here it is, irs.gov, get an employer identification number. So we're going to click that. We're going to come down here and apply for an EIN. All right. It's basically saying this is a government system, blah, 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 begin application. Now you're going to want to make sure that you fill all of this out very accurately. All right. I'm going to zoom in because it's hard to see. So what type of legal structure is applying? In this case, we are applying as an LLC. We're going to continue. So this is basically saying, all right, this is what an LLC is. This is what an LLC is not. Again, we know that. So we're going to continue. Tell us more about the members. How many members are in the LLC? It's just me. So there's one. Where is the business physically located? So again, in my case, it's North Carolina. We're going to continue. Please confirm your selection. Yes, we're going to confirm that. Continue. Why is the LLC requesting an EIN? And in this case, we're requesting it because we're starting a new business. All right. We continue. Please tell us about the responsible party. So in this case, it's Corey K. Ganem. And this is where it's going to have you enter your social. So I'm going to say, obviously not enter my social here on camera. And you can just enter your social security number there. And then you're going to choose, I am one of the owners of the LLC. Continue. Oh, okay. So it's basic. So I'm going to pause and come back. It's going to make me enter my real social, and I'll be right back. All right. So you can't use just a fake EIN or a fake social security just to use this as an example. So I had to enter my real one. And then now it's saying, where is the LLC physically located? All right. So we'll do 123 Example Street. It might not let me do this either. I might have to enter my real address, in which case I will. So in this case, let's just put a random number here. Do you have a different address from the one above that you want mail to be sent? No. So we'll continue. Physical location not found. Please verify the physical location is correct. Okay. So obviously we're just doing this as an example. We're not actually going to submit it. So we're just going to accept as entered. And then it's saying, tell us about the LLC. All right. So this is important. This is where you want to make sure all this information is completely correct. So legal name of LLC must match your articles of organization. So again, the example that we used was example LLC. We don't have a DBA. We don't have a trade name. The county where it's located. So Mecklenburg County, which is where Charlotte is located. North Carolina. State that it's located, North Carolina. Start date, it's currently March 2025. And guys, all we do from here is hit continue, and then it's going to give us a confirmation. And if you entered all your information correctly, it is literally going to give you your EIN number on the final page. You can save that document as a PDF, save it on your computer, there you have your EIN number. Your company is set up. Your LLC is in process. You've got your EIN number, and now you can go and open a business bank account. But keep in mind, don't go through this EIN process. Don't go and set up an EIN until your LLC has been approved. So go back and follow step 1. Usually it takes 5 to 7 business days for your LLC to be finalized. You'll get an email once it's finalized. And once it's finalized, then you come in here and get your EIN number. So that is how we get an EIN number. Next, we're going to look at how do we set up a professional business email address under our own domain. Because what you don't want to do is contact suppliers with a Gmail address or a Yahoo address or a Hotmail address. That is the biggest red flag that screams, I'm unprofessional and I don't know what I'm doing to a supplier. You must have a professional business address for suppliers to take you seriously. You don't necessarily need a full website from the start. It would help, but having that professional email address is critical. So what we do is we come over here and we Google search Squarespace domains. I like to use Squarespace personally. You can use GoDaddy, you can use any other of the domain services out there, but I prefer Squarespace. So I like to search domains here. And let's say that I'm going to be focusing on a given niche, right? Now, one of the pieces of advice I give people is don't really pigeonhole yourself with your domain name. So if you think you're going to start in the tools category, that's great, but don't necessarily have a website that says, Corey'sTools.com, right? The website that I reach out to people from is PowerToolPlus.com, but it's because I'm experienced in that category and I know that I'm focused in that category, but I've been doing this for a long time. So if you're just starting out and you're just now setting up this business, I would choose a more broad domain name, something like, let's say XYZ Supply, right? Because if you just have, XYZ Supply, that can apply to anything. You could potentially do groceries, you could potentially do tools, you could potentially do outdoor products. It allows you to be broad from the start, and then down the road, if you decide to really niche down, you can just create another domain and go that route. So in this case, let's just choose, I'm totally just making this up off the top of my head, XYZ or ZYZsupply.com. All right, so it says it's an exact match, it's available. Typically, it doesn't really make a big difference, but I like to have a .com domain, not a .net, not a .org. All right, I prefer .com. So we're going to click this whatever.com. You can check out. You don't need to add on any of the other domains here. You just check out. It'll make you log in, or basically it'll make you create an account with Squarespace. You check out. It's like $14 a year is what the domain costs. All right, so that's how you buy the domain. Next, I'm going to show you how you set up an email address associated with that domain, specifically here in Squarespace. So I'm going to log into my Squarespace account and show you guys exactly how to do that. I'll be right back. Okay, so here I am logged into my personal Squarespace account. So I own, I think it's about 15 different domains, but I'm going to show you guys how you would set up an email address for the domain that you just purchased. So when you buy that domain, you come in here to your Squarespace account under the domains tab, and here that domain is going to be here. All right. So let's use the example of 5 pillars of AmazonWholesale.com. So let's say that I wanted to set up an email address that is Corey@5pillarsofAmazonWholesale.com. All right, that's the name of my book. So I bought that domain name. I don't currently have an email set up for it, but this is how I would go about doing it. So I click on the domain here. Here it's going to show me all the information about my domain here. We're going to come over here to the email tab on the left, and we're going to come down here and click Get Started with Google Workspace. All right. Because what it's saying is send emails from your domain, get access to productivity tools. Basically, you're going to be able to set up your email address within your domain within Google Workspace. You get started right here. It's going to take you through the setup process. Guys, it is so super easy. You get started with a Workspace plan. You choose your plan. All you need is a $7 per month one. You select that, pay monthly, confirm selection, and then it's going to have you enter your basically your billing information. And what's important here, guys, is the email address that you choose here. Okay, so I'm actually doing this under my Corey.show domain, not the 5 pillars of Amazon Wholesale, but really the only thing that's important here, you're going to put your information here, and it's your username that you're going to, that's going to be your email address. So if I want my email to be purchasing, let's say purchasing@mydomainname.com, that's what I'd make the username. If I want to make it my first name, That's what I can make my username, but the username is what is your actual email address. Then you save and continue, you pay, and then you'll be set up within Google Workspace. So you have basically a Gmail account that is tied to your domain, right? In this case, it would be Corey@Corey.show. Okay, so that's exactly how you set up your professional email address once you bought your domain. So now you can start contacting suppliers in a legit way and not have to reach out from a Gmail or a Yahoo address, for example. All right, the next section is going to be how to choose a bank to set up a business bank account with. Now, it really doesn't matter. This is not a big deal which bank you go with. The only thing that matters in this case is that you've got your LLC set up and you've got an EIN number. Because in order to set up a business bank account, they are going to need those two things. They're going to need your LLC and they're going to need an EIN number in order to set up that business bank account. So which bank you go with doesn't really matter. But guys, personally, I prefer to bank with a local or regional bank or credit union. Now, the reason for that is because of relationships, all right? I used to bank with Chase, I used to bank with Wells Fargo, I used to bank with Bank of America, and at the end of the day, those banks do not care about you. You are a number to them, and oftentimes it can be really difficult to do even the most basic things with those banks because they have so many regulations and so much red tape for you to jump through, all right? Now, me, I bank with a bank called North State Bank. All right, so I bank with North State Bank. They are regional here in North Carolina. They actually only operate in Eastern North Carolina because I used to live in Raleigh. Now, the reason I like a bank like North State Bank is because I'm on a first name basis with my banker. I can call them up. They know me, they know my business, they know my account. I have a line of credit with them. It's just much easier to get things done with them than it would be with, say, a Chase or a Bank of America. All right. So again, it doesn't really matter which bank you go with, but I would recommend a regional or a local bank. All right, next thing we're going to talk about are the 3 best credit cards to use in your wholesale business. All right, because guys, when it comes to credit cards, this is actually a really important thing to focus on because you're going to be spending a lot of money on inventory. This is a very capital intensive business. So you want to make sure you're spending all of your money on credit cards and you're not using a debit card or you're not paying cash, because when you spend this money on credit cards, when you buy inventory on credit cards, you can get a ton of points and a ton of cash back. And just to prove that point, in 2024 alone, I personally made $42,000 in cash back just from spending my inventory budget on credit cards. And I'm going to show you guys exactly which credit cards I use. So, well, first of all, before we get into that, guys, there are going to be links in the description below to sign up for the exact credit cards that I'm about to mention. Now, it's important that you use the links that I'm going to put in the description as opposed to just Googling these credit cards, because when you use my links, you get bonus points for signing up more so than you would if you just go through Google, and I get some bonus points as well. So if you want to support me and support this channel and support this video, then I ask you please use the links in the description and you'll get a nice bonus as well. So the first one that I'm going to show you guys is the Chase Inc. Business Premier. And I'm going to show you guys exactly what that does. We jump back into my screen here. So the Chase Inc. Business Premier is by far the best credit card you can use in your Amazon wholesale business for a couple of reasons. One, you get unlimited 2% cash back on every purchase. All right. So 2%, you basically are adding 2% margin to everything that you buy. All right. That is the first benefit. The second benefit, which is arguably the biggest benefit, is that you get 2.5% cash back on every purchase of $5,000 or more. So if you're starting out in this business, you're probably not going to be spending $5,000 at a time on inventory. But as you scale, you will be spending more than $5,000 on just about every purchase order. I don't think we placed a purchase order under $5,000 in a long time. And that extra 0.5% of cash back adds up significantly. All right. And to give you an example of that, last week, I cashed out, I think I had 1.6 million Chase points that I've accumulated over the last probably 8 or 9 months, which came out to be $16,000 in cash back that I was able to just direct deposit into my personal bank account. All right. I'm not claiming that on my taxes. I'm not running that through my business. That is just a personal bonus to me. And that cash back accumulated significantly quicker because of that extra 0.5%. Okay, so this is the first credit card that I recommend. By far the best. And you do need a pretty good personal credit score to get it. And again, be sure to apply for this card using the link in the description below so you can get a bigger bonus than you would if you just go through the link in Google here. The second one I recommend is Capital One Spark. All right, the Capital One Spark card is great. It's just slightly inferior to the Chase card only because, yes, you get 2%, unlimited 2% cash back on everything that you buy, but you don't get that 2.5% over 5K. So this is a great option. It's just a Spark 2% cash plus, which gives you, like I said, unlimited 2% cash back on everything you buy, but it doesn't have the bonus that the Chase card offers of that extra 0.5% of any transactions over 5K. This is the card that I personally spent the most on in my career. I believe my limit on this card is about 250K per month, and we built that over time. So we started off with a 50K limit, then they raised us to 100, then they raised us to 200, and now we're at 250. And the cash back on this credit card, again, adds up significantly and can be a significant extra bonus cash in your pocket every single month. Now, the last card I recommend is the Amex Gold card. All right, so the Amex Gold card is a good card. It's a good backup option. And this is really a better option if you're spending money on things aside from inventory. So if you're running Amazon ads, which is a more advanced strategy that we'll get into later in this video, it's not a big pillar of what we do as wholesale sellers because we're not having to launch our own brand from scratch and run a ton of ads. But when you start working directly with brands, running ads for them is a huge value add that you can offer. And when I run ads for the brands that I work with, I put all my ad spend on an Amex Gold card because you get 4 times the points on advertising spend using the Amex Gold card. So we've racked up a few 100,000 Amex points in the last year alone just from spending 2 to 5K per month on ads. All right, it can really add up significantly over time. And this is a good option to put your operating expenses on or your advertising spend on once you get to that level. All right, now the final piece of setting your business foundation is going to be getting your resale certificate. This is what allows you to purchase inventory without having to pay sales tax to your supplier. So in order to do this, again, this process is going to differ state by state, but the principle is the same. What you're going to do pretty much in every state is you're going to apply for something called a sales and use tax certificate or a sales and use tax license through your state's Department of Revenue. All right. So again, I'm going to show you guys an example using my state, which is North Carolina. And I'm simply going to search, I'm going to Google search North Carolina sales and use tax. All right. So I'm going to click the first link here because this is the North Carolina Department of Revenue website. I'm going to click that, come down here to registration. I'm going to come down here to register online and register your business electronically. All right, so this is basically saying, all right, the following taxes are not supported. None of these apply to us. So we're going to click next. Now, guys, I can't go through this entire process because I'm already registered and it won't let me move forward unless I enter a legit EIN number. So just know that it's a very simple, straightforward process. You choose your entity type, which again, in most people's cases is going to be an LLC. You enter your EIN number, you enter the state of incorporation, you hit next. You go through the setup wizard. It's very simple. It's just going to ask what you do and the types of products you sell. We are simply just buying products for resale in a retail business. All right. That's all this form is going to ask you to do. You're going to submit. It's going to take probably 5 to 7 business days to process. And then you are going to get in the mail a certificate that is your sales and use tax certificate. All right. That certificate is going to contain a number called your sales and use tax number. And just know it's going to vary state by state. It's going to vary company by company. But the one thing that you are going to be required to do to make sure you're compliant with your state is to submit your sales and use tax return on the frequency that they tell you. So some businesses have to submit this sales tax return monthly. Some businesses have to submit it quarterly. Some businesses have to submit it annually. That is outside the scope of this video, but just know, guys, it's a very simple process. And if you need help with that, I would ask your CPA or an attorney in your state to make sure that you're compliant and make sure you're submitting these returns on time. All right, now we're going to touch on how exactly you set up your Amazon seller account. And there's two options for the types of Amazon seller account that you can use. We'll jump into my screen and I'm going to break each of those down. It's pretty simple at the end of the day. So when you decide you're going to set up an Amazon.com seller account, you have two options. Option A is you can set up an individual seller account. Option B, you can set up a professional seller account. Now, there are key differences between the two, and there's only one option you should choose, and that is professional seller. But first, I'm going to explain why it is we don't choose an individual seller account ever, even though it's slightly cheaper in the beginning. So an individual seller account, there's no monthly fee that you pay to be an individual seller, because instead of a monthly fee, you're going to pay a per item fee of 99 cents per item sold. Now, this might sound better for new sellers who are just starting out. They might be thinking, well, hey, I don't want to commit to $40 a month if I don't know if I'm going to take this business seriously. I'd rather just pay per item I sell. But the reason this is crazy is because, guys, it doesn't take very much effort to sell 40 units in a month. So as soon as you sell 40 units in a month, you're better off being a professional seller because you're not going to pay a per unit fee as a professional seller, which is going to cancel out that $39.99 per month that you're paying. The other, really the main number one reason that having a professional seller account is a 100% must, no exceptions, is you get access to the buy box, right? So as an individual seller, you get no buy box eligibility. As a professional seller, you do get to get inside the buy box. Now, what is the buy box? The buy box, and I'm going to show you an example. So on this Amazon listing here, this right here is the buy box. This is where you can choose add to cart. You can choose buy now. This is what's called the buy box. And as you can see, this seller right here, Abe's Electronics Center, is currently in the buy box. Now, the reason that having the buy box is so critical is 98% of sales on Amazon happen inside the buy box. Never in a million years is a seller going to come onto this listing and say, hey, I want to buy this DeWalt product, but I want to see everybody that's selling it, right? Never is a buyer going to come in here and click on this other sellers on Amazon, open this side panel here, scroll through all the different sellers, see the different prices, and click add to cart on the seller they like. No, that's not how buyers work on Amazon. They're going to come up here, they're going to see who is in the buy box, they're going to see the price, and they're either going to add to cart or they're going to buy now. So if you are an individual seller, you do not get buy box eligibility, which is a deal killer. You might as well not sell on Amazon if you're going to be an individual seller. What you want to do is choose a professional seller account. Again, it is a $39.99 per month fee, but you don't pay that per item fee. So as soon as you sell 40 units per month, which everybody should be doing even in their first month, it cancels out that fee because there's no per unit fee and you get access to all of Amazon's selling features and programs, and you get that buy box eligibility that is critical. All right, next we're going to look at how to get ungated, everything that you need to know about getting ungated on Amazon. Now, for those of you that have no idea what it means to be gated or ungated, this is literally what it means. If you're gated in a product or a brand, it simply means that you are unable to sell it. Amazon will not let you sell it. If you're ungated, it means you are eligible to sell a product or a brand. Now, the question I get often is, well, why does Amazon choose to gate people versus to ungate other people? And the reason is very simple. It's because Amazon doesn't want new sellers or potentially unscrupulous sellers to be able just to sell anything and everything on the platform. Certain brands and certain products, Amazon only lets experienced sellers sell, or sellers that can prove they got those products from a legitimate source. Now, in order to get ungated, you've got to prove to Amazon that you got those products from a legitimate source. And we're going to talk about that in a second. But before we talk about the best ways to get ungated, I want to quickly explain the different levels of gating. So you can be gated at the category level. For example, you might be gated in the grocery category as a whole, meaning you can't sell any products in the grocery category. You can be gated at the brand level, which means, for example, you might be gated for General Mills products. That means you might be ungated for grocery at the category level, but you can't sell any General Mills branded products. That means you're gated in the General Mills brand. And you could also be gated at the ASIN level. So you might be ungated in the grocery category, you might be ungated in the General Mills brand, but there might be certain General Mills ASINs, which means individual products, that you can't sell, that you're still gated in. So there's different levels to gating, and the ideal is to be ungated in as many brands, as many products, as many categories as possible. Which begs the question, well, okay, what is the best way to get ungated in either a category or a brand or an ASIN? And really, at the end of the day, the best way to get ungated, the easiest way, the simplest way, is to apply for ungating, which I'm going to show you what that process looks like in a second, using a either retail order confirmation or invoice from a trusted retailer like Target, like Dick's Sporting Goods, like Acme Tools, and other large trusted retailers. Now, in a second, I'm going to give you 5 wholesale suppliers that you can use to get ungated, which should work even better than potentially some of these retailers that I just mentioned. But first and foremost, I'm going to show you what it looks like to apply for ungating. All right. So here, if we look at this screen here, this is a selling application for the brand DeWalt. And yes, my storefront's up here. I don't care. Everybody knows it. I have nothing to hide. A lot of people are secretive about their storefront, and I just don't care. So here we're applying to ungate a brand DeWalt. All right. DeWalt is a big brand. A lot of people sell DeWalt products. It's a really profitable and popular brand to sell on Amazon, but I'm gated in it. I can't sell DeWalt. So if I want to get ungated for DeWalt as a brand, this is everything Amazon is telling me I need to submit here in this application in order to get ungated. So first and foremost, I've got to submit at least one purchase order invoice, either from a manufacturer or from a distributor, or like I said, from a retailer like an Acme Tools, for example, to get ungated. Now, Amazon is saying that this invoice must be dated on or after October 6, 2024. So it's got to be within the last 180 days. It's got to include my name, my address, and it's got to match the information in my selling account. So the invoice cannot be made out to me, Corey Ganem. The invoice must be made out to my company name that I have registered with Amazon. And it has to match down to the letter, down to the number, including your address, in order for Amazon to accept it. Third, it's got to include the name and address of the either manufacturer, distributor, or retailer that issued you the invoice so that Amazon can verify that supplier is legitimate. And it's got to show a purchase of at least 10 units from that brand. All right, you can omit any pricing information if you want. So sometimes sellers will open that invoice in Photoshop and they will black out the actual pricing that they paid for the product. I never really do this. If Amazon wants to source that product, they're gonna source it and they're gonna get a better price from me, better price than me anyways. So I don't really take the time to black out my pricing. And Amazon is here saying that, well, please note, we're gonna verify your documentation. We're gonna contact your vendor and verify your identity. Amazon will literally call your vendor and say, hey, we have an invoice here for 10 units of XYZ product from Corey Ganem LLC. Is he one of your customers? Is this a legitimate invoice number? Is this a legitimate invoice? Amazon will check on that, right? Not every time, but they will many times. So make sure you're not forging this information. Make sure you're not photoshopping this information, because if you are, Amazon will catch you and they will suspend your account for doing that. Now, this is a key point here at the bottom. So Amazon, I'm going to zoom in. You guys probably can't even see this. Hold on. All right. So Amazon is saying, please, or if you're applying for ungating with an Amazon invoice or an Amazon order confirmation, meaning you bought your inventory from Amazon.com as an Amazon business account, then they want to see a combined purchase of at least 50 units. All right. So if we're applying for ungating from a retailer or from a distributor, we only need to buy 10 units. But if we're applying for ungating and we're going to use an Amazon invoice to get ungated, Amazon wants to see at least 50 units. All right. And then you just drag and drop the invoice here. You include your email address that Amazon can contact you, a phone number as well, and then you agree and submit here at the bottom. All right. Now, the key to ungating is that rarely, if ever, will Amazon accept your invoice on the first attempt. That is just how this business works. So if you apply for ungating and Amazon denies you, please do not come and comment on this video or DM me on Instagram saying, hey, Amazon denied my application. It was legitimate. All the information was there. How do I get ungated? The answer is you keep resubmitting the same information over and over again. Does it sound crazy? Yes, it's absolutely insane, but that is how it works. That's how Amazon works. You've just got to keep resubmitting as long as your information is correct and legitimate. The next question is, okay, what suppliers can I use to get ungated? All right. And there are a couple of suppliers that I've used. These are legit wholesale suppliers that you can source inventory from. So you can literally reach out to these 5 suppliers right here and buy wholesale inventory from them. Or you can simply use their invoicing and their paperwork to get ungated in a given brand. Now, I have a video on my channel. It's one of my more popular videos called the top 5 suppliers to get ungated on Amazon. And it goes into each of these suppliers in a little more detail. So we'll link that video in the description or in a card on this video right here. But just know that I'm going to run through these quickly for you here as well. So the first one is Frontier Co-op. So if we open them up, Frontier Co-op, this is them. They are a wholesale supplier of grocery products, health and household products, beauty products, a lot of different products, a lot of different categories. And you can use their invoices to get ungated in those brands and in those categories. Next is Alliance Entertainment. They will ungate you in electronics, DVDs, video games. So if we search Alliance Entertainment, here they are. They're a publicly traded company, right? Huge, legitimate, established distributor and wholesaler. They sell to online retailers. You know, they sell to 72 different companies. Movies, gaming, Funko products, music, lots of different products, lots of different ways to get ungated using their invoices. Third, Acme Tools. So this is one that actually one of our wholesale network community members turned me on to recently, that Acme Tools is actually who a lot of people inside the wholesale network have been using to get ungated in brands like DeWalt and brands like Milwaukee, because Acme Tools will issue you a very legitimate, very professional invoice that you can then use to get ungated. Brands like Makita. All right, so Acme Tools is probably the best site that I know of to get ungated in big tool and automotive brands. Fourth would be Everest Distribution. So Everest Distribution is a large wholesaler and distributor of toys and games and gifts. Oh, this isn't them. This is them right here. So here you see we've got different Transformers products. We've got board games. We've got stuffed animals, toys, lots of stuff that you can buy from Everest Distribution, and you can use their invoices to get easily ungated. And then the fifth is puzzlewarehouse.com. So if you go to puzzlewarehouse.com, they will also help you get ungated in a lot of toy and puzzle brands, which is a huge niche that a lot of people make a ton of money on, especially during Q4 on Amazon. So those are the 5 suppliers I would recommend you go to get ungated that are legit wholesale suppliers. Or like I said, you could use a simple retail order confirmation or invoice from a site like a Target, Dick's Sporting Goods, Acme Tools, etc. So there's no excuse for not being able to get ungated in a brand or a product in 2025 using this method. All right, next we're going to look at the 3 key software tools that we're going to need inside a wholesale business. Now, it would be so easy to overload you guys and saddle you up with hundreds of dollars per month in software subscriptions because there's a lot of different tools that you need as an Amazon seller. But starting out, really the only 3 basic tools you need are these 3 right here. And the total cost for these 3 tools is less than $80 per month total for these 3 as a new seller. So this will get you started on the right foot. And these are all critical. I highly recommend all of these. And here I have in green, use discount codes. Guys, do not pay full retail price for these tools. It would be crazy. We have in the description of this video, discount codes for all 3 of these tools. All right. Obviously, I get a little bit of a kickback when you use my code, but it's the least you can do if you're going to use these tools. Help support me for making this really long, really good free video for you guys. All right. First tool that we're going to look at is called Seller Amp. All right, what is Seller Amp? Seller Amp tells you 3 critical things that you need to know about every product before you buy it to sell it on Amazon. First and foremost, it is going to tell you, well, how much is a product going to make me in profit? Second things it tells you is how many of these products can I sell per month? And the third thing it's going to tell you is, can I sell it? All right. These are the 3 key questions that Seller Amp answers. And I'm going to jump into an Amazon listing and show you what Seller Amp looks like. And I'm going to run through exactly how to set up the settings for the back end of Seller Amp to make sure that you're using it in the most efficient way possible. So if we jump into an Amazon listing here, this is one we were looking at earlier for a DeWalt product. All right. Now, again, the three key questions that Seller Amp helps us answer. First and foremost, how much is this product going to make me in profit? So if we come over here and we're looking at our Seller Amp Chrome extension, all right? Now, it's a Chrome extension that comes with your subscription here, and it's going to show you some key information. So it might look like a lot is going on here, and I'm even going to move myself over to the left so that you can see the full tool. But you see right here, this is the profit that a product is going to make you based on the buy cost that you enter into Seller Amp, all right? So obviously our cost here isn't zero. This product isn't free. So let's just assume that our cost on this product is $20 per unit, all right? So if we're paying $20 per unit for this DeWalt product right here, Seller Amp is telling us that we're gonna make $5.91 in profit every time we sell one of these products. All right, it's also gonna give us our net profit margin, which in this case is 15.6%, and it's gonna give us our ROI. So if our cost here is $20 per unit, our ROI is gonna be just about 30%. Now, the next thing Seller Amp tells us is how many can we sell? How many units are we expecting to sell per month? So you see here, Seller Amp gives us an estimated monthly sales number of over 3,000 units per month. Okay, so does that mean that we are going to sell 3,000 units per month? No, because we've got to factor in the other sellers on the listing, the other sellers that we're competing with. Okay, so if we come down here and we look at all the other sellers on this listing, now I'm not going to go through this exercise right now because we're just going to be looking at Seller Amp as a tool. But really what you would do is you would look at all of the sellers that are priced within 2% of the buy box. All right, if they're priced within 2% of the buy box and they're an FBA seller, that considers them a competitive seller. All right, so we take that estimated monthly sales and we divide it by the number of competitive sellers on the listing plus one, which would be us, to get the number of units that we can personally expect to sell per month. All right, so to use a simple example, if this listing sells, let's say 3,000 units per month, and there's 9 competitive sellers on the listing, plus us, that would be 10 total sellers splitting those 3,000 sales per month. That means we could expect to sell roughly 300 units per month, right? Because 3,000 divided by 10 equals 300. So that is how Seller Amp tells us exactly how many units we can expect to sell per month. And then lastly, Seller Amp tells us, can we sell it? Are we ungated in this product and in this brand? And right here under the eligible box, Seller Amp is telling me, no, I am not eligible to sell this product. I've got to get ungated in either this product or this brand in order to be able to sell it. All right. So that is exactly how we use Seller Amp to determine those 3 key data points that really tell us everything we need to know about whether or not we are going to buy this product. Now, before we move on from Seller Amp, we're going to go through these Seller Amp settings and set up Seller Amp so that way it is optimized and it's calculating all of our data accurately and giving us accurate information when we go to make our buying decisions. So what we do is we come down here to this little cog in the bottom right and we click that. That's our settings. Now, there's a couple of key settings that we're going to change. So you'll see there's a lot of different settings for Seller Amp. The only ones we're going to look at are here, inbound FBA shipping. I estimate my shipping cost at 80 cents per pound. All right. So if you're watching this video when it comes out sometime in 2025, that is about how much it's going to cost you to ship products to Amazon FBA, roughly 80 cents per pound. And the good part about having this setting entered is that when you go to calculate your profit, like I just showed you, it's going to account for that 80 cents per pound automatically based on the weight of the product according to Amazon. So once you set this up on the back end, like we're doing right now, it is always going to account for that automatically, and you never have to worry about whether your shipping cost is being included or not. The next setting that we're going to look at here is, you can set a buying criteria to say, well, hey, I want a minimum profit of $3 per unit, or I want a minimum ROI of 25%. These are just default. I don't really pay too much attention to these. You can set these if you want, but the main other setting to set is the prep fee, right? The additional cost. Now, the way that I teach people to sell on Amazon is to utilize prep centers. Prep centers prep your products for you. They ship them to Amazon for you, but obviously that service comes at a cost. And on average, you're going to be paying about $1 per unit to a prep center to prep your products for you and send them to Amazon for you. So here in the additional cost column, that is where I enter $1 as my default prep fee. So every time I'm crunching my numbers in SellerAmp, it is going to automatically apply that $1 per unit fee so that I'm factoring in my prep cost automatically. All right, now that's really the only other feature that the only other setting that we want to make sure we have in SellerAmp. Once you have that inbound FBA shipping and that prep fee accounted for, then your calculations are going to be incredibly accurate. All right, so the next tool that we're going to look at is called SmartScout. Now, guys, SmartScout is the most powerful of all of the Amazon seller tools that you could possibly imagine, because SmartScout is not an old tool, right? It's only been around for probably 4 or 5 years, and I've been selling on Amazon for close to 8 years. All right, so when I started off selling on Amazon and doing wholesale, everything that I'm going to show you that SmartScout can do, I was doing manually by hand, and it was taking me hours and hours and hours of time to do what SmartScout can do for us in literally seconds. So I'm going to show you a brief overview of exactly what we use SmartScout for. And later in this free course, I'm going to be going into extreme detail on every one of these features, plus a few more features, and showing you exactly how we use, for example, the brands tool, the subcategories tool, the sellers tool, the brand reports tool, and the seller map tool to quickly and easily find so many leads we don't even know what to do with them. All right. So if we jump into SmartScout, the first tool we're going to look at is the brands tool. We're going to click that. We're going to open that tool. And that is going to show us every single brand available on Amazon. So guys, if I move my camera over here again, here at the bottom, you can see there are 385,099 different brands that SmartScout is currently tracking. Okay. What we usually do is we come over here to filters. We can choose a category, for example, automotive, apply that. And now we're only looking at brands in the automotive category. So we can filter by so many different filters. We can look at different categories. We can look at brands with a certain number of sellers. We can look at brands that do a certain amount of revenue. There are an unlimited amount of combinations and ways to use just this brands tool to find unlimited leads. All right, that is how powerful this tool is. And again, guys, we have a discount code in the description below, or a link that you can use to try SmartScout, which again is my favorite tool, by far the best way to find tons of qualified brands quickly. Next, we've got the subcategories tool. Now, I've got additional videos, additional trainings that I'm going to be launching on the subcategories tool specifically. But what I love about the subcategories tool is that it will give you so many unidentified and unexplored niches that you can drill into that a lot of people completely skip over. So for example, looking at the patio, lawn, and garden main category, there are 740 subcategories within this main category. All right, that's what SmartScout is telling us. So if we drill into that further, we can drill into, let's just say, for example, gardening and lawn care. We can drill in a little further into outdoor carts. And here we have garden carts. All right. Now, not many people wake up one day and say, hey, I want to sell garden carts on Amazon. But if we look at the data, garden carts as a subcategory sells $16,437,000 per month on Amazon. All right. And 77% of that revenue is being captured by third-party sellers, which is what SmartScout is telling us right here. Only 23% of that revenue is being captured by Amazon themselves. So this is just one of many ways to find a ton of underutilized, untapped niches that you can drill into and become a master of and make a ton of money selling products that most people have never even heard of. All right. The next tool that SmartScout has, the sellers tool. Guys, this might be the most powerful tool that SmartScout has to offer. I have not used any other method than the sellers tool to find more leads in a shorter amount of time. All right. So for example, we can look at every single seller account on Amazon. So 2,049,459 different sellers that SmartScout is tracking. And I can drill into their storefront and I can look at literally every single product and every single brand that they carry. And I can even sort by how much of that brand they're carrying. So this is one of the biggest sellers on Amazon, e-supplements. They've got 1,062 different ASINs that they're carrying. And I can see how much revenue they're making from each individual product. There are so many ways to apply this data. And guys, from one seller storefront alone, I have found 40 to 50 or more leads from one seller. And remember, SmartScout tracks over 2 million different sellers. So as you can probably imagine, this strategy will yield unlimited amounts of leads if you just know how to look for them. And like I said, later on in this free course, we're going to drill into exactly how to use this sellers tool specifically to find so many leads you are not going to know what to do with them. Next, we've got the brand reports tool. Now, this is a premium tool, a premium feature of SmartScout. So if you guys sign up for the basic tier of SmartScout, you are not going to have access to the brand reports tool, but I highly recommend you subscribe to the higher tier of SmartScout. I personally am on the enterprise tier, and the enterprise tier allows you to generate brand reports. So I'm not going to do it right this second because it takes some time to generate the report, but I'll show you guys later on in the free course. What it will do is you enter a brand name and it spits out a report showing you every detail about that brand on Amazon, how much they're selling, who their biggest competitors are, is the brand trending upwards or downwards, are they running advertising, are their sellers running advertising, are their competitors running better advertising than they are. All of those data points I mentioned, along with probably 20 additional data points. And I have had so much success literally exporting that report as a PDF, setting up a call with the brand, showing the brand that report, and literally showing them every way they're screwing up on Amazon and how I can help them fix it. And it is so much more convincing when you can approach a brand with data like this to land that account and potentially even land an exclusive deal. So this brand reports tool is critical and it's so powerful for landing brands. Lastly is the seller map tool. And guys, keep in mind, this is just 5 tools of the 15 or 20 tools in the suite. These are just the main 5 that I use. So what I like about the seller map tool is I can drill into my local area, right? I live in Charlotte, North Carolina. So I can drill into Charlotte and I can see all of the other Amazon sellers near me in Charlotte. And better yet, I can see which of those sellers are wholesale sellers, right? Here in the bottom left, SmartScout's telling me, all right, resellers are indicated in purple and private label sellers are indicated in yellow. I don't care about private label sellers. I want to see resellers. And here, if I drill into Charlotte, this is very close to me. This guy right here, MISAF, he is a reseller doing $887,000. I believe that's per month. Yeah. So he's doing, actually, it's over $1 million per month in revenue. And I can drill into his storefront. And the logic is, well, he lives near me locally. So if I drill into his storefront and I find a good brand or a good product, I can probably easily find his supplier because he's probably sourcing that locally. All right. So there's going to be a whole training later in this course where I drill into the seller map feature and use it to find local sellers and then reverse engineer where they're sourcing their products and easily find distributor and brand leads using this seller map feature here. All right. So as you guys can tell, SmartScout is an incredibly powerful tool. It's not a 100% must-have. You can do all of this research by yourself manually, but think about it, right? If I say, well, hey, you can pay $30 a month for the roadmap, or you can spend 10 to 20 to 30 hours per week doing the work manually, obviously it makes sense to pay for the roadmap, right? Which is what SmartScout is in this case. And then lastly, we're going to look at Keepa. Now, Keepa is the only tool that is a 100% must-have. It is non-negotiable. You have to have Keepa to be a wholesale seller on Amazon. And the reason for that is it is the only tool that gives us the data that we need to make credible buying decisions in cooperation with Seller Amp. All right. So when I show you guys what Keepa looks like, there's a lot of data. There's a lot going on the Keepa graph, but there's only 3 components that matter. And that is the new offer count, the buy box price, and the buy box rotation. So if we look at each of those 3 in detail, here on the Amazon listing, if we scroll down and we have the Keepa Chrome extension installed, the Keepa graph is going to appear here on our page. All right. So again, there's a lot going on, but we only need to pay attention to the 3 data points that I just mentioned. And the first of those is the new offer count. The new offer count appears here in this bottom graph, and it is this blue chart that's constantly going up, down, up, down, up, down. All right. So that is the new offer count. And we're going to look at some example listings later so that I can explain to you, well, what do we look for in the new offer count? All right. I'm just pointing out the things that we pay attention to. And later I'm going to show you exactly what we look for in terms of these 3 key features. So the first most important data point is the new offer count, this blue line here. The second is going to be the buy box price, which is indicated in purple right here. So this little purple line going across the screen, that is the buy box price. And then lastly is the buy box rotation. All right. So how do we know that we're going to be able to get sales on this listing? Well, the buy box has to be rotating among all the sellers on the listing. How do we determine that? There's a couple of ways to do so. One, we can just hover our mouse over this buy box line, and you see here, it says buy box 3539 FBA Abe's Electronics Center. All right. That simply means that at that point in time, the buy box price was $35.39, and the seller in the buy box is Abe's Electronics Center. So if we want to determine, hey, is the buy box rotating? We simply move our mouse along the buy box line and it will show us if there are other sellers rotating in and out of the buy box. So right now it's a seller called Tech and Beyond. Then it moves to Abe's Electronics Center, back to Tech and Beyond, back to Abe's Electronics Center, Tech and Beyond. And then there's this seller Cruise Line who's getting rotated in. You keep moving it, it's clear that there are multiple sellers rotating in and out of this buy box. The name in the buy box is constantly changing. All right. So another easy way to determine if the buy box is rotating, you come in here and you can click on this data tab and then click on buy box statistics. All right. So this will actually show you the percentage of time that people are in and out of the buy box. So in the last 30 days, the buy box has clearly been rotating, right? The person who's had the buy box the majority of the time only had it for 30% of the time. This guy had it for 21% of the time. This guy had it for 19%. This guy 15%. All right. So clearly multiple people are rotating in and out of the buy box. If we look on a 365-day time scale, right? If we look over the last year, well, there's a ton of different people who have been in and out of the buy box, right? Some of them for less than 1% of the time. But this is a lot of people who have been in and out of the buy box. Okay. So that is the key. Those are the 3 key points that we look at when we look at Keepa. And these are the 3 tools that you must have when you start a wholesale business, right? And if you want to use them, like I said, use the discount codes and links that we have for you guys in the description below. All right, the next thing we're going to take a look at is our brand criteria. So this PDF that I'm about to show you guys is available to you 100% free of charge. There's going to be a link in the description below where you can get a copy of this checklist, and I highly recommend you do so because this is the exact criteria that I use to judge whether a product and therefore whether a brand is worth going after and worth pursuing. So I'm going to share my screen and show you guys this document here. This is called our brand criteria. All right, so we're going to go through each criteria one by one, and then we're going to look at one really good example. So the first criteria that I look for to make sure a brand is qualified is I want them to have at least 2 or more FBA sellers on average across most of their listings. All right, and you'll see here I've got an explanation of each of these criteria that's going to show you guys why we chose that criteria. So criteria 1, like we said, we want them to have at least 2 or more FBA sellers on average across most of their listings. And the explanation for that, the reason for that, is because brands that have existing FBA sellers are more likely to be reseller friendly, right? They're more likely to want to work with somebody like me and you. The thought process is if other FBA sellers are sourcing this product profitably from somewhere, that means I probably can too. All right, so that is the first criteria. If a listing or a brand meets this criteria, we move on to the next. The second criteria is we want to make sure their main listing is not dominated by Amazon more than 50% of the last year. Now, when we say dominated by Amazon, we mean that we don't want to see Amazon hogging the buy box more than 50% of the time. All right, because there's plenty of listings and plenty of brands out there that we can compete on that Amazon is not selling on, right? We don't want to compete where Amazon is hogging most of the sales. And then lastly, we want to make sure they have at least one product selling 50 or more units per month. Okay, so at the end of the day, most listings are not going to be worth our time if they're selling less than 50 units per month. Now, there's always going to be exceptions, but in general, as a general rule of thumb, that is going to be our minimum that we want to see. Now, you'll see I put this caveat here, right? These are rules of thumb. For example, there's plenty of great brands out there that have 0 FBA sellers across their listings, all right? So I say use these rules strictly as a guide and not as law, right? So we're going to look at one really good example here. I've already got it pulled up on Amazon. This is a brand called Power Probe. Now, I've sold this brand in the past, and it's a perfect example of the exact type of brand that meets all of our criteria. And I'm going to show you guys how that is. So first and foremost, when we're scrolling along Amazon, when we're doing our research, we want to make sure we have a Chrome extension installed called DS Amazon Quick View. All right, this is a free Chrome extension, and it is going to show us this little box right here. So the DS Amazon Quick View Chrome extension will show us this box. It'll show us the sales rank of the product, and it'll show us exactly how many FBA sellers are currently selling on that listing. It will also show us whether or not Amazon is on the listing. So I'm going to move my camera over here to the left so that we can see a little better. And remember, our first criteria is we want listings that have at least 2 or more FBA sellers on average across a lot of their listings. So if we're looking at Power Probe here, we see this listing has 9 or more FBA sellers. This one has 5. This one has 4. This one has 6. This isn't Power Probe, right? These are all sponsored listings that are competitors. Here are more Power Probe listings. This one's got 3. This one's got 4. This one's got 5, right? So this is a brand that appears to be reseller friendly. There are a lot of different sellers selling this product, which means that we can probably find a profitable source for it somewhere if we just look. So this brand, and therefore these products, meet our first criteria. Second criteria is we want to make sure the listings that we're interested in, the listings that we're going to go and source, are not dominated by Amazon more than 50% of the last year. So how do we determine that? Well, we determine that by looking at the Keepa graph, where the Keepa graph, if you have your settings set up properly, and if you watch the part of this free course where I show you how to set up your Keepa settings, I show you exactly how to set that up to where when you hover over a listing, this Keepa graph pops up in the bottom right. All right, so we can see the Keepa graph at a glance right there. And remember, on the Keepa graph, if Amazon is on the listing, Amazon appears as that yellow or orange looking line on the listing. So just from a quick spot check of this listing, this Keepa graph here, I see Amazon is on this listing a little bit of the time, right? Around September, November timeframe, but they're certainly not dominating it more than 50% of the last year. It looks to me like Amazon is really only on this listing for 1 or 2 months out of the entire last year. So this product definitely meets our second criteria. If we look at this one here, same exact thing. Actually, Amazon is really rarely, if ever, on this listing over the entire last year. So this listing also is a great candidate for what we're looking for and also meets our second criteria. Now, lastly, we want products that are selling at least 50 or more units per month, right? So Amazon actually tells us now how many units are selling per month. So this listing is selling over 300 units per month. This listing is selling over 200 units per month. This listing over 200. This one over 100. So all of these listings for Power Probe, at least the main ones that we're looking at here, are all selling more than 50 units per month. So just these 2-3 listings right here, the main ones, the first ones that we looked at, they all meet our criteria. They meet criteria 1, they meet criteria 2, and they meet criteria 3. So again, this PDF here, this brand criteria, along with an explanation of each of these criteria, is available for you guys free of charge at the link in the description below. So be sure you get a copy of this so that you can constantly refer to it as you're doing your brand research. All right. So right away, we found not only a brand that is a good candidate that we can go and source, but multiple products from that same brand that all meet our criteria, right? This one meets our criteria. 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 And that's just 4 products out of probably 40 or 50 or more Power Probe products that are listed on Amazon. All right, so this is a great brand and a great example that I like to use when I illustrate this point. All right, now what we're going to do is we're going to take a look at 7 examples of brands and therefore listings that fall into the 3 criteria that we have set here, right? So just these are going to be examples of really good products that meet our criteria to a T. And so what I'm going to do is we're going to jump into some of our other tabs here, and we're going to take a look at these listings, and I'm going to explain exactly how these brands qualify. So the first one here is called Shoe Goo. And again, every single time the process is the same. We're going to run them through these criteria. So we're going to do that a little quicker this time now that we've taken time to explain the criteria. So first and foremost, we want to see at least 2 or more FBA sellers. So in order to determine how many FBA sellers there are, we come down here to other sellers on Amazon, click this. This opens up the tab. We go filter, and then we go prime, and then new. And so there's only 2 FBA sellers on this listing. So it's this guy, Hardware City, and it's this guy, Best Source Office Supply. So that meets our criteria. There are at least 2 FBA sellers. Second thing we do is we want to see that the main listing is not dominated by Amazon more than 50% of the last year. So coming down here and looking at the Keepa graph, we have Keepa set to a year. And we see no Amazon presence at all whatsoever on this listing the entire last 365 days. So it definitely meets our second criteria. And then lastly, we want to make sure the listing is selling at least 50 or more units per month. So if we come up here to the top, Amazon is telling us 50 plus bought in the past month. That means that there's somewhere between 50 to 100 units per month being purchased on this listing. So it meets our third criteria as well. All right, so this first listing definitely checks out. Let's look at a couple more. So the second listing we're going to look at is for this product. The brand is called Jandy, and this is a salt cell assembly. To be honest with you, I don't exactly know what this is. Oh, it looks like it's a replacement part for a chlorinator, right? So some sort of pool part or accessory of some sort. $419 price point, which I love to see. I love selling expensive products. And now, as always, we're going to run it through our criteria just like we would anything else. At least 2 or more FBA sellers. We come down here, click new, prime and new. We're going to see this guy's actually FBM. So the guy in the buy box is an FBM seller, but we've got 1, 2, 3, 4 FBA sellers. And actually, it looks like this guy, Water That, has 2 offers on this listing, which is technically against terms of service. So because there's 2 offers for the same seller, that's really only 1 seller, but that still meets our criteria because we got 1, 2, 3 total FBA sellers on this listing. All right, so meets our first criteria. Second criteria, we want to make sure it's not dominated by Amazon. We look at the entire last year, and this thing has never been touched by Amazon. Clearly, a seasonal product tends to do better in the summer, it looks like, which makes sense because it's a chlorinator for a pool, right? So we'll get into seasonality later in this course and explain why we look for seasonal trends and what that means for our business. But for now, for the purpose of this example, it meets our second criteria. And then our third criteria, we want to make sure it sells at least 50 units per month. Well, right here, Amazon is telling us this listing sells over 300 units per month, somewhere between 300 and 400. So this listing checks out, and this is a great example. On to the next. So this one here is from a brand called FastCap. This is a door hinge tool. First and foremost, at least 2 FBA sellers. Come down here, and there's an FBA seller in the buy box, so that's at least 1 right there. Come to our filter. Look for prime sellers, so that's 1 in the buy box, plus it looks 7 more, so 8. 2, 3, 4, 5, 6, 7, 8. So that's 8 FBA sellers, which definitely meets our criteria. Second, we want to make sure it's not dominated by Amazon. So again, looking at the entire last 365 days, we see no Amazon at all on this listing, so it meets our second criteria. And then lastly, we want to make sure it sells at least 50 units per month. Well, it tends to sell over 2,000 units per month. All right, so great example, great listing, totally meets all 3 of our criteria. Next, we're going to look at this black rubber helmet strap from the brand Streamlight. All right, so right off the bat, and I'm going to run through these a little quicker, guys, like I said, because it's pretty much repetition at this point. We already know it meets our third criteria because there's over 600 units bought per month. All right. Next thing we want to see is the number of FBA sellers. So we already see one right here in the buy box. We're going to open up our offers, filter prime and then new. It looks like there's only 2 total. So there's this guy Courage Tactical, and then there's JB Tools. So these are the only 2 FBA sellers on this listing, but it meets our first criteria because we want to see at least 2. And then lastly, we want to make sure Amazon is not dominating this listing. Well, it looks like Amazon was on the buy box for a little bit of time, May through about July of last year. But since then, there's been no Amazon at all. So this definitely meets our criteria in the sense that Amazon is not dominating this listing more than 50% of the past year, not even close. So this is another really good example. Now, the one caveat with this listing that I want to point out is that this is a very low price point, right? $7.75 per unit is how much this product is selling for. Now you'll see here in Seller Amp is telling us, well, if we got this product for free, right? If our cost was $0, which obviously is not the case, we are going to have to pay for this product. But if we got it for free, then we'd only be making $2.07 per unit. All right. So what this tells me is that we would have to get this product for around $1 for this to make sense for us. Because if we're paying $1 per unit, well, we're making about $1 in profit, which is just under a 14% margin, but it's 107% ROI. So we're more than doubling our money on every sale. But this is just something to watch out for when you're selling these low price products. Okay. I like to sell high price products because there tends to be a lot more profit in selling higher price products because you're playing with larger dollar amounts. So I just wanted to point that out as being a potential caveat in the case of this listing. Next, this is a Watts regulator boiler relief valve. So 200 plus bought, so we know it meets our third criteria. Next, we want to look at the number of FBA sellers. So there is 1 FBA seller in the buy box, 2, 3, 4. So it meets that criteria. Looking at the Keepa graph, Amazon was on this listing for only a couple of weeks from mid-December to mid-January. But notice how when Amazon was in the buy box, if we zoom in here, or sorry, when Amazon was on the listing, they were never even in the buy box. So Amazon is on this listing here, right? But they are priced at $49.99. I'll even zoom in a little bit so you guys can see this. Amazon is priced at $49.99, but the buy box is still sitting at $24, $25, $26, and a third-party seller like you and me is still sitting in this buy box. So again, that just proves that just because Amazon is on a listing, we don't want to be afraid of Amazon. We're just afraid of Amazon when they're dominating the buy box. Okay, so if we look at our 3 criteria, this listing meets it perfectly, and this is another great example. Next would be this brand PAC. This is some sort of converter, some sort of electronic. So right off the bat, we see over 500 units plus bought in the past month, so it meets that criteria. Next criteria, we want to look for the number of FBA sellers. So we see 1 FBA seller in the buy box plus 2. And then we see Amazon is actually the third, right? But they are priced at $18.89. They are not in the buy box. There's just 2 FBA sellers on this listing, so it meets that criteria. And then lastly, looking at this Keepa graph, a lot of beginner sellers would shy away from this product. They'd be terrified of this product because they see so much orange. They see so much Amazon on this listing. But if we dig in a little deeper, like I showed in the last example, just because Amazon is on this listing does not mean they are getting sales, does not mean they are in the buy box. We see the entire last year, Amazon is on this listing almost the whole time. And the only time they're in the buy box is for a small, looks like a very small percentage of time right here, for about a week to 2 weeks, all right? So Amazon's on this listing at all times, but they're priced way outside the buy box. Third-party sellers like you and me are getting the bulk of the sales. And if we want to dig in even a little deeper, we can click the data tab right here and click on buy box statistics. and it will actually show us the percentage of time that Amazon is in the buy box. So over the last 30 days, Amazon has not been in the buy box at all. It's been these 3 third-party sellers. This guy, Gilded Inc., who's a third-party seller just like you and me, has been in the buy box 66% of the time over the last 30 days. If we go 90 days, again, no Amazon. 180 days, Amazon is only in the buy box 9% of the time. And if we look at the entire last year, Amazon is only in the buy box 4% of the time, even though Amazon is on the listing probably 90% of the time. Okay, so I hope this helps reiterate the point that just because Amazon is on the listing does not mean that Amazon is making sales. Okay, I'm going to keep bringing that up throughout this series because it's a really important point to know. And a lot of new sellers don't get this or don't learn this until much later in the process after they've skipped over a bunch of really good potential leads. Okay, so I don't want you guys to make that same mistake. Now, the last listing that we're going to look at here is for this Dish remote. It is a remote control for the hopper. So over 1,000 units bought in the past month. So it meets our criteria of selling at least 50 units or more. Next, we want to see the number of FBA sellers. So we come here to new and used. Prime, new. We've got 1 FBA seller in the buy box. And then we've got 1, 2, 3 more FBA sellers on the listing. And actually, look, this guy, all prime things, he's in the buy box. And he's got another offer here, which again is technically against terms of service. You can't have 2 FBA offers on the same listing. Some people do it. Amazon doesn't really enforce that rule. But for the sake of this argument, there's basically this guy is the same seller. So that's 1 FBA seller, 2, and then 3. All right. So they meet our first criteria. And then lastly, again, we want to make sure there's no Amazon dominating this listing. I see no Amazon on this listing at all whatsoever over the entire last 365 days. And this, I'd love to get my hands on this product because it's selling really well, very consistently, over 1,000 units per month. And the price is relatively stable. I mean, the lowest it'll go is about $25, $25.50, up to a high of almost $30. And the level of competition is really stable. There's really only ever 5 to 7 FBA sellers, or 5 to 7 sellers total on this listing at any given time. So this is a really good, this would be a great product to source if you could get it at a good price of, say, these guys are probably paying about, if I had to guess, probably about $14, anywhere from $13 to $14 per unit for this remote control right here. So this is a good listing, a great example, and one that we would love to source if we could get it at a good price. All right, so I hope those examples made clear exactly how we apply our criteria. And again, these are rules of thumb, right? These are not law, these are not set in stone, but when we find, there are plenty of listings that meet all 3 of our criteria. And when we find those listings, those are really good ones to target. Next, we are going to dive into the 6 major red flags to keep an eye out for when it comes to Amazon listings and certain attributes that you just want to avoid at all costs to keep your seller account safe and to prevent yourself from losing a lot of money selling these types of products. So I'm going to share my screen in a second and I'm going to go through those 6 red flags and exactly how to keep an eye out for them and how to avoid them. So the first red flag that you want to look at is misbranded listings. Okay, so what does that look like? This particular brand, the brand name is Precision. It's clear that the brand name here is Precision or Precision Lock. And this listing is clearly for a Precision product or Precision Lock product, but the brand name on the listing is Better Home Supply. Okay, so this is a misbranded listing. It's clear to me that this is misbranded. It's under the incorrect brand name. And a lot of times Amazon will shut down misbranded listings, or sometimes brand owners will think that sellers selling on misbranded listings are selling counterfeit products, and they will submit counterfeit without test buy complaints against your account. Bottom line is there's only trouble to come from selling on misbranded listings. So when you find a listing where the brand name on the listing does not match the actual product being sold, avoid these products because they can cause issues for your account health, and brands a lot of times will take action to get you removed from those listings themselves. The next red flag is a new offer count that is skyrocketing on a listing. So what that looks like is we're looking at a Milwaukee product here. This is a product that's selling over 1,000 units a month. So there's a lot of demand for this product. Now, the biggest red flag that I'm talking about here is a new offer count that is skyrocketing, okay? The new offer count is simply this third graph here on the Keepa graph that shows you how many sellers are selling a product at any given time. So we see here for a lot of the year, there was anywhere from 3 sellers to a high of maybe 18 or 19 sellers on this listing at any given point in time. And then right here around the beginning of February, that new offer account started to skyrocket, right? We go from 3 sellers to 10 to 19 to 33 to a peak of about 44 sellers, okay? Now, why is this a red flag? Because look at the buy box price as this is happening. So as more sellers are jumping onto this listing, the price of this listing is tanking, right? We go from a buy box price of $74 when there was only 3 people selling this product to now a buy box price of, I guess a buy box price on April 6th of $47. So the price has fallen almost 40% just because the amount of competition increased. So guys, new offer count going up is a huge red flag because it's simple supply and demand. As the supply goes up, AKA offer count, as offer count goes up, buy box price comes down, all right? Every single time it happens. So if we zoom in on just this particular part of the Keepa graph, we see that when there was only 3 sellers, buy box price was really high, supply was really low, therefore price was high. And then all of a sudden, supply picks up and price starts to tank as a result. All right, we go down to a low of like $48. Now you'll see here, this is kind of the inverse of that rule that, well, starting around a couple of weeks ago, there's 45 sellers. Now there's only 29. So that price has somewhat started to recover because we've lost a lot of the supply. $48 a couple of days ago, the price was as high as 53. So that's a 10% increase on those certain days, right? But until supply comes down even more, price is going to probably continue to be somewhat depressed from where it was at its peak. So we avoid listings where that new offer count is skyrocketing because that means the price is going to tank every single time without fail. It is a law of economics. It's supply and demand. All right, the next red flag that we're looking at here is a sharp, basically a sharp drop in the new offer count. And I'm going to show you what that looks like. So here we've got a listing for some Gillette deodorant. And if we look at the Keepa graph here, again, we're focused on the new offer count. So here at this point in time, we see that this listing had anywhere from 7, 8, 9, as high as 13 sellers on the listing at this point in time. And then all of a sudden, it goes from 13 sellers on December 1st down to, boom, 1 seller on December 2nd. We see a straight vertical drop in the new offer count. And if we zoom in, you see it's even more pronounced, right? December 2nd at 2 a.m., there's 13 sellers. December 2nd at 4 a.m., so 2 hours later, there's 1 seller. So what does that mean? What does it mean when we see a sharp, instant decrease in the new offer count, especially going from as many as 13 sellers down to 1? Well, that means more than likely that either Amazon gated a bunch of people on this listing, basically told 12 of those 13 sellers, hey, you can't sell this anymore, right? And just shut them off immediately. Or it means that the brand, Gillette, went in and took action on this listing. Either they submitted IP complaints against these sellers, or they found out that these sellers were selling counterfeit product. Bottom line is some action was taken to boot 12 of these 13 sellers off of this listing. And it looks like the only seller that was left was Amazon themselves. So Amazon basically kicked every other third-party seller off this listing on December 2nd. So when we're doing our research and we're looking at products to buy, anytime we see a Keepa graph like this one, where, hey, it's moving along, there's people selling it, then all of a sudden, boom, a decrease, a huge drop in the new offer count, that means that there was action taken to get those sellers off that listing. And that is a listing that I would avoid because I don't want to invest a ton of money in inventory to jump on this listing to then have the same thing happen to me. Amazon either gating me on the listing or the brand kicking me off the listings, which would leave me stuck with a ton of inventory. So that is one of the big red flags we look for, is a huge decrease, an instant drop in that new offer count. That tells me that there's issues with this listing and we want to avoid them. All right, the next type of listing we're going to look at here is one where the buy box is tanking. So this is another big red flag to look out for when we're doing our research. So if we come down here and look at the Keepa graph, we see that the buy box price has actually started to tank significantly just in the past month or so alone. So when we see a product like this where pricing is, is high for a little bit, then it was steady for a little bit, but then all of a sudden it just starts to tank, well, we want to avoid listings like that, because a lot of people will still buy these products and think, well, okay, well, price has to come back eventually, or, it can only tank so far. Not necessarily true. A lot of times, if a product has already started to tank, it is going to continue to tank. And almost every time when a product tanks like this, it is in direct correlation with the new offer count going up, right? So here we see the highest the pricing was all year was when there was only 6 or 7 new offers on the listing at any given time. And then today, now that the price has tanked, well, there's 11 new offers on the listing, right? Not necessarily a huge increase from the low of 6 or 7, but it's about a 40% increase in the new offer count, which is probably what has caused it to tank, right? So we went from $22 down to a buy box price of $17.99. So we dropped about $4 in price, which is about what, 20, this listing tanked by 15 or 20% in just about a month and a half's time. Okay, so listings where the buy box has already started to tank are a big red flag. We want to avoid those so that we're not caught in a price war, having to liquidate our products at a loss to get our capital back. All right, the next red flag that we're looking at is listings where the brand themselves is the only seller on the listing. Okay, now this is a huge red flag. Most Amazon sellers who have been around for any amount of time know that these are listings that we don't touch. But this was a mistake that I made early on with one of the first wholesale accounts that I had. The brand was Organifi, and Organifi actually has an exclusive seller, basically a representative of the brand, that was the only seller on the listing, but I still jumped on that listing to sell the product myself, and they proceeded to kick me off the listing really quickly. So anytime you see the brand here, the brand is clearly UYOL by Pro, right? That's the brand name. Well, if we look at the buy box, we see that the brand themselves are actually the seller in the buy box, right? They are the main seller on this listing. So if I scroll down and look at Keepa here, they're actually the only seller that's been on this listing ever. There's never been another seller on this listing. The brand themselves is the only person who sells this product on Amazon. So it doesn't make sense for me to expect that I can sell on this listing too. Why would the brand let me sell this product? They're already selling it themselves. Okay, so even if you were to see this product from a distributor or pop up from a wholesaler, or if you got the opportunity to buy this product even at a really good price that was super profitable, I would still not buy it. I would not sell on this listing, because the brand is going to notice and they're probably going to kick you off that listing because they're the only ones clearly selling it. So listings like these are a big red flag in the sense that we just don't compete on listings where the brand is the only seller on the listing. Now, the last red flag that we're going to look at today are any listings where Amazon is dominating the buy box and therefore dominating the listing. So here is a product from a brand called Klein Tools. We come down here, we see Amazon is in the buy box with plenty of stock available. And if we look at the Keepa graph, we see that over the last year, basically 365 days, Amazon has dominated this listing. There has never been another seller in the buy box aside from Amazon themselves. So needless to say, this is a listing that we would avoid because we don't ever compete with Amazon when they are dominating the listing, especially for the entire last year. So any listings where Amazon is the dominant seller, especially for the whole year, we avoid. And guys, those are the 6 red flags that we keep an eye out for. We avoid any of the listings that meet any of the 6 red flags that I just went over. So I hope that helps you guys avoid some of these listings and hopefully save you a lot of time and money in the process. All right, now is the portion of the course where we're going to do a deep dive into the SmartScout tool. Now, this tool is critical if you guys want to save hundreds of hours in doing your brand research, all right? This is the only tool I use to find brands, and as you will see, there's 5 different use cases for using SmartScout to find tons of brand leads. I'm talking hundreds or more in a session, very easily, very quickly. And if you guys want to take SmartScout for a spin, you can use the code Corey25 or simply hit the link in the description below for that discount code. I believe you get 25% off your first 3 months of SmartScout, and it's a critical tool, and I'm going to show you guys exactly how to use it and exactly how powerful it is. So if we jump into my screen here, the first SmartScout tool we're going to look at is the brands tool. So I'm going to move myself over here to the right. So here inside SmartScout, we see the brands tool. We're going to open the tool and we're going to start here. So this is showing us every brand that's available for sale on Amazon. And obviously we're going to have to filter that down. So we come up here to the right, we click filter, and we come down here and we set a couple of filters, really only one from this level. So we come down to primary main category, and this is where we choose a category that we want to play in. All right. So some people like to sell beauty products. Some people like to sell baby products. Some people like to sell cameras. Personally, I like the tools or automotive or industrial and scientific categories. So let's just choose automotive for the sake of this example. So I'm going to choose automotive, move myself back over here to the left, and I'm going to hit apply. And you'll see that that leaves us with 15,216 brands in the automotive category. So we're going to want to drill that down even a bit further. So the first thing I'm going to do is come up here to estimated monthly revenue, and I'm going to set a filter here. All right. Actually, I'm going to come up here to the right and do it there. So I'm going to collapse the primary main category, and I'm going to come over here to estimated monthly revenue, and I'm going to set a minimum of $5,000 a month and a maximum of $500,000 a month. Okay, so that is going to give us some brands that are in the small to medium size category. We don't really want to go after the huge mega brands because they're going to be difficult to open brand direct wholesale accounts with. And any brand that's doing less than 5K a month is probably not worth our time. So you see that just by setting that one simple filter, we cut the number of brands that we're looking at just about in half, down to 7,820. Okay, so the next filter we're going to set is we're going to come over here to average FBA sellers. So I want to see a minimum of 2 FBA sellers on average across the brands that I'm looking at, right? Because remember, our brand criteria sheet that we looked at either earlier or later in this course, depending on where the section is, one of the criteria that we set is we want to see at least 2 or more FBA sellers on average across most of their listings. And SmartScout allows us to filter for that criteria. So we come over here and we set a minimum filter for 2. We apply that. And now we're down to 278 brands. So we started at over 15,000. Now we're down to less than 300. So just by setting these 2 simple filters, SmartScout saved us hundreds of hours in manual research, having to go through Amazon page by page, product by product, and set these filters manually. So what we do next, what I like to do next, is I like to come over to estimated monthly revenue. And I actually like to set that looking smallest to highest. All right. So I like to look at the smallest products first, or the smallest brands first, and work my way up. So now that we have our 2 main filters set, the process is very simple from here, where all we want to do is we want to come over here and click on the brand name, and that is going to open it up in SmartScout. And that's going to give us a lot more data about the brand. But what we can do here instead is we can just click the magnifying glass and open that brand up in Amazon. Sorry, you click on the photo of the brand, and that will open the brand up in Amazon. Now what we do is we got to go through, this is where some of the manual work comes in, right? So SmartScout is going to give us some good data, of course, but we've got to go and manually confirm that data. So what I like to do is just start opening up these brands in a new tab, about 4 or 5 at a time. And now that we've got them open in a new tab, now we're going to go in, see their products here listed on Amazon, and we're going to run them against our brand criteria. Every single time, it's the same process. So the first brand we're looking at here is this one here. So we're going to run them against our criteria. So we want to see at least 2 or more FBA sellers. Here we've got 2 FBA sellers, so that meets our first criteria. Second criteria, we want to make sure the main listing is not dominated by Amazon more than 50% of the last year. So if we hover over the listing here, we see the Keepa graph that pops up in the bottom right. I see no Amazon on this listing at all for the entire last year. So it meets our second criteria. And then lastly, we want to make sure that, that they have at least one product selling 50 or more units per month. Now, here we see this product is selling 50 or more units in the last month. So right away, the first brand that we find is qualified and is one that we would reach out to during our outreach process. So what we do is we come back to SmartScout. I believe this is the Amazing brand. So what we do is we come to SmartScout, we check this box, and now what we can do is we can save this brand to what's called a custom segment. Okay, so we save to a custom segment, and I'm going to create a new one for the sake of this example. So it's going to take a second to load, and I'll be right back when it loads. Okay, it's done. So we change it to, I'm just going to say use it free course as the example here, and then we're going to save that. Now, in a later portion of this free course, we're going to jump into custom segments, and I'm going to show you guys how powerful that tool within SmartScout is. But just know that this is the same process every single time. We come in, we open all these brands up in a new tab, we run them against our brand criteria, and if they fit, we add them to a custom segment, and then we move on to the next one. All right. So if we move on to the next one here, the brand is Iron Tight. So if we're looking at some Iron Tight listings here, first of all, we see a couple of different products. And again, always going to run them through our brand criteria. First criteria, at least 2 or more FBA sellers. Now we see this brand has a few different listings, right? But only one of those listings has more than 2 FBA sellers. This one right here. The other 3 only have 1. So does that mean that we disqualified this brand because all of their listings don't have 2 or more FBA sellers? No, it doesn't, because one listing does. So we're just going to kind of zero in on this one main listing right here because it looks like this one listing might be a better fit for us than these other 3. So this one listing meets our first criteria. There's 5 FBA sellers. Second, we want to make sure it's not dominated by Amazon. If we hover over that listing, we see here on the Keepa graph, we see no Amazon at all over the course of the entire last year. So it meets our second criteria. And then third, at least one product selling 50 or more units per month. Well, it looks like this product is selling over 100 units per month. So this listing, and therefore this brand, meets all 3 of our criteria. So we come back to SmartScout, we check the box, we save it to our custom segment, and let's see. Well, I'm just going to use it. I'm just going to use one of these as an example because it's not populating with our free course segment. But that's the process, right? That's pretty much the process every single time. So right away from the first SmartScout method, the first 2 brands we looked at when we set our filters correctly were both qualified and were both great fits for us to go reach out to and try to open a wholesale account with. So this is how you use the brands tool of SmartScout to find qualified brands. And guys, we looked at the first 2 out of 278. And keep in mind, there's 30 main categories on Amazon. So you can see how just this one method alone can be incredibly powerful and can find a lot of leads really quickly. So now we're going to jump into the subcategories tool of SmartScout and do the same process, but a little differently so that we can, again, show another method for how to find a lot of brands quickly. All right, the next SmartScout tool that we're going to do a deep dive on is the subcategories tool. Now, this is arguably my favorite tool that SmartScout has to offer because there's so many different ways you can use this tool to find qualified brands. So the first thing we're going to do is we're going to open this tool. And this is going to show us all of the main categories within SmartScout that Amazon has on their site. And we can rank them by revenue. We can rank them by the amount of revenue that's going to third-party sellers versus Amazon. There's just so many ways to approach this tool, and I love it for multiple reasons. So what I like to do, first and foremost, is I like to scroll down and just pick a category. So let's choose patio, lawn, and garden for the sake of our example. And we see we've got a few different subcategories within patio, lawn, and garden, all of which we can drill into further, okay? So here we've got pools, hot tubs, and supplies. So right now it's April of 2025. We're kind of heading into the summer season, into the spring season. So let's look into pools, hot tubs, and supplies because we're heading into the busy season for those types of products. So we're going to drill into that a little deeper. Here we've got parts and accessories, filters and filter media, swimming pools, saunas. We got a lot of different additional subcategories we can dive into. So I like to look at parts and accessories because who knows what we can find, right? There's really no right or wrong way to go about this research. I'm just kind of shooting from the hip. And you guys will notice that some of these subcategories have a magnifying glass next to them, and some of them don't. They have just additional arrows. So when you see a magnifying glass, that means that we are at the farthest root of that subcategory. So there's no additional subcategories under saunas, right? Saunas is under the swimming pool subcategory, but saunas itself is the final destination for a subcategory. Whereas parts and accessories, there's no magnifying glass, so that means you can drill deeper into parts and accessories. So let's do that. So here within parts and accessories, we've got pool and spa replacement parts, we've got covers, we've got hot tub accessories, lighting products. So let's dive into hot tub accessories, all right? SmartScout's telling us this subcategory is doing almost $4 million per month in revenue. And third-party sellers like you and me account for almost 97% of that revenue. Okay, so that's a good portion of that revenue. Let's take a look at hot tub accessories and drill into that a little further. So we're going to click the magnifying glass and we're going to click brands, okay? Now, once we're in the brands category here, we're looking at all the brands within the hot tub accessories subcategory. What I like to do now is I like to come over here to average number of sellers and set a minimum filter of 2. So that's going to show us 36 brands down here at the bottom. SmartScout has 36 brands within the hot tub accessories subcategory that have at least 2 sellers on their listings on average at all times. Now what I like to do is I like to sort by average number of sellers. And I want to see the brands that have the most sellers on average, because again, the brands with the most sellers typically mean they're the most reseller friendly and they're the easiest to source. Because if 20 people, for example, are selling this brand on average, that means it's probably pretty easy to get. And we just want to go where the low-hanging fruit is and find the easy opportunities. So the first brand that we're seeing here is Spa Choice. SmartScout is telling us this brand is doing about $13,000 per month in revenue just in this subcategory. So that's a mistake a lot of people make. They will see a brand, for example, like this one, Pro Team, and say, oh, it's only doing $837 a month. It's not worth my time. When in reality, that is just the amount of revenue that it's doing in that subcategory, in the hot tub accessories subcategory. Now, remember that brands can be in multiple subcategories. Chances are, every brand out there is going to be in a lot of different subcategories. So we don't want to skip over a brand just because it is doing, $800 in revenue because it's just in that subcategory. Chances are we can find other products from that brand in other subcategories. So if we're going to start with Spa Choice, we're going to click the magnifying glass and we can look at all the products that Spa Choice has to offer. All right, so it looks like there's only 3 products from the Spa Choice brand here. And here we've got a couple of different data points. We've got the estimated monthly revenue. We've got the ranking, the sales rank in the main category. We've got the subcategory rank. We've got the growth statistics. We've got a lot of different pieces of information here. But to make it easy on ourselves and to not get overloaded with data, let's just pull the product up on Amazon and take a look for ourselves. All right. So I like to click on the photo that pulls the product up on Amazon. Now, what we're going to do next, as always, is we are going to run each product and each brand through our brand criteria. Guys, I keep coming back to this document because this is the way that I make my buying decisions. And again, you can get a copy of this at the link in the description below. All right, so now that we're looking at a product, we are going to run it through our criteria. So first and foremost, we want to see at least 2 or more FBA sellers. So if we come down here and we look at other sellers on Amazon, we're going to click this here. It's going to open up all the sellers. We're going to filter and we're going to look at Prime. All right, so it looks like this guy in the buy box, he is an FBA seller because it's shipping from Amazon.com. And it looks like there are 8 other FBA sellers on this listing. There's 8 more people selling this listing FBA. Okay, so this listing definitely meets our first criteria. Second criteria, we want to make sure this listing is not being dominated by Amazon more than 50% of the last year. So if we come down here and look at this Keepa graph, actually Amazon is on this listing, right? As we can see here in orange, Amazon is on this listing for probably 60-70% of the last year. The only time Amazon is not on this listing is from, looks like November until about mid-February. Okay. Now, this is a special case because even though Amazon is on this listing for 70% of the last year, Amazon is not getting the buy box, right? Amazon is not dominating this listing. Just because they're on a listing doesn't mean that they're dominating the buy box. And we know that Amazon isn't dominating the buy box because look at Amazon's price versus the buy box price, right? Here we see the buy box price is $41, but Amazon is priced at $60.58. So Amazon is not getting the buy box. A lot of newer sellers would see this listing and be scared off because they're like, oh, Amazon's on this listing, I don't want to touch it. But in reality, it doesn't matter if Amazon's on the listing, it just matters if they're getting sales. So even though, again, Amazon is on this listing technically for about 70% of the last year, they're not dominating the buy box. They're not getting any sales. All of the sales, looking at this buy box little figure here, right, is going to third-party sellers like you and me. In fact, Amazon is never once in the buy box the entire last year, even though they carry this product. Okay, so technically this product meets our second criteria. Amazon is not dominating the buy box. Third, we want to make sure this product's selling at least 50 or more units per month. All right. And we can tell that that is happening. That's definitely happening by what Amazon gives us this data point right here. This listing is selling over 1,000 units or more in the last month. So this product and therefore this brand, Leisure Time, definitely meets our criteria. So this is a great brand and a great example of a product that meets our criteria. So this is what we do next. We found a specific product that meets our criteria, so we can check the box, save it to a custom segment, and we're just going to add one free course. And again, you would just add it to the one you've already created that you've been going through throughout the series. So we'll save that. And now we're actually going to come back to brands, right? We're going to come back to Spa Choice here. Oops. Dashboard. All right, we're also going to come back here into the hot tub accessories subcategory, and we are going to add Spa Choice to our custom segments as well. And so in order to do that, we click the custom segments button over here on the right. It's going to generate a checkbox next to Spa Choice, which is the brand that we were looking at. And then we are going to add it to our custom segment of free course. Because again, the beauty of custom segments, and we're going to go into this in more detail in a later module, is that you can store products in a custom segment, you can store brands in a custom segment, you can store subcategories in a custom segment, you can store search terms, and you can store sellers. All right, so custom segments offer you a way to compile all of your research data, all of your different data points, so that when you're going down a rabbit hole or you find a really good lead, you don't lose it. You can store it in the same custom segment. So that, guys, in a nutshell, is how you approach the subcategories tool within SmartScout. Again, there's a million different ways we could do this, but the first subcategory, the first brand, the first product we looked at, all were a great fit, right? We found a really good lead and potentially multiple leads from that same brand in a matter of minutes. And you could do this for every single product in this one subcategory, hot tub accessories, and then you rinse and repeat for as many subcategories as you possibly want, and you are going to find unlimited amounts of leads doing it this way. So we're going to jump into the next module of SmartScout here in a second. All right, before we jump into the next section where I'm going to show you guys exactly how to find other sellers and literally steal their leads for free, I want to explain this process, right? So it is called Storefront Stalking. And I didn't invent this term. It's been around for a long time. But the process of Storefront Stalking is very simple. You literally go and find another Amazon seller who is doing the same business model that you're doing. All right. And I'll show you exactly how we determine which sellers are doing wholesale versus which ones are doing arbitrage or private label. So we find sellers that are doing our same business model, and we go through their storefront to find products and to find brands that they're selling. And the thought process behind this is that if another seller is selling this product or they're selling this brand, they're probably making money selling it, right? Otherwise, they wouldn't be selling it. So we really go and find the low-hanging fruit from the people who have already done the research, who have already found the brands, already found the products that are profitable, and we go and just copy them. We just go and steal their leads, all right? It's a very common strategy. It's a very common practice, and I'm going to show you guys exactly how we do that using SmartScout and specifically using the sellers tool within SmartScout. So if we jump into my screen here, I'm going to show you guys how we do that. And I'm going to show you a very specific example of a seller that I like to storefront stock and have stolen a lot of leads from. So we come over here to the sellers tab. All right, we open this tool. And here, SmartScout is going to give us every seller that sells on Amazon. All right, there's 2,051,835 of them that we can see here in the bottom right. So a seller that, and I've used these people as an example before in multiple videos, so God bless them, because people have probably just picked them dry as far as all the leads and all the brands they carry. But that seller's name is HVAC Pros. Okay, so I like to steal leads from this guy, HVAC Pros. So I type their name into the sellers tool. Here they pop up, and there's actually two different HVAC Pros sellers here. Now, the one that we're going to look at is this one here on the top, and SmartScout gives us some cool information about them. So it gives us their seller ID, which anybody can change their storefront name, but you can't change your seller ID. It shows us the main category that they sell in, which is industrial and scientific. It shows us their primary subcategory, which is industrial thread sealants. It shows us their estimated monthly revenue. So that means that this seller is doing roughly $303,000 per month in revenue. 97.9% of their listings are FBA. Now, this is where it gets interesting. So it's telling me that for full brand coverage, and SmartScout will define each of these columns if you hover over it. So this is where SmartScout's telling us, hey, HVAC Pros, there's 4 brands that HVAC Pros carries where HVAC Pros is earning more than 60% of the estimated 30-day sales, right? So any seller that has full brand coverage for a brand means that they probably have an exclusive agreement with that brand, or they've got some sort of handshake deal to be the only seller or one of a couple sellers. So we'll just keep that in mind as we're going through their storefront and making sure we're not going to try to call any brands where, hey, it's clear they're the exclusive seller, because the chances of us essentially stealing that relationship from them are pretty small. Now, they've got 193 total ASINs in their storefront, and SmartScout is telling us that they earn more than 10K per month off of 5 of those ASINs. All right, so this seller is pretty spread out, because if only 5 of their products are earning more than 10K a month, that means they've got a pretty diverse catalog where a lot of their they're making money from a lot of different products, right? Not just 1 or 2 main products. So this is a perfect example of a seller we'd like to stalk, because that means they have a big catalog of products that we could potentially go and take. So what we do is we click on the magnifying glass, and I like to look at brand coverage. All right, so give it a second to load. And this is going to show me a lot of different data points about this seller. So it's going to show me the number of products the seller is carrying for each brand. So for example, this Yellow Jacket brand, HVAC Pros is carrying 44 different Yellow Jacket products, all right? $51,000 per month in revenue is coming from Yellow Jacket as a brand. So that right away is like, oh, we need to go target this Yellow Jacket brand, because this guy HVAC Pros is making a killing selling this Yellow Jacket brand. 44 of their products this guy's carrying, right? And he's only got 6.7% of the brand share per month, which tells me that Yellow Jacket's probably a pretty big brand. If he's making, say, 52 grand a month selling this Yellow Jacket brand, and that's less than 7% of Yellow Jacket's total revenue, then that's probably a pretty big brand, right? He's got another brand, Refrigeration Technologies, where he's only carrying 4 of their products, but those 4 products are generating $46,000 per month in revenue just off those 4 products, all right? But he's got about 60% of the brand share, okay? So this guy, HVAC Pros, probably has some sort of agreement with this brand, Refrigeration Technologies, to be either the only seller or one of a small number of sellers. So that's something we're going to look out for as well, because he's controlling 60% of their sales on Amazon. And from there, it gets a lot smaller as far as the brands that he carries and the opportunity that those brands present, right? It doesn't mean they're bad opportunities. It just means that he's top heavy in these couple of brands here. So what we'll do is we will click on this magnifying glass. I'm really interested in this Yellow Jacket brand, so we could click on the magnifying glass and see all the products from Yellow Jacket, all the different sellers selling Yellow Jacket brand, all the subcategories they're in, all the search terms that they're ranking for, right? You can see how powerful of a tool SmartScout is for things other than just finding brands, right? It can do a million different things. But I just like to click on the brand name and check out the brand on Amazon. All right, so this is going to show me all of the Yellow Jacket products here listed for sale on Amazon. Okay, so as always, we're going to run them through our 3 criteria. So first criteria, we want to make sure they've got at least 2 or more FBA sellers on average across most of their listings. We come here to the results. So a lot of these listings only have 1 FBA seller, right? So that's a little bit of a red flag in the sense that, well, again, a lot of these listings only have 1 seller, but then we see some, for example, like this one that has 8 FBA sellers, right? This listing has 8 sellers on it. Let's see, I just saw another one. This one has 2 or more, right? This one has at least 2. This one has 2. So just because some of their listings only have 1 seller, it doesn't mean they all do, right? This one has 3 or more. Okay, so that's a few different products that do meet that first criteria. The entire brand, not every listing has to meet the criteria. We just really have to find 1 listing that does. Okay, so let's just look at this one as an example. This one's got 3 FBA sellers. It meets our first criteria. So then next we want to look at, is the listing being dominated by Amazon? Well, if we hover over the Keepa graph there in the bottom right, I see no Amazon on that Keepa graph. And then next, at least 1 product selling 50 or more units per month. This one, Amazon is telling us this listing is selling more than 100. So this listing right here absolutely meets our criteria, okay? So just from a quick glance into 1 product from this Yellow Jacket brand, we found 1 specific product that we can go out and source. But another data point to keep in mind is that this guy HVAC Pros is carrying 44 different Yellow Jacket products, right? So they've got to be reseller friendly. Otherwise, this guy would never be able to get his hands on 44 different products from this brand. So right away, from that quick research that we did looking here on Amazon, we're going to add this brand to our custom segment. All right, so we're going to come over here and add them to the free course custom segment. That's the one that I'm using for the sake of this example. And then if we wanted to get a little further, right, we could come in and add the specific products from Yellow Jacket into our custom segment. So we could come over here to the magnifying glass, click on the products tab, and then do a deep dive into all of their different products. So we got 215 different products listed on Amazon. Now, again, we're only really looking at the sellers portion of this particular part of the video, right? But again, you could go into Yellow Jacket and do a deep dive and pick out all the different products that you like. But it's the same process for every brand, okay? We're going to find, I guarantee you, similar results looking at this, let's say, ICM Controls brand. All right, so if we click on this brand, same exact process every time. We run them through our criteria. I see this says 1+ FBA seller, so that means there's more than 1, so there's at least 2. This one's got 3. This one's got at least 2. This one's got 3. This one's got 2. So here again, we're seeing a brand that looks like a good fit, right? Let's look at this one. It's got 3 or more FBA sellers. Look at that Keepa graph. There's no Amazon. And is it selling 50 or more units per month? It doesn't say. Sometimes Amazon does not tell you whether the listing is selling 50 or more units per month or not. But we got to keep in mind that, again, these are rules of thumb, right? It doesn't necessarily have to sell 50 or more units per month. That's just a rule of thumb. And this product is priced at $81. So this is an expensive product, which when you sell more expensive products, you don't necessarily need to do a ton of volume, right? So this is a perfect example where I'm willing to compromise on my third criteria, because if this product only sells 20 or 30 or 40 units per month, it's an expensive product. So I can make up for the lack of volume in the amount, in the price point, right? If that makes sense. So this is another example of a brand that meets our criteria for the most part, right? We made a little bit of an exception on the third criteria, But this is a great one to go after and to contact and see if we can work with. So what do? We come over to custom segments. We add ICM controls to our custom segment. And then from here, if we wanted to, we could do a deep dive into the specific products they carry. So it looks like there's only 9 products of theirs on Amazon. We could pretty much just pick and choose which ones we would want to target if we were able to get in touch with ICM controls the brand. Okay, so this is the storefront stalking strategy in a nutshell using SmartScout. So you guys can probably see how powerful this strategy is. Literally the first 2 brands that we looked at from one seller were both qualified and both had multiple products from each of those brands that we could go and target. All right. So this seller, HVAC Pros, he's got 42 different brands in his storefront. Okay. So we could literally find tens, if not hundreds of different products just from this one seller. And remember, there was over 2 million sellers on Amazon, right? There's 2 million sellers according to, let's see, if we remove our filter here, right? SmartScout tells us there's 2,052,120 sellers on Amazon. So you guys can see how there's really unlimited opportunity with this storefront stalking method. And this is just one example of many where we go and find products and brands that another seller has already done the research to find, and we go and source those products. All right. So we'll jump into the next method here in a second. All right, the next section, we're going to look at the seller map tool within SmartScout. So this is kind of a variation of the storefront stalking method, but it's a little more targeted in the sense that it's hyper local to you. So I use this method to find sellers that are local to me and then go and try and find their suppliers. So I click on the seller map feature here in SmartScout, and I'm going to zoom into North Carolina. All right, Charlotte specifically, because that's where I'm located. Now you see here in the bottom left, SmartScout tells us which sellers are resellers, which are the ones we want to target, and which sellers are private label, which we don't want to target. Okay, so we're looking for these little purple banners here, or these purple circles, because those are going to be other resellers. Now, what I like to do is I like to set a max number of sellers to, let's say, 25,000. All right, so that's just going to show me more sellers in my area. So if I zoom into Charlotte here, I'm going to start looking for these purple dots. All right. So here we got one called Lacrosse Scoop. So if we click on them, we see the company name. We've got their address. We've got their seller ID. We've got how much revenue they do per month. We got a lot of good information. Now we can come over here to brand coverage and see which brands that they're carrying that, that we could potentially go and stalk. Now, SmartScout's data isn't perfect, right? Because SmartScout's telling us, hey, this brand is a reseller. However, when we drill into their storefront, they're only carrying 4 different brands, and they've got 100% of the revenue for all 4 of those brands. Okay. So what that actually tells me is that this brand is not a reseller. They are a private label brand because they own these 4 brands. They're getting 100% of the sales for these 4 brands. Okay. So this is actually not a good example. So we're going to go back to our map here, and we're going to see if we can find another reseller in the area, maybe a little smaller one that would be a better to target. So here we got one called Memory C. We're going to click on them. They're doing about 192K a month. We go to brand coverage, and this is a much better example because they're carrying a bunch of different brands and they're not dominating any one of these brands, right? They've only got a small percentage of the revenue, which means they are a reseller, probably one of many resellers. So what are we going to do now? I like to look at, well, which brands are they making the most money off of, right? And this one here, Patriot Memory, is one that they're making 42 grand a month selling 2 different products from the Patriot Memory brand, and they've only got about 5% of the share of that brand. Okay, so if we click on them, Patriot Memory, to view them on Amazon, what does that brand look like? So it looks to me like Patriot Memory is a brand of SD chips, right? SD cards, essentially. Now, there's really only one FBA seller on most of these listings, okay? So that's kind of a red flag, but I'm not worried about this guy, Memory C, owning this Patriot Memory brand, right? Because he's only getting 5% of the revenue for the entire brand. So the only reason we have this criteria here we want to see 2 or more FBA sellers on average, is to weed out any private label brands or any brands that are selling on Amazon themselves, right? Because typically, if there's only one FBA seller, usually it's because that one FBA seller owns the brand. They are the brand owner, okay? Now, the reason we're going to make an exception for criteria number 1 in this case is because even though there's only one FBA seller on these listings, we know that it's not the brand owner, right? We know that this guy, Patriot Memory, is not, or sorry, Memory C is not the brand owner because he's only controlling 5% of the sales of this brand. If he was the brand owner, he would probably have 100% of the brand sales, right? So right off the bat, we're making an exception for the first criteria because of that small nuance, that small technicality, right? And this is, again, why I make it clear that these are rules of thumb. These are not law. We don't look at this brand and immediately say, oh, one FBA seller, nope, on to the next one. We've got to dig into, well, why is there only one FBA seller? And in this case, this is just a niche product. It's a 5-pack of this particular memory chip. And we just continue doing the rest of our research as if there was more FBA sellers. So I hope that makes sense. Feel free to leave a comment if you're confused at all on, well, hey, why is there only one FBA seller, or why did we make an exception on this particular rule? I'm happy to help answer that question. So if we move on to our next criteria, we want to make sure it's not dominated by Amazon. So if we hover over the listing here, we see that, well, Amazon is not on this listing at all for the entire last year. So that's a good sign. And then lastly, we want to make sure it's selling at least 50 or more units per month. And right here, Amazon is telling us this listing is selling over 500 units per month. All right, same goes for this one. Again, yeah, there's only one FBA seller, but we know it's this guy, right? Memory C, and we know he's not the brand owner. I see no Amazon dominating this listing, and I see over 100 sales per month. All right, so this is another product that would meet that criteria. So because this guy Memory C is local to me, right? He's in the area, he's right down the street. Chances are he's sourcing this brand, Patriot Memory, from a distributor that's close to me, that's nearby to me, right? Or he might be buying it directly from Patriot Memory. So what I would do, and what I'll show you guys how to do in a later module, is to find a distributor for a specific brand, or better yet, call up Patriot Memory, literally call them and say, hey, I live here in Charlotte. Can you connect me with a distributor here in Charlotte for your products? And you can bet with probably 70 or 80% certainty, whichever distributor Patriot Memory refers me to is the same one that this guy Memory C is buying from, right? Because he's right down the street from me. Okay, so I hope you can see how this particular method using the seller map can be really powerful to find these distributors and these brands that are these people that are local to you, find what they're selling and go and steal their leads, right? This could be a really good lead for us. So that is how, guys, in a nutshell, we use the seller map feature to go in and find some local resellers that we can steal from. Let's see if we can't find another one here, Plumber's Paradise. So if we come into their storefront, so they're doing about 250K a month. We come into brand coverage. They're clearly a reseller because they're carrying a bunch of different brands and they're not dominating any one of those brands. So this one here, Everpure, would be a good one to look at. This guy, Plumber's Paradise, he's carrying 21 different products from Everpure, doing almost 73K per month in revenue from this one brand, and he's only got about 11% of the market share. All right, so this is clearly a reseller-friendly brand because this guy's not dominating it. So if we open them up in a new tab, here we see the Everpure brand, and I see 7 FBA sellers on their main listing, right, which is what we want to see. I see over 900 units bought in the last month, so that meets our third criteria. And if we hover over it, we see that Amazon is on the listing kind of here and there, but they're by no means dominating it, okay? So this Everpure brand is a great candidate and a great product, and this product in particular is one that we would love to sell, okay? So what do? We come back here, we click on our custom segments, and this is what we would have done for Memory C as well. So we can open up our custom segment, we can click on Patriot Memory, add them to our segment. Make sure we do the same thing with the Plumber's Paradise brand, Everpure, or not brand, seller, right? Everpure, add them to a custom segment, free course. And now we have that saved so we don't forget about them and we don't lose them. So we can come back and source that brand or that seller or memory C and all the other products and brands they have at a later time. So guys, that is how we use the seller map feature to, I mean, there in under 9 minutes, we found 2 local sellers that we can storefront stock. We found 2 qualified brands that we know are a good fit. And that was just the first 2 brands that we looked at from each seller. You can see how there's so much opportunity with just this one method for finding local suppliers and then local leads that you can then call and steal those leads from other sellers. So I hope this was helpful, and we'll jump right into the next module. All right, now we're going to dive into one of the most powerful SmartScout features of them all, and that is going to be custom segments and exactly how we go back and look through the data that we spent all that time finding, all the brands, the sellers, the subcategories, the products, everything that we've found and added to our custom segment. I'm going to show you guys how to filter through that and how to make best use of that. So if we jump into our screen here we come over to custom segments on the left-hand side of the screen. And for those of you guys that have been using SmartScout for as long as I have, you'll know that this used to be called collections, all right? But recently SmartScout rebranded it to custom segments, and there's a lot more data and it's way more powerful. So I'm going to show you guys how I would use it, or how I do use it as a wholesale seller. So here we've got our free course custom segment. This is the one that we're working through as part of this this training. And what we can do is we can click on the magnifying glass here and we can just view. All right. So here we've got, well, I'm going to zoom out a little bit so that we can see everything. And I'm going to move myself over to the right. So we got a lot of things going on the screen here. Okay. So we've got the estimated monthly revenue for just the one product that we're looking at, because we're looking at the product dashboard. And if you guys remember, this is the leisure time spa product that we added during our subcategory tool research. Now we can kind of poke through the different categories here. So we've got the brands that we can look at. We've got our subcategories that we've saved. We've got the sellers that we've actually not saved all of these sellers, but SmartScout went and proactively added these sellers to our collection for us. It basically took all of the FBA sellers that are selling this one product and added them to our collection, our custom segment for us, so that we didn't have to go in one by one and add each of those sellers. So remember when I showed you guys the sellers, the storefront stalking module that either is going to be before this section or after this section. But by adding that product to custom segments, we now have access to 7 additional sellers that we can go in and storefront stock. All right, so this can be an incredibly powerful way to just completely put on steroids your research, because now we've got 7 more sellers that are all in the same niche, that are all, if I move myself again, 100% FBA. So these are all FBA sellers, and we can go through and steal their products, steal their leads by clicking on the magnifying glass and looking at their offers or their brand coverage. And every product that we add to our custom segment, SmartScout is going to automatically add all of the FBA sellers that are selling that product to the sellers portion of our custom segment, okay? So you can find literally hundreds of leads, or better yet, hire a virtual assistant to dig through this data and pull out all the best leads. I'm talking hundreds of leads per week is what you should be able to find. Next, you can also look at these search terms that these products and these brands are ranking for. Now, this is a little outside the scope of this free course, but as you guys start working directly with brands, or if any of you guys have ambitions to launch your own brand, this is where you would want to do some research and see, well, okay, what keywords are these brands and are these products ranking for, right? Looks to me like this search term hot tub shock is being searched 14,396 times per week, all right? And this product here looks like it's ranking for that search term, because that's why these search terms showed up here. So this is a really powerful feature of SmartScout using these custom segments. What I like to do is I like to do storefront stalking, because my competitors have already done the hard work for me. So what I could do next is I could jump into My Garden Pool, look at their brand coverage, see all the different brands they carry. And if I move myself to the left, they carry 22 different brands, and I can just start going one by one and stealing their leads and stealing their products, right? Here's this brand, Espoma. I've actually sold this brand before. This seller's selling 31 different Espoma products. He's making 46 grand a month in revenue just from that one brand. He's got less than 3% of the market share. So this is a big brand, clearly. Now I can click products and I can start going through and kind of cherry picking the best products from that brand, knowing that it's a good brand because this guy, My Garden Pool, is already carrying it. Okay, so in seconds, we just generated a bunch more leads. So that's how we use custom segments. I know SmartScout has a lot of ambitions and a lot of plans to continue beefing up this part of their tool. And it's incredibly powerful when used properly. You can add products to a custom segment. You can add a brand. You can add subcategories. You can add sellers. And you can add search terms all to the same custom segment. So you've got your data there in one place. And again, we'll go into more training on this in future videos. But this is exactly how I would use custom segments to organize my data and to further find additional leads from the work that I've already done to find the leads that are inside of our custom segment. All right, so the next thing we're going to look at is the common scripts that you can use when you're talking to brands. And so these are going to be the exact things that you say to brands, whether you're getting a salesperson on the phone, whether you're dealing with the owner of the company. So we've got a few different scripts here that you can use depending on who you're talking to. And the best part about these scripts is I'm going to give you guys these scripts completely free. So you can hit the link in the description below to get a copy of this PDF completely free. So I'm going to jump into the screen here and we're going to go over these scripts and I'm going to show you exactly what they look like. So the first script that you can use when you are dealing with either the owner of the brand or a salesperson for the brand is this right here. So I like to say something along the lines of, hey, my name is Corey Ganem. I own a retail business that specializes in blank category, right? Obviously, in this case, the blank would be whatever category of product the brand that you're calling is. So for example, if I'm calling a tool brand, I'd say, hey, my name is Corey Ganem. I own a retail business and we specialize in the tool category, right? And you don't necessarily need to specialize in the tool category as long as you're carrying some sort of other tool products. Then you can say this with confidence. And this is one of the reasons why I recommend people specialize in a given niche or they specialize in a given category, is so that they can say this with confidence. And so they can really explain to a brand, hey, I have experience in this category. I have experience in this niche. So the next line you can use here is, hey, you guys have some great products, particularly product X. Now, this is the key part here. It's being specific about exactly what it is that you want and about exactly what it is that you're looking for. So when you name drop a specific product that they carry, this proves that you're a serious buyer because you're not just calling them up saying, hey, I'd like to open a wholesale account. I'd buy anything that's profitable. No, you're saying, hey, I'm specifically interested in product X, this exact product. If you get the wholesale account, does that mean that you have to buy product X? No, it doesn't. It's just a tactic that we use to prove to the salesperson or prove to the owner that we've done a little bit of research and that we're serious about buying some of their products. So the next line you'd use here is, I'd be interested in carrying that product, but would like to get some information from you first. What are your requirements for new dealers? So if you remember from earlier on in the course, dealer is another word for retailer. They're used interchangeably. Really, dealer is an industry term for retailer. So just by using the term dealer, you make yourself look that much more serious because you're showing that you are involved in the industry and you know the lingo. So again, we're not, this script is meant to be more non-threatening. It's less assertive because you're calling them up. You're name dropping a product, which is important, but what you're not saying, you're not going straight for the kill. Hey, I'd like to open a wholesale account. Hey, I want to buy this specific product right now. You're saying, hey, I'd like to get a little more information from you. I am interested in this specific product, but what are your requirements for new dealers like me? And again, this shifts the power over to the sales rep or the owner that you're talking to, because what they're going to say next is they're going to say, well, we require that you buy X amount of product per month, or they might say, hey, we require that you have a brick and mortar storefront, or they might say something like, well, hey, we just require that you don't sell on Amazon. In which case, depending on their answer to this question of what are your requirements for new dealers, that will show you how you proceed next, and that will basically show you what you need to say or how you need to steer the conversation from there, right? If they say, well, hey, we require a brick and mortar storefront, well, we're going to get to how we handle that objection later on in this section, because part of this template here is common objections. And one of those is we require a brick and mortar storefront, right? And if they hit you with the, well, hey, we don't sell to Amazon sellers, well, we're going to get to how we handle that objection as well. So that is the first script that we're going to use when dealing directly with brands. Again, it's as simple as saying, my name is Corey Ganem. I own a retail business that specializes in your category. You've got some great products, specifically product X. I'm interested in carrying that product, but I'd like to get some information from you first. What are your requirements for new dealers? All right, script number 2. This is one that you can also use when you're dealing with the owner or with the salesperson. You can use either script 1 or script 2, depending on the person that you're dealing with, but they can be used interchangeably. So you can say something along the lines of, hi, I'm Corey Ganem, and I am the buyer for a retailer based in your city. Now, one of the reasons I like this script is because you're positioning yourself as the buyer, not the owner of the company. And the reason this works well is because if a company has a buyer, then they're seen as a bigger company than if you're calling as the owner of your company. So by positioning yourself as the buyer, you can defer to the owner or management or whoever else you want to defer to. So that way it just makes your company look a lot bigger than it is. So I might say, hey, my name's Corey Ganem. I am the buyer for a retail business based in Charlotte, North Carolina, right? That's where I'm located. Next, you could say, well, we're looking to bring in a new product line in the tool category, and a friend of mine put you guys on my radar, right? That friend of yours could be your VA. That could be, simply an advertisement that you saw on Amazon. You don't necessarily need to use this line if it's not true, but you could just say, hey, we're looking to bring in a new line of product in the tool category, and you guys came across my radar. I did some research, and I really like product X, right? So similar to our script up here, we always want to name drop a specific product. And better yet, if we can name drop multiple products or a specific product line. So if you say, hey, I did some research and I love your drill bit tool, I love your razor blade, and I love your fastener, right? Naming those 3 by name, again, just shows the brand owner or the salesperson, whoever you're talking to, that you are a serious buyer. You've done your research and you know what you want. And then lastly, what would be needed on my end to get set up as a new dealer? So you're not asking them a closed-ended question where they can answer yes or no. You're making it an open-ended question. You're saying, hey, well, what do you need from me to get set up, right? So they might respond, well, we need you to submit an application, and then we need to submit that to accounting, and then they need to approve you. Okay, great. Well, what do I need to do to get the application? Oh, well, Jenny in accounting will send that over. Great, right? Always trying to ask open-ended questions. Or they might say, well, hey, you need to have a storefront and you need to buy $1,000 worth of product as your opening order because that's our minimum. Okay, great. Well, what would I need to do if I didn't have a storefront? What sort of exception could be made, right? Because again, always asking open-ended questions, not letting them answer yes or no to any of our questions. Not saying, well, hey, if I don't have a storefront, can I still buy from you guys? Because they're just going to say no. So asking, well, hey, what sort of exception could be made if I don't have a storefront, but I know what I want to buy? That is an open-ended question that makes them think about how to solve your problem. Okay, so that's script number 2. You can use that when you're dealing with the owner or with the salesperson. And the reason we have our wholesale network logo here is because these scripts and these templates are typically only reserved for folks inside our wholesale network community. So we've got the branding on the document itself. But again, I'm giving these away to you guys completely for free. So if you guys want a copy of these scripts, then you can get them at the link in the description below. All right, I'm going to move myself over here. So you can use this third script again when dealing with either the owner of the company or a salesperson. Hi, my name's Corey. I'm the buyer for a retailer based in Charlotte. Again, very similar opening to the other one. And this is a good script to use if you're already an established wholesale seller and you're already sourcing from another company that would be seen as a competitor of the company that you're calling on now. So for example, just to use a very generic, broad example, if you're calling on, say, DeWalt, right, which probably won't be because the chance of getting a direct count with DeWalt is very slim. But if I'm calling DeWalt and I'm saying, hey, my name's Corey, I'm the buyer for a retailer here in Charlotte. We currently sell a ton of Milwaukee and Makita, right? So if I'm the owner, if I'm the salesperson on the other line and I hear, well, hey, Corey's selling a ton of Milwaukee and Makita, they're our biggest competitors. Yeah, I want to steal that business from them, so I'm more likely to want to work with Corey, right? That's the thought process there. We've done so well with those brands that we want to bring in a new line in the tool category. Move myself up there so you can see. Are you currently onboarding new dealers, right? So this is a yes or no question. So not the best way to end this script. Honestly, I probably need to update this knowing now that this is a yes or no question, but you can kind of spin this question depending on the answer. So when you say, well, hey, are you onboarding new dealers? It's okay to ask a yes or no question in this case because you've already established your credibility by explaining that you already sell a ton of their competitors. So if they say, no, we're not onboarding new dealers, then you could simply say, okay, well, that I understand, but we've got $10,000 set aside this month that we were going to allocate to a new product line. So if you guys aren't accepting new dealers, then we'll just go back to Makita and allocate that spend to them. All right. And if they still don't balk, if they still don't want to work with you after that, then there's not a whole lot you can do. So because we are kind of name dropping some competitors and showing our expertise, assuming we're an established wholesale seller, then that makes it okay to ask a yes or no question in this case. All right, so those are our top 3 distributor tips, or not distributor tips, distributor scripts that we use when we're calling distributors and not distributors, brands, excuse me. These are the top 3 scripts that we use when we're calling brands. Hey, my name's Corey Ganem. I'm with a company called Power Tool Plus here out of Greensboro, and we were interested in becoming a Whiteside dealer. So I wanted to call and hopefully speak to someone there in sales.
Okay. So do you, what do you sell?
Yeah, so like I said, our company is Power Tool Plus. So we're mainly in the tools, industrial, and kind of automotive categories, if that makes sense.
And do you have storefront?
No, so we have 2 warehouse locations. We have one on the East Coast, one on the West Coast, but we are primarily an e-com dealer as well as a B2B distributor.
Okay. Do you sell on Amazon or?
Yeah, absolutely. So Amazon is one of our bigger channels for sure. We also have our website, which is powertoolplus.com. And then we have a dealer network of around 160 or so other companies right now that we can distribute to as well.
Let me see if my sales manager is here. We aren't really setting up folks at this time that sell on Amazon.
Okay.
So let me see if he's here, and he can sort of tell you what we require. You've got to purchase upfront, so much because we want you to stock and resell.
Yep, that's exactly what we do. So that wouldn't be an issue.
Okay. So let me see if he's at his desk. Hold on just a second.
Sure. So I've called these guys in the past, probably 3 or 4 years ago, and it's the same lady, I think, same receptionist that I spoke to like 4 years ago. And yep, they're definitely going to deny us. The only reason I called them is to get a good example of a conversation that is probably going to go poorly, just to kind of show you guys what these conversations look like. They've only got 2 or 3, looks like 4 or 5 authorized Amazon sellers. So I know that they're not looking for any more. This is honestly just for fun. I'm going to see how nice or mean this guy ends up being. If he answers, we'll see.
Jamie here, can I help you?
Hey, yeah, this is Corey Ganem. I'm with a company here out of Greensboro called Power Tool Plus, and we were interested in becoming a Whiteside dealer, and I guess I was transferred over your way as the sales manager there.
What Power Power Tools Plus? I'm not familiar with you. Where are you located?
Yeah, so we're headquartered in Greensboro. We're not a brick and mortar business, though. We do have warehouses one on the East Coast, so one up in Farmingdale, New York, and then one over there in Oregon. And we're primarily an e-com dealer and distributor as well. But we're just headquartered in Greensboro. And I know you guys are is it Claremont, North Carolina?
That's correct.
Okay, so not too far.
Hickory Foothills. I'm very familiar with Greensboro. So you're out of your house, are you?
So that is the company is based out of the house because, again, we don't have a brick and mortar location. So it's not like we need any sort of office space, but we do have those warehouses up in, like I said, one in New York and then one in Oregon as well.
So what's your background? Are you from the tool business?
Yeah, so we've been selling tools for quite a while. So we purchased primarily from Medco, from ISN, and from Delegard. And yeah, I mean, we've been at it for quite a while, that's for sure.
No, not familiar with you at all. I'm from Greensboro, so don't. What's your name again?
My name is Corey Gannum.
And did you work for any tool companies in the area?
Nope. So we just started a retail business. This was probably 7-ish years ago. And yeah, like I said, we've been going strong ever since.
Retail business.
Say it again?
You said you have a retail business?
Yeah, so Power Tool Plus, our company, we are a retailer and distributor of tool and automotive.
Okay, but you're an online distributor, basically. But I thought you meant brick and mortars retailer. Okay, I got you.
Yeah, sorry.
We're not. We don't do any business with just strictly e-commerce folks. So we sell through a network of stocking physical distributors, and then we have a core group of e-commerce dealers that we work with, and our philosophy is to keep it tight. So we're not expanding at this point.
Sure. No, and I get that. But with that said, right, so we are a stocking distributor as well. We don't require any sort of drop shipping services. And there are... Go ahead.
No, I fully understand. It's not our business model, but I do appreciate you checking in.
Okay, understood. Well, I mean, while I have you, right, is there any sort of exception that could be made? Because there's at least, I'd say, 3 to 5 SKUs that, I mean, we'd be looking to purchase today if we could, get approved to the tune of probably 30 to 40K would be that opening PO. And then we kind of go from there.
So why would you give us an order for $30 to $40,000 to start?
Well, because we know the product sells well, we know we can move it. Like I said, Amazon is not our only channel, right? We are an e-com retailer. We've got our website, which is powertoolplus.com. And then we've got, which is what I was telling the lady that I spoke to earlier, about 155 to 160 dealers in our network that we distribute to as well.
Yeah, I really appreciate it. It sounds like you have a wonderful business, but it's just, we just have a different philosophy. We believe that, that pie will just be divided a great deal more. We have a strict MAP policy, so it's not going to be sold by price. And I think we have a bunch of our competitors where we want them because they're stuck in a race to the bottom. And it's just not a place where we want to go right now. But I really appreciate you checking in. It sounds like you got a great business, but it's not something we're looking at this point.
Sure. And I get it. And I'll let you go. But I have one more question before I let you go. So you said you've got that core group of folks, I believe, that are authorized there for Amazon. What are they doing as far as like kind of getting the listings cleaned up? Because I just pulled up, for example, one of the products real quick. It's the router bit, the RU2100. And again, this is just a quick observation, but the one listing that I'm looking at, it's only got one picture and it's pretty blurry. So I don't know if, this is something that your dealers are doing for you as far as making sure the product's represented in a good light. Just wanted to see kind of what you guys were doing on those fronts because we do have experience there as well.
Understood. And that's something that is being worked on. I won't comment further than that. I agree that there's a great deal of work that needs to be done on the site. So.
Yeah, because I looked at the product I want to say probably a year or two ago, and I think it was the same case at that point. So, but you guys, so you said you're taking steps to kind of get that cleaned up and get those listings touched up?
Yes, we are. So, we're fully aware of the site's limitations.
This guy's a fucking idiot.
There's a great deal to be done, and I won't comment further there. Things are happening.
Okay, perfect. Well, hey, how about this? I do swing by, or not, I don't swing by, I pass by Claremont a good bit. Would you guys be opposed if I popped into the office just on one of my next trips? It probably won't be for the next month or two. But if I'm in the area, I'd love to just kind of pop in and kind of see the facility and see if, it might be a better time.
We don't do tours to folks. We don't show our factory often to folks we don't know, quite frankly. But give us a holler if you want to stop in to say hello. Sorry, I just don't know who you are.
Yeah, right. I know.
I'm not going to come in and show you my factory.
Yeah, no, I understand. I mean, sure, of course. Well, again, this is our attempt to kind of do some business with you guys. Like I said, we've been working with multiple large distributors in the industry for a number of years, so that's the reason for the call, right?
Understood. No, I appreciate your interest, and again, it's just not our business model. So do appreciate it. I wish you the best, and have a good day.
Yes, sir. You do the same. Thank you.
Good morning. This is Matt.
Hey, Matt. This is Corey Gannum. How's it going?
Well, I'm doing good. I'm sorry. Your first name's Corey?
Yeah, so my name's Corey. I'd left you a voicemail late last week. I had spoke to Tom over in your customer service because and he had given me your information. So we were interested in becoming a distributor direct with ICM. We currently buy through Ari Michael, but my rep at Ari Michael said that there were the couple of part numbers that we were particularly interested in from you guys, or I guess Ari Michael doesn't carry. So my rep recommended we go direct to you guys. That's how I got to talking to Tom, and then he gave me your info and said you cover Charlotte. So I just wanted to give you a call.
Yeah, I'm actually based out of Massachusetts, but I was just in Charlotte 2 weeks ago.
Oh, nice. Yeah, I live here local, and I'm born and raised in Greensboro, North Carolina, so not too far away either. But yeah, I heard you were the guy.
Yeah. Now, I did get your voice message, and I apologize for not calling you back. It's total chaos, this time of year.
Yeah, I get it. No worries, man.
I mean, it is for everybody, right? Hopefully for you too.
Yep, in a good way.
Yeah, exactly. Now, what type of company are you?
Yeah, so we are. So the name of our company is Power Tool Plus. So we're primarily a retailer and distributor of tools and automotive products, but we have started to kind of get into the industrial space. Hence, working with Ari Michael, selling really all kinds of products across that board. So that's why I wanted to give you guys a call directly, because there were, like I said, a few specific ICM part numbers that we were like, hey, we think we can do some decent volume on these, but I guess Ari Michael, one, doesn't carry them, and two, I guess doesn't have the ability to special order them. So yeah, that's kind of a quick background.
Yeah, well, that's interesting because they're one of our largest customers nationally, and between me and you, they can order anything they want. Right?
Well, that's what I thought. That's why, and my rep, he's a good guy. Like, we have a good relationship. We've done good business with him, but he was like, yeah, like, I looked in our system, I don't see these part numbers. So I'm like, well, I guess I'll give him a call direct, but I figured the case.
Yeah, right. And, we can, figure it all out. So I want to go on your website. What's your website?
Yeah, so that would be it'd be powertoolplus.com, and Power Tool is singular.
Power Tools, and plus is PLUS.
Yeah, and Power Tool is singular too. I need to always specify that because people usually default to plural.
Okay. Oh yeah. Okay. So you're selling, you're like 100% selling online, correct? Power Tools Plus. I mean, who's your number one customer? I guess. I mean, is it Mr. Jones looking tape?
Good question. Yeah. So to answer the first question, as far as the online channel, so yeah, we are 100% online as far as our retail is concerned, right? So we do a bit of distribution as well. We've got about 150 or so dealers throughout the country that we distribute to. So on the distribution side, that's our, I guess, kind of our bread and butter customers, the kind of like the smaller mom and pop shop. And then our retail, I guess our regular retail customer would be exactly like you said. It's Mr. Jones, either he's a DIYer or he's just the end customer looking for that one part number that maybe he's having trouble sourcing through traditional channels, whether that be your Lowe's or Home Depot, or whether that be any of your other e-com channels that he just can't get his hands on that part.
Understood. And like, Milwaukee, are you guys buying Milwaukee direct right from Milwaukee?
So I wish we were. We're actually buying Milwaukee mainly through Medco and then Delegard are two of the larger.
Sure.
Yeah, and we've been working with, well, I guess with Medco for quite a while. Delegard more so over the last 2 to 3 years, but they've been great. So that I'd say those are kind of the two bigger suppliers on the Milwaukee tool side.
Got it. And so I'm just looking at your products. I mean, you're not really. Are you selling any HVAC equipment or accessories?
So not a ton at the moment, as obviously you can see there from the website, but I think I mentioned earlier, that is kind of an adjacent category that we're looking to dive into, because obviously, as I'm sure you are as well, always looking to expand the business. We've done great with tools and automotive for a number of years now, and that's hence the, the relationship with Ari Michael and some of the products there. And we've even been in talks with Snyder, who's an HVAC product distributor here locally. And that's just a space that we're looking to break into, which is why I'd mentioned, I was like, well, hey, there's a few specific part numbers that you guys have where I'm like, hey, we're not going to go the full line to start, but I think ICM seems like a good candidate. And I think these specific part numbers are probably a good place to start. And that was kind of like the thought process there.
Right. Got it. I'm just asking these questions just so that, I get a better understanding of, what you guys are doing. And,
yeah.
Well, do you have a long list of ICM products that you're interested in?
So it's not super long, but I'm looking at a couple of them here just right off the top. And now this is just a short list of kind of the ones that we want the most. But, we did, or at least my team did a deep dive into the catalog. And I think we've got like 10 to 15 or so total on the list, but there was like 3-ish that we were looking to start with. And if those go well, we were looking to expand from there.
Okay. What are the top 3 that you're interested in?
Yep. So the first one here is the ICM 517, the single phase surge protector.
Yep.
And then let me see here on my list. So another was the ICM 493.
Perfect.
And then another was the ICM 281.
Okay, interesting. The 517 is actually A at the end, which had a slight modification.
Okay.
To the product, no physical functional difference, but that product there is the best-selling, most best surge protection product in the marketplace.
Mm-hmm.
And the 493 is an excellent surge protection line voltage monitoring device. So these typically would be installed with inverter technology equipment, ductless mini splits, that kind of thing.
Mm-hmm.
Is that where you're seeing these being installed?
Yeah. So, sorry. Go ahead.
Yeah. No, I was just going to say with your customers.
So like I said earlier, right, our customers are mainly on the DIY side. So as far as what they end up doing with the product or how they end up installing it is a little bit out of our purview. But we do survey customers from time to time and say, hey, what lines do you guys want to see as far as repeat customers? What lines do you want to see? How are you using the product? How should we be servicing you better? So we do get some customer insight, but at the end of the day, the majority of the retail side it's more transactional, right? And I wish it weren't, but I feel like that's just the way, you know, some of the retail is going these days, unfortunately.
Right, right. Yeah. Well, those those are three top selling products for ICM. If you didn't know, ICM, we're based out of Syracuse, New York. We are a U.S. manufacturer. So products that you were just mentioning, and a lot of all of our other products are all manufactured right in the U.S.
I love that. That's great.
Yeah, it's really, really cool stuff. Now, what I don't want to do is, irritate, our biggest customer, Ari Michael.
Mm-hmm.
If you're currently buying from them, it's kind of a double-edged sword for me. And again, I'm just being honest with you. We would certainly be interested in, selling you.
Mm-hmm.
We just have to do a little bit more, get a better understanding from the Ari Michael side, that you're again just not a customer trying to buy better, instead of not buying through Ari Michael. Because,
Sure.
I mean, Ari Michael, they've got the 517As, the 493s. Those are in stock in their distribution network. They're readily available, any day of the week.
Well, that's so weird because, like I said, when I talked to my rep, I mentioned these 3 part numbers by name, and I was on the phone with him, not even over email. He was like, "Yeah, I'm looking these up. I don't see them in our system." I think with the with the 517, I didn't know that there was an A at the end of it, so that's probably why that one didn't come up on his end. But I mean, he literally told me, he's like, "Well, hey, we can't get these, so go directly to them." But it sounds like it was just either a misunderstanding on his part or a miscommunication on my part. So, I mean, we have no issue going through them if that's what's required. Again, I just called you because my Ari Michael rep literally told me to.
Right. He's like, a couple pieces here, a couple pieces there, but at the end of the day, right? Short term, we got to just do a little bit of research,
Mm-hmm.
get a better understanding of, what the situation is.
Sure.
But long term, I mean, can we sell you? Of course. There's also other outlets, out there. I mean, we do have minimum freight requirements and things like that.
Mm-hmm.
You can't just order, I want to order one piece.
Yeah, and we wouldn't be ordering just one piece at a time. And just out of curiosity, what is the minimum there? I don't think we'd have any issue hitting it, but just so I know for my buying team.
It's $2,000 is full freight allowed.
Okay, yeah, easy enough. I don't think there's really any scenario where the opening order would be under that amount, so that should be no issue.
Yeah, I mean, I've got $1 million customers that complain, I need one piece. I know, but you got 600 locations. It's an order.
Right, yeah, exactly. It makes it a lot harder on you guys, I know, from a logistical perspective. When somebody just wants one piece, it's like, hey, you either hit the minimum or you don't, right? So trust me, I know how it is, and I think hopefully you'll come to find that we're a pretty easy customer to work with from that perspective.
Yeah. Now, do you guys have a brick and mortar office facility that you work out of, or is everybody remote?
So everybody's fully remote. As far as our distribution centers are concerned, so we have a primary DC in New York, and that's in Farmingdale, New York. We've got another over in Oregon for the west coast of the country, and then we've got one in Indiana as well for the Midwest portion. So as far as like a corporate perspective, we're remote, but from a distribution perspective, 3 primary locations. New York 3PL, Indiana 3PL,
Is that
West
the
Coast
first
3PL.
one you said?
So the first one is in Farmingdale, New York, and that's our primary. That's our primary ship to, and most of our orders go to that location because we just found most of our customers are on the East Coast for whatever reason.
Well, yeah, I mean, Farmingdale.
Oh, sorry. Say that one more time. I think you broke up a little bit.
Yeah, because we're having just a little delay there. But Farmingdale, that's that's New York, Long Island, so that's an expensive real estate there.
Yep. And so we've had, well, I guess it's a location that we've contracted out of for a number of years. But yeah, it's a great facility and a lot of space, great operation there, and that's where we receive most of our deliveries.
Who owns your company?
So I, along with my dad, we actually started it together a number of years ago, and I'm the principal buyer. I'm the kind of chief bottle washer, if you will, and and he's my partner on the back end. So that's kind of the ownership makeup there.
Okay. Father son, can't get any better than that.
Yeah, exactly. It's been great. I've unfortunately I've heard some horror stories from people who they get into father son businesses or they get into family businesses, and a lot of times it doesn't end too well, but we made a pretty good run of it and we have a good time. So no issues on my end.
Do you have my email address?
Let's see. I don't believe I do.
Yeah.
Let me write that down.
Yeah, it's first initial, last name, so M Conant, CONANT at ICMcontrols.com.
Got it. Okay, perfect.
And if you don't mind, send me an email with as per conversation here, and let me just do a little bit more research, and I'll definitely be back in touch.
Perfect. Fair enough. I will get that email sent over to you here shortly. And I know this week's crazy, like you said, so I'll give you some breathing room, but I might check in with you probably early next week once I get back into the swing of things if I haven't heard from you, if that's okay.
Of course. So are you the Ari Michael location down in North Carolina?
Yeah, so and they've got a few here even in the Charlotte area, but let's see, my rep and the one I buy out of is the one on South Park Boulevard, I want to say, or actually, hold on, let me look. I can give you the address. It is the one out of, Wood Park Boulevard here in Charlotte.
Wood Park.
Yep.
Okay.
And I can give you my rep's name as well, if you'd like.
Yeah, sure.
It is Christopher, and I'm going to butcher his last name. I actually need to look it up, but I think he's the only Christopher at that location. Do you want me to grab his last name as well?
If you got it handy.
Yeah, I do. Give me 1 second here.
AS.
Yep.
Perfect. Yeah, I mean, I'm not going to contact them, but it's just good to have.
Yeah, right. I figured it might help should we need it. So if there's anything else you need, yeah, just let me know. I'll send over that email here in a second, kind of summarizing things. And if you need more information from me, let me know. I'll be working this week up until Wednesday evening. And then obviously taking Thursday and Friday off. We'll be back at it on Monday.
Awesome. Well, great. Well, appreciate the follow-up call. And, if we don't talk, have a nice Thanksgiving.
You do the same. Yep. And I will look forward to talking to you soon.
Excellent. Thank you very much.
All right. Thank you. Bye.
Okay.
Hello, this is Corey. Hey, Trey. How's it going, man?
Not much. I got this list put together. What did you guys decide on the pegs, on the actual tubing?
So let's see. Do you mind sending over a list of the tubing products? Because I didn't see when we were doing our research, I didn't see a whole lot about those products. Do you have more information about them?
Yes. The best way is on our website, and it's under resources.
Okay.
And it has the full catalog with pricing and everything.
All right.
I mean, all email and just shoot you over the link to it.
Yeah, that would help for sure. I know that when I was sitting down with my team, those were the exact part numbers that they had come up with. So I think those are the main products of interest for now. I can certainly have them go back in and do a deep dive on what would be required, but I know that since we're selling them on more of a retail basis, it's not like we need, every single piece of the puzzle, if that makes sense.
Yes. Okay. Couple other things. Some things that popped up. So you want the ship to address as this location in Farmingdale?
That's correct. That's our main warehouse here on the East Coast.
Okay. So you guys are gonna, when I looked up that address, it came up with Metro Office Systems.
No,
with them?
So the name of the company at that address is 3P Shipping. They're just a 3PL, right? They're essentially our outsourced warehouse. So they perform 3PL services on behalf of multiple clients. We're one of their clients, but they essentially act as our warehouse.
So you guys aren't touching anything.
Well, so we're touching inventory in the sense that our 3PL is handling it, right? But as far as the logistics side of it, yeah, that's all handled by them.
Gotcha. To be honest with you, man, I don't think they're gonna go for that. Along with, because the address in Greensboro is a house. I don't know if that's your house or what. And then it's a DBA account out of New York who's a 3PL. I can try, just to be completely honest with you, man, I don't think it's going to go through.
Sure. And just to clarify real quick too. So again, the business, because we're primarily e-commerce, we do operate 100% remotely. So again, the reason for the 3PL in New York is because they handle all of our inbound inventory and all of our shipping, and they inventory the product for us, right? And then the LLC location is simply at my house because, again, I don't need an office. I don't need any sort of space like that to run what is now a multiple person business. And then, so that, again, we use that warehouse there up there in New York. We have been for years, and they've handled all of our inventory for years.
Okay. All right. Well, I just needed a little bit of information. I sent you the information on the text.
Okay.
So if you would, let me know about that. But as soon as I get a chance to talk to my boss, I will get back to you.
All right. Sounds good. I appreciate the follow-up.
All right, Corey. Thanks, man.
All right. Thanks. Bye. All right, now that we've spent a bunch of time going over exactly what a good brand looks like and how to find brand leads, now we're going to talk about how to work with distributors, okay? Because distributors can be a fantastic source of products for your business. And I happen to work with some great distributors that I've been working with for a few years. They are authorized by the brand. They know that we sell on Amazon, and they're really profitable and can be a really good source of products. So I'm going to jump into my screen and show you guys our distributor criteria, and I'm going to explain to you exactly how I developed this criteria over the years. So if we jump into my screen here, you'll notice it's a similar document to our brand criteria sheet. And when it comes to vetting distributors and making sure you're working with distributors that are going to be a good fit for your business, it's similar to the brand criteria. It's just 3 simple criteria, all right? And just like our brand leads, we're going to run our distributors through the same set of 3 criteria every single time. So first and foremost, I'm going to explain these 3 criteria. So criteria number 1 is we want to make sure that they carry brand name products that are already selling well on Amazon. All right. Now, I'm going to explain to you how I developed these criteria. So this was this was about 5 years ago. I had reached out to a distributor of pet products. And in fact, they were specifically equestrian products. And I was talking with the owner. I looked on their website for a little bit of time, but I didn't really dig too deeply into it. And the owner says, "Hey, love what you're doing. Great. I'm going to send over a spreadsheet of all the products that we carry. Let me know what you want to buy." So I said, "All right, great. I'll keep an eye out for it." She sends me this spreadsheet. And as I'm going through it, I notice there's no brand names. There's nothing except a description and a price. And what I came to realize is that the list of products that she had sent me, these weren't branded products. These were just generic products that anybody could slap their own brand name on. If anything, they were a better fit for a private label seller who was going to then take those products and brand them themselves. So I called her back up and I said, hey, I have the list here in front of me. What brands are these products from? And she said, well, these are unbranded. These are just generic products. Most people take these products and brand them themselves. And so that led me to developing this first criteria, because there's no sense in us wasting our time sourcing from or working with a distributor that doesn't carry brand name products that are already selling well on Amazon. If we wanted to sell generic products, we would just be private label sellers, because then we would take the time to develop the branding ourselves, market those products, and turn them into a brand that we own. So that is how I came up with that first criteria. Now, the second criteria is we want any distributors we work with to sell to retailers. Now, they don't have to only sell to retailers, but we want retail to be one of their primary customer segments. And I'll explain how I came to this criteria. So this was really when I first started in wholesale. So this was about 2019. I called up a distributor and I'm having a conversation with the sales rep. And so far in our conversation, they met criteria number one. They carried brand name products that were already selling well on Amazon. Lots of big, say Procter & Gamble type brands, health and household brands, kitchen brands, right? A lot of brands that I really wanted to sell. They also met our third criteria because they were primarily business to business, which I'll get into here in a second. But when I got to talking to the sales rep, once we submitted our application, they denied us. And so I called him up to understand why it is they denied us. And he said, well, hey, love what you guys are doing. I can see you'd be a good customer, but you're just not a fit for us because we primarily only sell to hospitals and government organizations. We don't really sell to retail. And that's when the light bulb went off in my brain that a distributor can meet criteria number one and criteria number three, but if they don't work with retailers, then we're wasting our time, because distributors that sell to retail know the types of margins that we need. They know how our business operates, and they're going to understand us better than distributors that, in the example that I used, only work with healthcare companies and the government. So that is how I came up with that second criteria. And then lastly, criteria number three, we want our distributors to be primarily B2B, which means business to business. Now, the opposite of B2B is B2C, which stands for business to consumer. Business to consumer companies would be anybody like a Walmart or like a Costco or like a Sam's Club, really just any business that sells to the end consumer. We are not an end consumer. We are another business. And this particular criteria I came up with because I was working with a lot, or I was not necessarily working, but I was attempting to work with a lot of companies that on their website would sell to anybody. You could log onto their website, you could create an account with no barrier to entry at all whatsoever, and you could place an order that same day. And what I came to realize is that these companies were not even distributors, even though a lot of them had the words distributor or wholesale or supplier in their name. They were glorified retailers. They were selling to anybody that had a pulse, anybody off the street. And we want there to be a barrier to entry in the form of, I want them to verify that I'm a legitimate business before they work with me, right? Otherwise, we might as well just go do online arbitrage if we just want to buy from other retailers. And I'm sure, I can guarantee that a lot of people watching this video going through this free course, this is probably a light bulb moment for them, because I swear to you, I spent years, probably 2 years, spinning my wheels with suppliers or distributors that I thought were distributors, but they weren't actually distributors. They were just retailers calling themselves distributors because they sold to the public. They sold to anyone and everyone. So we want to work with B2B distributors because they tend to have better pricing. They understand our business. They're going to offer credit terms, which is something that we'll get to later on in the course. And in general, they're just easier to work with. So that is how I came up with these three criteria that you see here. And a quick explanation of the criteria here. I kind of went through this already, but just to hit the point home even farther, again, criteria one, we want brand name products that already sell well on Amazon. it's because we want to target that brands that and products that have existing demand. All right. We don't want to create demand from scratch. If we wanted to create demand from scratch and own the brand, then we would just go and do private label, right? We want to target either niche brands that 98% of people have never heard of, but still sell well on Amazon, which is a great strategy. Or we can target large brands like, for example, Head and Shoulders Shampoo or Samsung Electronics or Milwaukee Tools. Okay. Criteria number 2, we want to work with suppliers that sell to retailers, because when we work with distributors that sell to retailers, they're just easier to work with. All right. And if we fit the mold of the type of customer that this particular distributor is used to working with, it just makes the relationship that much smoother. For some of the reasons that I mentioned earlier, they understand our business, they understand the margins that we need to hit, they understand the volumes that we're going to be buying. They just get our business more than a distributor who doesn't work with retailers would. And then lastly, we want them to be primarily business to business, because they tend to have better pricing than those who also sell to the end consumer, right? Remember the example I gave where I spent a lot of time, in fact, years, targeting distributors that weren't actually distributors because they weren't B2B. They sold to the end consumer. And I was looking at the pricing on their websites and I'm like, the pricing on these distributors' websites is literally the same as the price on Amazon, sometimes even higher on the distributor website. So that is why we target suppliers that are B2B. Okay, so I hope this explanation was useful. Next, or at some point in this course, we're going to go through some examples of distributors that meet this criteria, and I'm going to walk you through exactly what those look like. All right, now we're going to take a look at 7 distributors that fit the criteria that I just went through with you guys. Now, if you want a copy of that distributor criteria PDF, there's going to be a link in the description below for you guys to grab that 100% for free. And what I would recommend is downloading that resource and have it up in a second tab for you to refer back to as you're going through doing your research and finding these distributors on your own. All right, so I'm going to jump into my screen and we're going to look at a few specific distributors that meet this criteria. So first and foremost, we're going to look at this one first. This is called Johnston Companies, and we're going to always refer back to our criteria. And again, I'm going to run through these a little quickly because it's the same process every single time. It's super repetitive. So first, we want to look for distributors that carry brand name products that already sell well on Amazon. All right, so looking at their website here, what I would like to do is like to click on line card, and that just means what brands they carry. All right, line card simply means the brands that they offer. So here we can kind of do a quick spot check and see if we recognize any of the brand names here as being ones that sell well, or that we at least recognize. Because if we recognize the brand name, then they probably are selling well on Amazon. All right, so the first one I see here is 3M, right? 3M is a huge brand. We know that sells well. Channel Lock, I've sold before. I know that's a big brand. Klein is a huge brand. More 3M. Let's see. I mean, right off the bat, this one would meet that criteria because I recognize some brands that are selling well. So it meets our first criteria. Second criteria, we want to make sure that they sell to retailers. Now, this is always going to be it's tricky to determine the second criteria because some distributors on their website, they will have a tab that, for example, says markets we serve or customer segments, right? And sometimes in those markets we serve or customer segments, they will specify retail, but not every distributor does. So a lot of times it is difficult to determine if they meet the second criteria. So what I always do is that unless we can specifically disqualify them, unless they say somewhere on their website specifically, hey, we don't sell to retailers or we only sell to government, for example, then I'm just going to assume that they will sell to me as a retailer. Now, how do we determine that? Well, a lot of times we like to read the description on their website, read their About Us page, and see if we can gather data from their website. So right here, Johnston Companies provides maintenance, repair, and operation supplies to a variety of industries, including aerospace, fabricators, machine shops, metalworking, and more. So right here, this would be the industries they serve, right? Aerospace, fabricators, machine shops, metalworking, and more. So technically we could probably fall under the category of machine shops because we are selling machine type products, we're selling tool type products, or we might qualify under and more, right? So I'm going to assume that we would be able to fit the criteria of the customers that this distributor sells to, that we would be one of their normal customer types. So I'm just going to assume that we meet that second criteria. Third criteria, we want to make sure that they are primarily B2B. Now, it's not every distributor is going to come out and say on their website, hey, we only sell to other businesses, or hey, we don't sell to the public. Some will, but many won't. And so how we determine this third criteria is, can we just buy something off their website without filling out any paperwork, without jumping through any hoops? So the way that we determine that is right here. I see there's a sign in, and obviously we don't have an account, so we can't sign in. Request a business account to place orders, view pricing, request a quote, and view order history. Please request a business account. Okay, so that is a good sign. Right here, they're making us enter our name, our company, our location, our email address, and our phone number, and then we submit a request, and then they contact us as soon as they can. All right, so that's a good sign. That leads me to believe that they are only business to business, because I can't just log onto their website and buy something, right? That's a good thing. So this distributor meets our criteria. They clearly carry brand name products. It looks to me like they sell to retailers. And then lastly, they're business to business, because we must request a business account before they will even give us pricing, much less sell to us. Okay, so Johnson Companies meets our first criteria. Second one is Mid-State Tool. And I have bought quite a bit from Mid-State Tool in the past, so I can confidently say that this distributor is a good fit, but we're going to run through our criteria like we always would. First, we want to make sure they carry brand name products that already sell well on Amazon. Right here under featured brands, I see this brand, which I've sold, DeWalt, Gear Wrench, Chicago Pneumatic, Astro Pneumatic. So I've sold a couple of these brands before. So right away, I'm able to determine that they meet our first criteria. Second criteria, we want to make sure they sell to retailers. Now, do they say anywhere on their website who they sell to? Let's look at About Mid-State. All right, that's typically where, if they're going to say anything about who they sell to, it's going to be in the About section. So they were founded this time. Inventory expansion, warehouse sales distribution. It's a warehouse distribution of automotive and industrial hand and power tools, auto body supplies. It has progressed from regional distribution to national, and then now onto the international marketplace. Broaden the range of customers it services from the automotive jobber and hardware dealer to the industrial supplier, marine supplier, and corporate franchised mobile tool seller. All right, so we would technically be a hardware dealer, because dealer just means a retailer, and we sell hardware products. We're technically an industrial supplier. We sell industrial products. We're technically a marine supplier. We can sell marine products. All right, so we definitely fit the mold of the type of customer that Mid-State Tool is typical to working with. All right, so they definitely meet our second criteria. And then lastly, we want to make sure that they don't sell to the public, that they are B2B. So in order to determine that, let's look at the brands. Let's just look at some of the products they carry and just make sure that we can't just buy something off their website. All right, so they've got the pricing on their website. They've got the ability to add to cart. Now, if we go to cart, so it's not going to let us check out here, right? So that's a good sign, because we have to probably have an account with them. They have to activate that account. We've got to talk to a sales rep. We've got to be vetted by their team in order to buy products off their website. All right. And again, from experience, I know that the pricing on their website is their list pricing. That is retail pricing. That is not the wholesale price that we would be getting as a customer of theirs. Okay. So Mid-State Tool definitely meets all three of our criteria and would be a great fit for us to work with. Next, new tool and supply. So again, same process every single time. First and foremost, we are going to determine if they carry brand name products that already sell well on Amazon. I've sold Lyle, I've sold Sunex. I'm not Ungated in DeWalt, but obviously DeWalt's a huge brand that sells really well on Amazon. Gear Wrench, Streamlight, right? And we can even go and view all the brands they carry. So this is the full list of all the brands they carry, and a lot of these are really big brands that sell really well on Amazon. Okay, so they meet our first criteria. Second criteria, do they sell to retailers? Now, let's look at the About Us to try and determine. Are you an automotive or industrial distributor? Get access to online ordering, pricing, and promotional offers. Okay, so we would qualify as an automotive or industrial distributor, right? Because we sell those types of products. So if we look here, if we look any deeper, it doesn't look like there's a whole lot more information aside from proudly serving our customers since 1964. New Tool is a wholesale distributor of tools and equipment to automotive and industrial resellers. All right, we are an automotive and industrial reseller. That's a perfect fit. That's exactly what we are. All right, so New Tool and Supply absolutely meets our second criteria. Lastly, we want to make sure they're B2B. Do they sell to the public? It doesn't appear that that is the case because there's nowhere for us to just buy products off their website, which is exactly what we want. So if we come down here and register with us, or better yet, if we come up here and click on new account, what is the process they make us go through? Are you a retailer focused on buying and selling tools and equipment? That's exactly what we are. If so, please begin by filling out the form below. So this is essentially their application form that we would need to fill out and submit in order to even get pricing and begin working with them. So this is a perfect fit, perfect example of a distributor that meets all of our criteria. Next, Kroll International. All right. First and foremost, do they carry brand name products that already sell well on Amazon? I'm seeing Under Armour as being one of the brands that they carry. I don't know about you guys, but I have not found many legit wholesale distributors that sell Under Armour products, and Kroll is one of them. Okay, so right off the bat, we see a brand that totally meets our first criteria. Next, let's see, and what you can do is just come up here and click on brands. All right, they've got a brands tab that's going to show us all the brands they carry. And if you were to scroll through here, you'd probably find a bunch of brands that you recognize, many of which sell well on Amazon. So they meet our first criteria. Second criteria, do they sell to retailers? Well, are we able to just come in here and buy products off their website? Or sorry, that's the third criteria, would be whether or not we can buy products off their website. So let's look into that first. Are they B2B? Looks like we can't even see pricing unless we log into their website. All right. And in order for us to log into their website, let's see if we're able to do that. So I am a registered customer of theirs, so I can sign in and see pricing, but you have to be activated in their system. All right. You have to apply with them. Do they have an app? They have a become a dealer. All right. So you have to join the dealer network in order to get pricing and in order to buy from them. You've got to have an application. Okay. So right off the bat, that verifies our third criteria. You've got to be a business to work with them. Now, as far as do they sell to retailers, let's see if they have anything in their About Us that would tell us whether or not they sell to retailers. So About Us. For 40 years, they've been the leading wholesale-only distributor of law enforcement, public safety, military, homeland security, and shooting sports products for over 40 years. Our goal is to be a value-added partner to our dealers by offering world-class product lines. So dealer is another word for retailer. Okay, so that tells me that, yes, they sell to retailers. Kroll offers its dealers more than 200,000 products from over 200 of the leading manufacturers and suppliers. All right, so everything on their website is telling me that, hey, these guys are a good fit and meet all three of our criteria. Next, we've got R&H Wholesale Supply. Okay, so as always, going to run through our criteria. What brands do they carry? Do they carry brand name products that already sell well on Amazon? So do they have a brands tab, products right here? So again, we can't even log into their website until we have an account with them, which is a good sign. Now, can we click on and see the brands they carry? Okay, so if we click on any category, we can see by brand. Assa Abloy, that's one of the biggest brands in the door hardware space. All right, definitely sells well on Amazon. Schlage, huge brand, definitely sells well on Amazon. Masterlock sells great on Amazon. Kwikset sells great on Amazon, right? So right away, within a few seconds, we were able to determine that R&H Wholesale Supply meets our first criteria. Second criteria, do they sell to retailers? Let's see if they say anything in there about us that would give that away. They're a wholesale distributor of door hardware and locksmith supplies located in San Francisco. We carry 14,300 products and over 100 different brands. Do they have any sort of information about, let's look at their about us. Let's look at their policies. So new accounts, applications must be received and processed before items can be ordered or shipped. So that tells us that they definitely meet our third criteria, right? Because they're saying that, well, hey, you've got to submit an application and we've got to approve it before we're going to sell you anything. Okay, so that's a really good sign. They definitely meet our third criteria. Do they sell to retailers? So they're not saying anything specifically here about, hey, this is who we sell to, this is who we don't sell to. But again, from experience, I happen to know these guys definitely sell to retailers. So again, if we can't determine either a hard yes or a hard no from their website, whether they meet the second criteria, then we just call them and ask, and then we just confirm on our own. So R&H Wholesale Supply definitely meets all of our criteria. Next, we're going to be looking at Hans Johnson Company. Okay, so again, first off, we're going to see what brands do they carry, about us. Do they have brands on their website? Well, right off the bat, again, it might be a little tough to see here, but we are a regional distributor and we sell primarily to retail businesses who service their local market. We do not sell to consumers directly. So that tells us right there that they meet criteria 2 and 3. We sell primarily to retail businesses, okay? So they meet criteria 2. And we do not sell to consumers direct. They meet criteria 3. They are B2B. So the last thing we got to determine is usually the easiest criteria to determine is whether or not they sell brand name products that are already on Amazon. So if we go to web ordering, it's not going to let us log in. I actually don't have an account with these guys, but let's see if we can find their brand list anywhere online. So trade want book, about HJC. Now, I'm going to spoil this for you guys and just tell you that they do carry a lot of really big brands. I believe they're in the bike industry, the biking niche. And if we can find anything, let's look, Hans Johnson brands. Okay, that's just their homepage. About. Yeah, so they don't have brands information on their website. But again, I know from experience that they do carry brand name products and they meet criteria 2 and criteria 3. So even if we couldn't determine what brands they carry or whether or not, I already knew that that was the case, it's worth calling them up and just asking the main brands that they carry and they will tell you. All right, so Hans Johnson meets our 3 criteria, even though criteria number 1 is a little difficult to determine in this case. And then lastly, we have Automotive Systems Warehouse. As always, we're going to run the same 3 criteria. What brands do they carry? All right, do these brands already sell well on Amazon? Look at the brands tab, and right here, we're seeing a bunch of different brands, tons of different brands here. If we just look for some that are low-hanging fruit, so right here, 3M, obviously 3M is a huge brand. Armor All, that's a huge brand. Autel is a huge brand. I know this is probably pretty small on your screen, but really it just takes a couple of brands that you recognize for a distributor to be worth contacting, especially like a 3M. If a distributor carries 3M, 3M is a massive brand with thousands of SKUs. There are hundreds of potential products just from the 3M brand that we could sell. All right. So again, you don't have to look very far to determine if a distributor meets criteria 1. Criteria 2, do they sell to retailers? Let's look at about us, who we are. We are a warehouse distributor of automotive, paint, body shop supplies, and equipment. Access to 350 product lines. Our 8 distribution centers allow us to provide high level of service. Let's see. Continue to build partnerships. Okay. They've got, looks like they got a few different locations. Now, they don't specifically say who they sell to and who they don't sell to. But again, based on some of the information that we found earlier, for example, from New Tool Supply or the other tool distributor that we looked at, looks like this is kind of a trend that these warehouse distributors of automotive products are all over the place. So I'm just going to assume that based on the context here, that if we sell products in this niche, that we would probably have a pretty easy time fitting the mold of the type of customer they normally work with, therefore meeting criteria number 2. So I'm just going to assume that they meet criteria number 2 until they tell me otherwise. And then lastly, are they primarily B2B? Well, can we just sign in or create an account without any sort of bottleneck, without any sort of barrier to entry? So I'm a current customer but need an online account. That's not us, right? We are not a current customer. So let's click on Become a Customer. And this is where we have to go in and fill out all this information, right? But even then, we don't get to set up an account. We're just submitting a request, okay? So we submit that request off to their team. Chances are somebody in their inside sales department is going to call us up and vet us on the phone. Are we legit? Are we a real customer? What type of products are we looking for? All right, they're not just going to sell us anything we want just because we registered an account online. So this tells me that they are definitely B2B and they don't just let anybody buy from them. So that's a good sign. All right, so that was 7 examples of distributors that meet our 3 criteria. Guys, again, if you want this criteria checklist, this is going to be in the description below, 100% free for you guys. I highly recommend, as you're going through and vetting distributors, as you're finding distributors, have this PDF open in another tab where you've got this PDF right here and you've got a distributor right here, and you're literally just cross-referencing, making sure that the distributor you're looking at totally matches the criteria here. So I hope this is helpful, and we'll jump into the next section. All right, now we're going to get into a couple of tips that I recommend you guys use anytime you're vetting a new distributor. Now, these tips apply especially if you've never worked with a distributor before, or if you found them from a random Google search, or really regardless of where you found them. I recommend heeding these tips anytime you're working with a new distributor. So I'm going to go through each of these one by one and explain my reasoning behind them. So anytime you're working with a new distributor, all right, you should always Google Map search their address, because I cannot tell you how many times somebody has come to me and said, hey, Corey, can you vet this distributor for me? Can you tell me if they look legit? The first thing I'm going to do is I'm going to type their address, whatever address they have on their website, into Google Maps. Now, 2 huge red flags to look out for when you're doing this particular thing during the vetting process. One is if you type their address into Google Maps and it comes up as a residential house, somebody's house or somebody's, apartment, right? That is a massive red flag. Run from them like the plague. There's a 100% chance that either 1, they're going to scam you, or 2, the inventory they're selling you is fake. I had somebody come to me recently, somebody inside my wholesale network community, because I do this for our community members, and they said, hey, Corey, can you look at this distributor? They've got these water filters that I'm considering buying. Their pricing is really good, but can you just vet the supplier and just tell me if you think they're legit? So the first thing I did was type their address into Google, and what came up was the sketchiest looking shack of a house in New Jersey. And I immediately said to this person, I said, do not buy from this supplier, avoid them, block them. If anything, you should report them to the authorities, because I know with 100% certainty that the water filters they're trying to sell you are fake, especially because the pricing that they were offered was way too good to be true. These were products that were selling thousands of units per month, and the pricing that my student was being offered was like a 40% ROI. Way too good to be true. Avoid them like the plague, especially because they operate out of a residential house. The other big red flag to look out for when you're looking a supplier's address up on Google Maps is if it's a PO box. All right. Big, legit, authorized distributors do not have a PO box as the main address on their website. Now, their mailing address to their corporate headquarters might be a PO box, but they're going to have a warehouse, ideally multiple warehouses. Big distributors have multiple warehouse locations all around the country. So if the only address you can find for your supplier is a PO box, that is another huge red flag, and I would run from them like the plague. A legit supplier is going to have a business address that is either in an office park, meaning they have a huge office building for all their administrative staff, or it is going to be a warehouse address where if you Google search that address, it is going to come up with a big industrial building and a big industrial district of whatever city they're operating out of. All right, the second red flag. Now, this is probably the most common one that I run into because of how it used to be okay. All right, and I'll explain to you what I mean by that. So in the Amazon wholesale world, there are distributors that are authorized by the manufacturer to be an authorized distributor of their products. Those distributors are typically large companies that sell to multiple different customer segments, that have big sales teams, and they don't really know too much about Amazon. They don't know how Amazon works. They don't know how to sell on Amazon, and usually they don't care about Amazon. They're just looking to sell as much product as possible. Then you have what are called wholesalers, and wholesalers sit in between big distributors and retailers like you and me. And these wholesalers, 99% of the time, are getting product from either liquidation or they're getting them from somewhere that's not an authorized source. Now, a lot of wholesalers like to sell to Amazon sellers because these wholesalers are smaller, they're a little more nimble. Typically, they know how Amazon works. They know how to evaluate pricing relative to what the pricing is on Amazon. And a lot of these wholesalers, to make it easy on their Amazon seller customers, will give ASINs with their pricing lists. So if you receive a price list from a supplier and that price list includes the Amazon ASIN already on it, that is a huge red flag, because I can 100% guarantee that that wholesaler is not going to have paperwork directly from the manufacturer to prove the supply chain authenticity of that product. So if you buy products from these wholesalers, and if Amazon ever hits you with a Section 3 or an authenticity complaint, or they want you to prove where you got the product, the invoice from that wholesaler is not going to hold up. Just know that if you are provided with a list of ASINs with the price list that you receive from your supplier, that is a middleman. That is not going to be a legitimate distributor almost every single time. And yeah, the products might be profitable and the goods might even be legitimate, but Amazon themselves are not going to accept their paperwork as legitimate, and therefore you're going to put your account at huge risk. So if a supplier provides you with ASINs, even if the pricing looks good, even if the supplier is legit, even if they have a big warehouse address, do not buy from them, because you are putting yourself and your Amazon account in jeopardy by doing so. And it's only because of these supply chain requirements that Amazon over the last 1 to 2 years has gotten much stricter on. All right. Third tip for vetting suppliers is, whenever you can, please pay with a credit card, especially on the first order. Now, a lot of Amazon sellers don't like to pay with credit card because a lot of suppliers will charge a 2 or 3% fee in order to pay with a credit card. So our margins are already pretty low as it is, and then you add a 3% credit card fee on top, and that just makes it that much thinner. Now, the reason you should pay with a credit card, especially on the first order, especially if it's your first time working with the supplier, is the ability to charge back if your supplier ends up not delivering the goods or ends up sending you the wrong products and then ghosts you. Because I've seen this happen on many, many occasions. Somebody orders from a supplier. It's the first time they're working with that supplier. Everything appears legitimate on the front end, but that Amazon seller wired that supplier. They sent a wire to that supplier instead of paying with a credit card because they wanted to save that 3%. And then that supplier ends up running off with their money because there's no way to get a wire transfer back once you've sent a wire to somebody. So if you can, at all possible, use a credit card, especially on the first order, even on the first couple of orders, until you have a good working relationship developed with that supplier. All right, fourth tip. Now, this is a big one too, because this used to be okay. Well, not necessarily, but I'll explain what I mean by that. So a lot of legitimate wholesalers, right? Remember my definition of wholesaler from what I mentioned here in the second point. There are a lot of legit wholesalers who have legitimate product, who are legitimate businesses, but they operate only on WhatsApp. They blast out their deals on WhatsApp to all their customers, so that way, you know, they can get it in front of as many people as possible. Now, I bought from some wholesalers that operate via WhatsApp, but I don't anymore, and I don't recommend that people do at all, because again, those types of suppliers tend to be buying either at liquidation or without the brand having issued them proper paperwork. So you're taking a big risk if you ever have to prove the supply chain of that product. Now, where I would never, ever recommend somebody buy is off Telegram. Now, the reason I say avoid Telegram at all costs, never in your life should you ever buy anything off Telegram to resell on Amazon, is because 99.9% of the time, that supplier is going to be unauthorized at best or a scam at worst. A lot of wholesalers, a lot of suppliers with either fake product or, you know, they're just shady dealers, they sell on Telegram. That is just the nature of buying products off Telegram. I'm telling you this from experience. I've seen hundreds of people get screwed buying off Telegram. Avoid it at all costs. Delete the app from your phone. I don't even have Telegram installed. I've never even downloaded it in my life. So never, ever buy anything off Telegram. The only reason WhatsApp is a slight step up above Telegram is because WhatsApp is the standard communication tool for international business. And a lot of these distributors and a lot of these, you know, suppliers, they operate, I mean, they're sourcing internationally, right? They're buying products directly from the manufacturer. They're importing them from overseas, or they're buying them from China. So WhatsApp is not totally illegitimate, but Telegram is. Just, I hope that distinction makes sense. If you want me to explain further, feel free to leave a comment on this course, or you can send me a DM at Corey Ganem on Instagram. All right, next tip. Speak with your sales rep on the telephone before ordering. If you're only communicating with a supplier over email, or God forbid, you're only communicating with them over WhatsApp, please don't buy from them until you've spoken to them on the phone. I can't tell you how many times you can easily weed out a fake supplier or a scam just by trying to get them on the phone. In fact, I had a student before he joined the wholesale network, he got completely screwed by a supplier because he was only communicating with them over email, and he tried to get them on the phone a couple of times and they kept brushing him off. They didn't want to talk to him on the phone. They said, hey, we'll just talk over email. And that to me should have been a huge red flag, but he ignored it and he ended up wiring them. Again, another red flag. Don't send a wire on the first interaction, especially if you haven't talked to them on the phone. And he ended up getting scammed for $5,000. So if at all possible, please insist on speaking to your sales rep or somebody at the company over the phone before you do business with them. That way you'll get a better feel for who you're dealing with and how they operate from a communications perspective as well. All right, number 6, look them up on Trustpilot, okay? Trustpilot is a reviews website that I'm sure a lot of people are familiar with that is more legitimate than something like the Better Business Bureau. And I'll explain that in a second. But if a company has a good Trustpilot review, and ideally has a lot of reviews on Trustpilot, then chances are they're going to be a good company to work with. They're going to be relatively easy to deal with. And the second side of that is look them up on Trustpilot. But if they're not on Trustpilot, at the very least, look them up on Google My Business, okay? So I'm sure a lot of you guys have seen when you Google a business, on the right-hand side of the screen shows the Google business page with all the reviews, the website, the phone number, all the information about that business. So if a company has good Trustpilot reviews, ideally, or at the very least has good Google business reviews, then you can be pretty confident in moving forward with them, knowing that they are not going to rip you off and knowing that they are a good company to work with. All right, number 7, the reason I say to ignore the Better Business Bureau is because, and I didn't realize this until recently, but you can pay for an A+ rating on the Better Business Bureau. It is literally the site, like you can just buy a rating, right? I think you pay $600 a year for an A+ rating on the Better Business Bureau. So it is a complete scam. If a company advertises that, hey, we're A+ on Better Business Bureau, but then you see they have terrible Trustpilot reviews or terrible Google business reviews, then just know that that's a scam, because Better Business Bureau is, you can buy that certification. All right, number 8, ask others in your network, people that you trust, right? Don't go posting on social media, hey, I'm about to work with this supplier, does anybody work with them? Because people on social media are going to steal your leads. Now, if you trust people, and if you're in a community like the wholesale network, for example, then you can ask people inside that community and be confident that they are not going to steal your lead, for one, and for two, they're going to give you their honest feedback on what it's like to work with that supplier. All right, inside our wholesale network community, we even have a supplier blacklist of every supplier that somebody has had a bad experience with, or that has stolen somebody's money, or that has been a terrible communicator. You want to consult a blacklist like that if the community that you're in has something like it, or simply ask people that you trust in your network if they've dealt with that supplier before. And if they have, and if they've had a bad experience, they will tell you immediately and honestly about that experience, so that way you don't make the same mistake that they did. And then lastly, look up the age of the website of the supplier that you're dealing with. You can go to, I think it's like the Whois directory, WHOIS. You can go to that directory, and there's a lot of other websites that will tell you the age of a domain. So if you look up a website, or you're talking to a distributor or a brand, and that website is only 2 weeks old or 2 months old, then that is somewhat of a red flag. Now, it's not a deal killer, because there might be an explanation, there might be a reason as to why that is a relatively new website. But typically, especially when it comes to distributors and established brands, their websites are going to be years old. These are brands and distributors that have been around for a long time, and chances are their website is going to be multiple years old as a result. All right, so I hope these tips are going to help you guys avoid getting screwed by some shady suppliers. Let's jump into the next section. All right, now that we've gone through what to look for in a distributor, let's jump into my screen and let's actually find some qualified distributors using Google. So I'm going to jump into my screen and I'm going to show you guys exactly the search terms that we use and how we look for distributors on Google, which is probably the easiest method out there for finding distributors and finding a lot of distributors relatively quickly. So again, as always, we're going to have our distributor criteria pulled up here in this tab so that we can refer back to it at all times. And again, guys, remember, you can get a free copy of this PDF of this distributor criteria sheet at the link in the description below. So if we jump into Google here, all right, so there's a couple of ways we can search for distributors. There's a couple of specific search terms that we can use. One search term, or one particular phrase that I like to use, is city, state, and then category name, and then the word distributor, all right? Or some combination of those. So here's what I'll give you an example of that. So let's just say we're looking for tools, all right? Let's say we want to buy tools. And I live here in Charlotte, North Carolina. So I might type in something along the lines of tool distributors, Charlotte, North Carolina. All right, so we've got category name, the word distributors, and then city/state. So it's that simple string of text. Now there's a lot of different ways, a lot of different search terms that we can use, but let's start with that for now. So what I'll do here is now I'm looking at some of the results that come up, and I'm going to be a little choosy with how I choose to kind of open, which one of these I choose to dig deeper into and which ones I don't. So right off the bat, this first result that we see is from Yelp. Okay, so anything from Yelp, that's typically going to be a list of, it says best of Charlotte, North Carolina tool stores. That's probably going to be tool retailers. They're not going to be tool distributors. So I typically skip over any results from Yelp. Next is Northern Tool, which is a big tool retail store, right? They're all over the country. So I know that this is a retailer, not a distributor. So I'm going to skip over this one. And then next, I see Machine Tech, machine tool distributors in North Carolina. And right below, I see this description of, it kind of gets cut off, but it says serving South Carolina, North Carolina, Virginia, and West Virginia for over 25 years. All right, so I'm going to open this one up in a new tab to look at it a little further and see if it fits our 3 criteria. And then we're going to dive into all of our results at one time once we have a few different tabs open. So this one here, Little Hardware. Little Hardware is a hardware store in Charlotte, North Carolina that specializes in power tools, fasteners, saw blades, janitorial supplies. So this is clearly a store and not a distributor. So I'm going to skip over Little Hardware. Methods, machine tools. Again, this seems like more of a store as opposed to a distributor. So I'm going to skip over that one. This one, Tool Rush. We sell new and gently used tools and accessories for 50% or more off retail prices. All items are sold as is and must be taken on the day of purchase. So that tells me that this is probably more of just like a liquidator, or, they're not selling brand new products. This isn't a distributor. It looks like almost more of like a used tool consignment type store. And then we've got this one, Apex Tool Group, corporate office in Huntersville. That one might be a good fit. So let's open that one and let's look at these two that we've opened so far. So machine tech, equipment to meet your needs. Let's look at the About Us and see what these guys are all about. Who we are: machine tool sales, service, application support, and automation. Been serving South Carolina as a distributor since 1994. In 2005, we expanded into North Carolina. Has over 40 years of experience in the machine tool industry. Operates as a family business. Our sales and engineering support staff is trained on machine tools. Level of experience, okay. So that just tells me that they call themselves a distributor, but are they actually? Let's see the types of brands they carry. So if we click on machine tools, these are big. These look like, okay, yeah. So these are not necessarily the types of products that we're going to sell on Amazon. These are big industrial machines, it looks like. Obviously, it says machine tools. So yeah, these are huge, right? So this is not really something that's going to be a fit for us, not the types of products that we're going to want to sell on Amazon. And so because of that, it's not really worth looking at them further, because if they don't carry the products that we'd want to sell, then who cares if they're B2B or if they sell to retail, right? So we're going to skip over them. And let's go in here to Apex Tool Group. All right, women in tool. ATG is a great place for women to build a dynamic career. Okay. Apex Tool Group manufactures leading hand and power tool brands around the world. Okay, so here I'm seeing Gear Wrench, which is a huge brand that I've sold before. Apex Tools is also a big brand that I think I've sold before. And they've got, looks like that's kind of their homepage. So if we look at brands, hand tools, Gear Wrench is one of them, right? Let's look at power tools, Weller, Cleco, Apex. So it looks like they only carry these hand tools brands and these power tool brands, right? Now, again, looking at hand tools, Gear Wrench is a brand that I have sold before. And just based off this one brand alone, right? If I could open an account with Apex Tool Group just to buy Gear Wrench, then it would be worth it, because Gear Wrench has a lot of really good products that sell well on Amazon. So when it comes to our first criteria here, we really only need the distributor that we're looking at to carry one brand that's worth our time. All right. And in this case, Gear Wrench is that brand. So they definitely meet our first criteria. Second criteria, we want to make sure that they sell to retailers. Okay. So if we come over here to markets, this is going to tell us who they sell to. So they sell to the industrial market. They supply professional hand and power tools to the entire industrial sector. All right, technically, we are an industrial retailer or an industrial distributor. Okay, so I think we have a very good case to make as falling inside the industrial market for this particular distributor. Construction and DIY, professional contractors and DIY enthusiasts. They sell to those industries. And then lastly, electronics. The global electronic equipment product market is valued at well over $2 trillion per year. Most, if not all, major electronics brands turn to outside companies. Okay, so ATG serves this industry with products from Weller. So we could probably make the case that we mainly fall into the industrial category and potentially the electronics category as well, because I've sold some electronics products before. We currently do. And we could pitch ourselves as either an industrial dealer or an electronics dealer. So to me, we could meet this second criteria here, right? It looks to me like they would probably do business with us if we can pitch ourselves as being in one of those two industries. And then lastly, we want to make sure they're primarily business to business. So let's look on their website and see if there's anything that we can find that shows us or that tells us that they maybe would sell to consumers and therefore would disqualify themselves. So if we go to About Us, let's go to, so ethics, that's not really what we're looking for. Sustainability, not what we're looking for. Compliance, not what we're looking for. Let's see if we can find anything here. So I see a distributor login here on the bottom. Let's click that. Okay, so this is their customer link. Account setup or website support, call this number. Requirements. Okay, this is just requirements for to actually access the portal. So it looks to me like you can't just like create an account with these guys and start buying right away. You have to get approved, right? So contact us. Yeah, here's a distributor login. So again, there's no way for a consumer to log on to this website off the street with no credentials and just buy something from these guys. So that tells me that they meet our third criteria. They are business to business. They do not sell to consumers like me or you, Corey Gannum, or whoever's watching this video, right? So this particular supplier here meets our criteria, and we would add them to whatever CRM we're using or whatever spreadsheet we're using. If you're in the wholesale network, we give you a pre-built CRM that you would literally just copy and paste the information from this website into. But if you're just using a simple Google Sheet, then you would copy this Apex tool group information into your Google Sheet. Now, if we go back to Google, right? So that's the first qualified supplier that we found. I want to come up here and slightly tweak the search term that we're using here. I want to change this from tool distributors to tool wholesale distributors, Charlotte, North Carolina, and see if we get anything that's a little different. All right, so I tend to ignore any sponsored listings. That's just me. Sometimes people click on those, but I tend to ignore them. And I'm going to come down here and see if we can find any other distributors here locally that would meet that criteria. So again, this is a Yelp list. We're going to skip over that. This is a Better Business Bureau website. We're going to skip over that. Charlotte Tool Bank, we just talked about that. We're going to skip over that. Apex Tool, that's who we just looked at. H&B Tool and Die, Drill Brushing Charlotte, offers the highest quality tool and die supplies from the metal stamping industry, plus molds and mold components. So my gut tells me that there's probably not many brands in that category that already sell well on Amazon. I could be wrong. So maybe we'll open them up in a new tab and check them out. But if we keep going on, Yelp, we're going to ignore. Little Hardware we just looked at, we're going to ignore. AB Tools, Rotary Cutting Tools Distributors. That might be a fit. Again, I don't know if those types of products sell well on Amazon, but we'll open them up in a new tab either way. Let's see if we can find one more example here on the next page. Machine Tech, we just looked at them. This is a MapQuest link. Obviously, we're not going to look at that. Wholesale Tool, Industrial Equipment and Supplies. Let's open them up and see if they might be a good fit. So this one that we opened earlier, H&B Tool, it doesn't support a secure connection. So that's a distributor that, guys, some of these distributors are so old school. Their websites are from like 20 years ago. This one, their website is so old, it won't even let you open it. So we're going to skip over them. AB Tools, Inc., North Carolina Distributors. So let's look at the products they carry and run them through our criteria like we normally would. Is there a brand? I don't think any of this stuff is branded. I think this is just going to be, these are just like generic tools, right? So if we go products, yeah, I just don't see any of these being like branded. So, okay, so these products here, again, this particular supplier, these don't look like branded products. These are just kind of generic tools or parts. So we're going to skip over them. Next, we're going to look at WT Tool, Industrial Equipment and Supplies. So here, if we're looking on their website, let's see if we can do a About Us and determine what these guys are all about. So they're headquartered in Michigan. So they're not even here locally in Charlotte. So I don't know how they came up. Let's see. We service 75% of America's manufacturing facilities within 2 days normal shipping. Each location has display areas where customers can browse and make selections for purchase. Okay, so this looks to me like they do sell to the end consumer, right? There appears to be a way to just register with them. Yeah, so there's not even like a submit or like apply. It's just a straight up register. So this to me violates our third criteria in the sense that they must primarily be B2B. These guys will sell to just about anyone, it looks like. So we're going to skip over them for now. Okay, so let's see if we can find one more. We found the first one, Apex Tools, relatively easily. Let's see if we can find one more. And if not, we can look in a different category. So this one here, Watco Inc., Wholesale Tools. Let's check them out. Okay, this is not even their website. This is like an industry site. Lovejoy Tools, Distributors in North Carolina. Let's try them. Okay, so this is a website that actually lists their distributors. So this is kind of a cheat code too. Sometimes you'll find certain brands that actually list their distributors on their website. And so here we've got a list of a few different distributors that apparently sell this brand, the Lovejoy Tool Company. And these are local distributors to me in North Carolina. So this right here is 1, 2, 3, 4, 5 different distributors here locally to me that carry this brand. I don't know what brand this is, but these are legit distributors. So let's open this one, Fastenal Company, fastenal.com. I believe this is a publicly traded company. I think this is a really big distributor. So if we come over here and do About Us, well, first and foremost, let's determine if they meet our first criteria. Do they carry brand name products that are already selling well? So if we come over here to All Products, let's just look at Tools and Equipment and see if we recognize any of the brand names. Is there a way to determine the brand names? Okay, so right here, they've got Milwaukee, DeWalt, Makita, Bosch. Okay, so those are big tool brands. So they definitely meet our first criteria. They've got, looks like a few, some big tool brand names on their website. So they meet that first criteria. Second criteria, we want to make sure that they sell to retailers. So if we look at their About Us, where's their About Us? All right, so do they say anything about who they sell to, like the markets they serve, anything like that? What we offer services, okay. Supply solutions, who we partner with. The organizations that rely on Fastenal range industries, sizes, and purposes from local school districts to global manufacturing giants. Okay, so it looks like they service a lot of different industries. So that tells me that we probably have no issues partnering with these guys, right? We probably will have no issues buying from them because it looks like they sell to just about any business industry. And then lastly, are they primarily B2B? Well, let's check. We've got to register. How do we register here? If we go to my cart. I believe these guys are only B2B because I know this is a really big company and I'm 99% positive they're B2B. I can't figure out a way to, like, how do we try to register here? So looks like there's not an easy way just to like buy something off their website. So they do have pricing here, right? And it looks like you can just add to cart. View shopping cart, check out. Check out as a guest. Okay, so they do let you just check out as a guest, right? Without registering, without any sort of vetting or qualification process. But again, because I know I've heard of these guys before, I know they're a big company. Just from my experience, companies like this, even though they do sell to the end consumer, the pricing that I'm getting here on their website, like for example, this $67.67 for this product, is retail pricing. I am positive if I call up Fastenal and I set up a legit B2B business account with them, I know for a fact my price would be less than this. Okay, so this tells me that even though they are B2C, that they will sell to the end consumer, I still think that they're worth adding to our list because, again, just like our brand criteria, right? These are meant to be broken in some cases. These are not law, these are rules of thumb. And I happen to believe that it would be worth our time to reach out to Fastenal to open a business account. Okay, so that is the second distributor that we found throughout the course of our research here with the Google method in the last 20 minutes that could be a good fit. And then here we have on this random tool brands website that we stumbled upon some other distributors of theirs that might be a good fit. So if we look at this one, specialty tool. So the domain name isn't even active anymore, but I think suffice it to say that the two that we found are qualified, would be worth our time reaching out to. And this is the Google method in a nutshell. And I'm going to go into a few additional methods for how to find qualified distributors easily and quickly. All right, now I'm going to be teaching you guys a method that's similar to the Google method, but it just uses Google Maps. So it's a little bit more of a targeted search to a specific local area. And I'm going to show you guys exactly how that method works. So if we jump into my screen again, here we are looking at the Distributor Criteria PDF. As always, this is our Bible when it comes to vetting distributors and making sure we have ones that are a good fit. All right, so if we jump into Google Maps, what I'm going to do is I'm actually going to search up in New Jersey because I know there's a lot of Amazon sellers that live up in the New York, New Jersey area. And we're going to look for grocery distributors in New Jersey. All right, because there's probably a lot of them up there. So this is how we're going to use the Google Maps method. So if we see, in fact, I'm going to move my camera over here to the right. So you see here on the left-hand side of the screen, these are going to be all of our results. I'm going to even zoom in a little more. And we're going to look at these one by one and run them against our distributor criteria. So here we've got International Wholesalers Corporation. We're going to open them up in a new tab. Prima Foods, open them up in a new tab. And Stanley Marvel Inc. Wholesale Food Distributor, open them up in a new tab. So as always, we're just going to run each of these through our three criteria. And looks like this. So Prima Foods, let's see, you just Google them. Okay, wholesale food distributor, only the finest products. This website is not working for some reason. A lot of these distributors, I'm telling you, their websites are just terrible or they don't work. And then this one, Stanley Marvel Inc., looks like that website works just fine. So if we look at Prima Foods Inc., full line wholesale food distributor, wholesale, imports, retail. Let's look at their About Us and see if they fit our criteria. So first and foremost, we want to determine if they carry brand name products that already sell well on Amazon. So let's click on wholesale, see what types of products they carry. So they carry food, non-food, imported products. They're the only major wholesale food distributor in the Maryland area to supply specialty foods imported from Greece and the Middle East. Okay, good to know. Let's look at product categories and just see if they carry the types of products that we would want to sell. Okay, so they carry, looks like international cuisine, Greek foods, pizza supplies. Really, when it comes to grocery, we're looking for products that are dry, right? That are not produce, or they're not frozen, or they don't need to be refrigerated, right? Because we need to be able to sell them on Amazon. So when I see things like olives, oils and shortenings, that might be a fit. Beans, fruit, and nuts, maybe like beans and nuts if they're packaged. Not meats, obviously. Coffee, tea, and beverages, that's probably a good fit. So if we look at, do they have a brands list on their website? Let's look at products. Okay, so with products, again, they're not really showing us any brands. If we click for retail, maybe that is more what we're looking for. So they serve quality foods to the general public. Looks like they have a Greek food store. Okay, so they do sell business to consumer, but what I'm trying to get a feel for is what sort of brands do they carry? Imports, wholesale. let's look at products one more time. So if they're not giving us any brand names, it's going to be tough to know if they carry actual branded food products or if they just carry like bulk dressings or like bulk, olive oil, that type of stuff, as opposed to actual retail packaged brand name stuff. Okay, so we're going to skip over them for now because it's just tough to tell and I don't think they're the best fit. So this one's Stanley Marvel. Let's look at About Us. 4th generation family owned wholesale food distribution business. I want to know what types of brands they carry. Show me what types of brands they carry. Let's look at products. So they've got, looks like all the like perishable food products, which are not going to be a fit for us. But then do they have just dry groceries is what we're looking for. Sample product catalog. Butter, cheese, produce. Okay, so this is all bacon, like this is all perishable products. That's not what we want. So we're going to skip over them as well. They're probably not the best fit. Let's look at Super Fresh Distribution, Dependable Food Corp, Family Food Distributors. Super Fresh Distribution Inc., all kinds of dry foods, importer and wholesaler. So this is what we want. We're looking for dry foods, stuff that's not perishable. So we look at products. Let's see if they carry the types of products that we can sell on Amazon. Let's look at maybe like flour. So Star Anise, that's a brand of rice. I've seen that on Amazon. This looks like some of their own private label branded stuff. They've got the Super Fresh brand name on them. Let's see here. Let's look at new arrivals, see if they have anything there that would make sense. So it looks like a lot of rice, a lot of snacks. A lot of stuff is branded with their own brand name. Give me like some brand names here. Canned fruit. Okay. Yeah, their website just sucks. Doesn't look like they have a ton of stuff that it's all their own private label brand for the most part. And then this owner brand, which I'm not familiar with. Let's pull up Amazon and look up owner coconut water. Why is it doing this? All right, owner cocoa water. Okay, so that brand is not even on Amazon. So we're going to skip over this distributor because it looks like they don't carry brands that even sell on Amazon. All right, so as you guys can tell, there's a lot of trial and error with this. There's a lot of digging through garbage to find stuff that's good. All right, dependable food. Grocery is what we're looking for. Let's look for cereals, for example. You just clicked on cereals. And it's leading us to a dead end. Okay, that's how it tends to go with some of these distributors, right? They don't give you much information and you have to dig through a lot of crap to find the ones that are good, especially with this method. So if we go to menu, not seeing any brand names here. So we'll just skip on to the next one. And another key with this method, guys, is disqualifying quickly. When you find a supplier that you're like, oh, are they good? Are they not? It's best to just skip over them and move to the next because there's going to be a lot of ones that are a complete waste of time. Okay, family food distributors, specialty food distributors. So this one says 70 plus brands distributed by us. So this might be a better fit for us. Can we find out the brands that they carry? Distribution. If it will load. Okay, so here's some brands here. So these are all, they look like some more ethnic brands, which I love. I think ethnic food is a really good niche to get into because it's just not as mainstream and not as easy to source. So there's just less competition for those. So they've got 70 brands in the ethnic food category, Nestle being one of them. So that's a big brand. Just Nestle alone is enough to make us want to contact this brand because Nestle has a lot of different products, a lot of different brands within Nestle that could be a good fit. So I'm going to say that they definitely meet our first criteria. They carry at least one brand that we're interested in, right? Next, we want to determine, do they sell to retailers? So menu bar, distribution. We reach more than 2,000 points of sale with a direct and indirect distribution in 26 states. 900 SKUs. So they don't specifically say that they sell to retailers. But again, knowing this kind of distributor, like, they're going to sell to retailers, right? Because these are types of products that are in every retail store, every ethnic food store, every ethnic restaurant, for example, right? So I think that they definitely meet our second criteria there. And then lastly, are they primarily B2B? There doesn't seem to be an easy way to just buy off their website. Is that even possible? I don't think there's even a way to add anything to cart, which is good, which means that there's a requirement, there's a barrier to entry to be able to buy from these guys. Okay, so this one to me looks like a good fit. This is family food, specialty food distributor, so I would say that they are a good fit. Took us almost exactly 10 minutes, but this is the first lead that we found through this method. And that's probably about standard. You're probably going to find one qualified distributor every 10 minutes or so of doing this method and doing this research. So if you're doing this yourself in an hour, that's 6 potential distributor leads per hour. And guys, it only takes one really good distributor to make a ton of money. So you can see how wholesale and really this model is a lot more time invested on the front end, but long term it ends up being easier and ends up being much less time intensive. So let's see if we can find one more here. Sarwar Food Distribution Inc. And it says /fresh food. So I think it might be probably a subsidiary. Oh no, Super Fresh. It's something different. Let's open them up. Dutch Valley Food Distributors. Let's just look at Dutch Valley Food Distributors here. So bulk food distributor. Food is just the beginning. Been a trusted business partner offering support. Stock your shelves. Okay. Where are the brand names? Okay, so these guys are literally selling just bulk food. Looks like non-branded. Or do they carry brands? Okay, it looks like maybe they do. All brands. Okay, so they do have quite a few brands. So this is just the A. So they carry, okay, yeah, so these guys carry a bunch of different brands. So that's good. Like Milano, I recognize right off the bat as being a brand of those like candy crackers. So that's one that we would be interested in. Let's see, are there any others that I recognize just right off the bat? Morton Salt, that's a big one. Obviously one of the biggest salt brands in the world. So it looks like this particular Dutch Valley company meets our first criteria. They definitely carry some big brand names that we would be interested in buying and that probably sell really well on Amazon. Next, do they sell to retailers? About us. Support for our retailers. Okay, so simply by having that section of their website, support for our retailers, that tells me that they sell to retailers. How we support your bulk food retail business. Are you looking for a supplier for your bulk food store? We pride ourselves on being your bulk food distributor. All right, so they definitely meet our second criteria. They definitely sell to retailers. Lastly, are they primarily B2B? Is there any way for us to just buy from them as some random person off the street? It looks like there is a login here. We have to create an account. The fastest way to learn more and partner with us, have a business, starting a business, have a business, do not have a business. So it's clear to me that they require you to have a business in order to buy from them. So let's choose the do not have a business. I guarantee you that if you click the do not have a business and submit your application, it's probably going to auto deny you. So if you click I have a business and you come in here and you got to submit all your information, chances are they've still got to approve you and they've still got to set you up in their system in order to become a retailer. So this to me meets our third criteria. They do not sell to the public. You've got to have a business to work with them, and therefore they meet our third criteria. So this is, what is this? Dutch Valley Foods. So there within the next couple of minutes, we found our second qualified lead with the Google Maps method. Now you guys can see, again, this is tedious. It takes time. This is why after a certain point, you hire a virtual assistant to do this research part of the process for you. But it all comes back to the distributor criteria. Do they meet the distributor criteria or do they not? If they do, they're a great lead, right? And if they do, then the only thing that matters is pricing, and pricing is always negotiable. Okay, so I hope this Google Maps method makes sense to you guys. You can use this regardless of which part of the country you're in, regardless of which industry or which category you're looking to source from. This method works. So I hope you enjoyed it, and we'll move into the next part of the free course. All right, the next method that I'm going to show you for finding distributors is one of the most powerful methods of all the methods that I'm aware of and all the methods in this video for finding distributors quickly using the leads that you've already found. Now, I'll explain what that means here in a second, but I think once you see me go through this method, you'll see how you can really snowball the amount of leads that you have very quickly in a relatively short amount of time. And this is called the SpyFu method. Now, guys, if you enjoyed this method, if you like this part of the free course, this is incredibly powerful. Like the video and subscribe, because this should be super valuable section of this course right here. So if we jump into my screen, I'm going to pull myself down here to the bottom right. So the website that we're looking at here is called SpyFu.com. Now, SpyFu, what it is, it's an SEO tool, right? It has nothing to do with Amazon. It has nothing to do with e-commerce, but you're going to see that we use it in a very specific way. So I'll show you what that way is, and it doesn't require us signing up or paying any money. You don't have to do anything. You can literally just come to SpyFu.com. So it asks us to enter a domain or a URL. So what we're going to do is we are going to take the URL of some of the distributors that we found from our earlier research, right? Remember, this is a distributor that I went through in an earlier section, and we're literally just going to copy the URL. And the reason we're going to use this distributor is because we've already vetted this distributor. We already know that this distributor meets our criteria. This is a legit distributor, so we're going to copy their website into SpyFu here, and we're going to click search. Now, what you'll see is that SpyFu gives us basically an SEO report. All right. Now, let me see if I can remove that there. Okay. So sometimes you got to have just the .com. So since it was /home, it wasn't giving us any data, but you just want to use the plain URL directly to the homepage of their website. And SpyFu is going to give us some information here. So they're going to give us the keywords, the clicks, all this SEO reporting, which again is totally irrelevant to us. What we care about here is we want to scroll down, and we are looking at organic competitors, okay? Now, the premise of this whole method, the reason this method works is we start with a supplier that we know is legitimate because we've already verified them. We take that supplier's URL, we plug it into SpyFu, and then SpyFu tells us, hey, these are 5 websites of companies that we believe are similar to the one that you entered, all right? So the thinking goes, well, if we enter an authorized distributor into SpyFu, then chances are some of the organic competitors are going to be similar companies to the one that we entered, aka they're going to be other authorized distributors. Now, sometimes all 5 of the organic competitors are additional distributor leads that we found just by doing this exercise. Sometimes none of them are, right? We've still got to go through and vet each of these 5 one by one, but the idea is you take one of your leads, you enter it into SpyFu, it gives you 5 other potential leads. Even if only 1 or 2 of these are legit authorized distributors, that's 1 or 2 more leads that we then plug back into SpyFu and find 5 more each, right? So you can see how this method can really start to compound once you have 1 to 5 really good distributor leads to test with. So let's test it out. I'm going to pause real quick, and I'll be back with our distributor criteria that we can cross-reference these suppliers against. All right, so remember that we want our distributors to meet these 3 criteria for us to consider them a legitimate lead. So if we come back here to SpyFu and we see the first result that we get is Auto Tool World. So I'm going to open that in a new tab. It's actually going to open into SpyFu, so we've got to click to link out directly to the website itself. Now, this is one of the organic competitors that SpyFu showed us for the website Midstate Tools. Now, as always, we're going to run this new potential lead through our distributor criteria. So criteria number 1, they must carry brand name products that are already selling well on Amazon. So just by looking at their homepage, I can tell that they meet criteria number 1. Astro Pneumatic is a huge brand, sells well on Amazon. Lyle is a huge brand, sells well on Amazon. Same with Sunex, same with all of these brands. So it definitely meets our first criteria. Second criteria, they must sell to retailers. So in order to determine that, if you remember from our research earlier, sometimes in the About Us section on their website, they will tell us the types of companies they sell to. Sometimes they don't say anything at all. And if they don't sell anything at all, then we just assume that they meet our second criteria until we get them on the phone and they tell us otherwise. So in their About Us, we offer a huge selection of automotive and hand tools for any job. We stock over 70,000 items. Contact us for details. We carry brand name manufacturers. Feel free to browse our site. Okay, so this looks to me like they're not specifically saying, hey, we sell to retailers, or hey, we only sell to the government, for example. They're not giving us any sort of that information. So I'm just going to assume that they would sell to us as retailers. It looks like they don't sell to any one particular market segment. Now, the last criteria here is where I think these guys actually fall short. So the last criteria is they must be primarily B2B, business to business. Now, why is that? Well, business to business distributors tend to have better pricing. They tend to be easier to work with because they know exactly what we want. And they tend to not have products available for purchase just directly off their website without any barrier to entry. So if we come back to their website here, it looks to me like just about anybody can create an account on their website. So here we've got, you can just enter your email, your password, your name, your tax ID, and then register right away. There's not even like a apply or like submit application. You don't have to talk to anybody. There's no barrier to entry for working with this supplier. So that tells me that it does not meet our third criteria, right? Just about anybody off the street, if you have an LLC, which is not a barrier to entry in my mind because you have to enter a tax ID. Technically, you could enter, it's not even a required field. There's no star by it. So technically, you don't have to enter a tax ID. You could just be a person, a regular consumer, and buy off this site. So that tells me that they are not B2B, or they're at least not primarily B2B, and they don't meet our third criteria. So this one to me is not a qualified lead because this is just another tool retailer. This is a company just like us. They're just selling at retail prices to end consumers, hence no barrier to entry for buying from them. Okay, so we're going to cross this first lead off our list and go on to the next one here in SpyFu. So the next one is toolsource.com. As always, we're going to run them through our three criteria. Toolsource.com, best-selling manufacturers. So they definitely meet our first criteria. They're definitely carrying some brand name products here. Second criteria, do they sell to retailers? Let's look for their About Us. If they have one, it looks like they don't have any even sort of About Us page. But we're just going to assume that they do sell to retailers. Third criteria, want to make sure that they're primarily B2B. So again, I'm seeing it looks like you can pretty much just add a product to cart. New customers, create a customer profile, which allows you to shop faster, sign up. Company name, get daily deals, submit the information. Okay, so yeah, this to me, again, looks like there's no barrier to entry. It looks like just anybody can set up an account with these guys, which means they don't meet our third criteria, which means they are not a good fit for our business. So we are going to move on to the next result, which is dealershopusa.com. We shop hard, you say big. Why do members of North America's largest warehouse distributor for car dealers and body shops get? We buy direct from the factory. Okay, great. So let's go and run them through our criteria as we always do. Let's see what brands they carry. Body shop equipment. Do they have a list of brands that they carry? Let's see shop online if that'll show us the types of brands they carry. So yeah, by vendor. So these are all large brands. These are all brands that sell well on Amazon. So they definitely meet our first criteria. Second criteria, do they sell to retailers? So one of the first things I noticed is they are a distributor for car dealers and body shops. Okay, so that tells me that probably car dealers and body shops are the main customer segment that these guys focus on. Now, if they have anything in their, let's see if there anything in their About Us tells us. about who they sell to. This is just the partners they have. History. Acquires Jobbers Automotive. Okay, so the largest buying group for auto dealers and collision centers in North America became Dealer Shop. Here are key milestones in our history. So what this tells me is that Dealer Shop is more of a buying group. Well, I guess buying group and distributor is pretty similar. I mean, they buy huge quantities of product and then sell them to auto dealers, car dealers, those types of companies. So again, I'm going to assume that they would sell to us because a car dealer or an auto shop is basically just a retailer for these types of products. And again, we are a retailer. We can sell these types of products. So chances are they would have no problem working with us. Now, the third thing I want to confirm is that they are B2B. So they've got a shop online button here, which pretty much looks like you can be just about anybody and work and buy from them. Let's see. I want to see, do they list their pricing? So they do list their pricing here, but it looks like you've got to, I don't think you can just add to cart. Okay, you can. They've got 87 units. Let's see if it just lets us check out as a regular person. Guest checkout without creating an account. Okay, so again, just about anybody can go and buy from these guys, which tells me that they're not primarily B2B. However, I'm wondering if they have a B2B or like a wholesale division based on how big these guys look. And the fact that they sell in bulk to some dealerships is what it looks like. What does becoming a member look like? Tell us about your dealership. We'll call you to discuss the advantages of joining our network. Regular analysis, savings analysis, become a member. So this actually might be one of those leads where we can make an exception on the third criteria, because even though these guys have a B2C component, meaning business to consumer, they clearly sell directly to the end consumer, just like me, with having no business right here on this website. But it looks like they also have a B2B, business to business division. What this is saying, and they call it being a member, right? It's free. You basically submit a form on their website that talks about your company and what it is that you do, and then they call you to essentially have you become a member of this buying group that they have. Now, again, from my experience and from what I can tell, chances are this is the route that you would go to really buy in bulk and get that B2B, business to business wholesale pricing. All right, we would never just come here and shop online and just buy at retail. We would want to submit this little form here or call them up ourselves and get membership into their buying group and into their wholesale buying opportunities. Okay, so this one is a little more nuanced, but I do think this one is a good fit. This is one of those cases where we have to make a little bit of exception on the third criteria, because even though they do sell B2C, it's clear that they do have B2B, business to business capabilities. And this is one that I think would be a good fit for us and we would add to our list to contact. All right, let's look at the other two options here from SpyFu. So the last one we've got is tooldiscounter.com, or not the last one, the second to last one. So as always, we want to see what brands do they carry. Do they carry brands that sell well on Amazon? It looks to me like these, I recognize a lot of these brand names here. So I think this would be a good fit for criteria number one. Criteria number two is, do they sell to retailers? Do they say anything at all? Do they have an About Us page? Here they have an About Us. We buy brand quality automotive tools, equipment, and supplies directly from the manufacturer and sell to you at tremendously discounted prices. Huge savings are complemented with knowledgeable personnel who can answer your questions. Okay, so looks like they've been serving the automotive and truck market, which tells me that, again, we're an automotive or tool or truck retailer. That's essentially what we are. So my guess is that they would have no problem selling to us, which means that they meet our second criteria. Lastly, we want them to be primarily B2B, but it looks to me like they just have a way for anybody to come on their website and buy products. You can just add to cart, you can view cart, we can check out as a guest. So there's no barrier to entry. There's no B2B, business to business requirement here. This is just essentially a retailer, right? We don't buy from retailers because we're not doing online arbitrage. We buy from distributors who sell in bulk to businesses at wholesale prices. And it doesn't look to me like they have a B2B or wholesale division. I'm not seeing anything here at the bottom of their website about like a wholesale program or business to business application. I'm not seeing any of that. So this to me is a glorified retailer and one that would not meet our third criteria, which makes it not a fit for our business. Lastly, we have jbtools.com. Now, for some of you guys who have been selling on Amazon for a while, especially if you sell in the tool category, you would recognize JB Tools because they are a huge, huge Amazon seller. So JB Tools is one of my biggest competitors on some of my listings. And these guys are a huge Amazon seller and retailer. JB Tools is not a distributor. I happen to know that from experience, but we're still going to go through our 3 criteria just like we would any other distributor or any other supplier. So we're going to make sure that they carry brand name products. They do carry brand name products. If you shop brands, we can see all the brands that they carry. So these are a ton of brands here, many of which sell well on Amazon. So they meet our first criteria. Second criteria, do they sell to retailers? If we look at their, let's see, do they have an About Us? They don't have an About Us here at the bottom. Founded in 2009, has become a leading online tool retailer. So they don't even claim to be a distributor. They straight up say, hey, we are a retailer. Not that we sell to retailers, but we are a retailer. So this tells me that these guys are not they're not a fit for our second criteria because they don't sell to retailers. They are a retailer themselves. They sell to the end consumer, right? Which also means they don't fit our third criteria. They're not primarily business to business. Anybody can come here and just buy products off their website. So we can add something to cart. We can come here and just check out. We don't need to make an account. We literally just can buy something right off their website as an end consumer, no matter who we were. So JB Tools does not meet our second and third criteria, which means they're not a good fit for our business. Okay, so if we go back to SpyFu, remember the first supplier that we entered was Midstate Tool, which was one that we found earlier during the research process. We confirmed them to be a good lead. And from Midstate Tool, from that one lead, we found one more lead. Dealer Shop USA was one of the 5 leads here that ended up meeting our criteria. So now what can we do? We come back up here to SpyFu and we can plug Dealer Shop USA into SpyFu, and that's going to give us 5 more organic competitors, which some of which might be additional qualified leads. So again, if you have 5, 6, 7, 10 qualified distributors, you can plug all of them through into SpyFu using this exact method, and it is going to generate a ton of additional leads. So many so that you might not have to do any of the other methods in this video ever again if you start with about 10 qualified leads to begin with. So this is the SpyFu method. I have a standalone video on this method from probably a year or 2 ago. It was one of my best performing videos because nobody talks about this method. Nobody knows about this method. This is one of the best and most low-key methods for finding distributors. So I hope this helps, and we'll jump into the next section of the video now. All right, so the next section of the free course is going to go over the easiest way to find authorized distributors. Now, I've already given it away because it's here on screen, but I'm going to explain to you what I mean when I say that the easiest way to find authorized distributors is to simply ask brands. Now, how that works in theory is a lot of times when you call brands and try to open a wholesale account with those brands, a lot of times they'll shut you down, especially if they're a bigger brand, and they'll say, well, hey, sorry, we only sell through distribution, or, we're not selling directly to retailers right now. Instead of hanging up and just taking that as a no, pivot to the question of, okay, well, could you connect me with a distributor that services my area? Simply asking that question of, can you connect me to a distributor that services my area? 50% of the time, that brand will give you a reference to a distributor that sells into your specific area. And better yet, to take it a step further, I like to ask the brand or whoever I'm speaking to at the brand to make an introduction for me directly to that distributor. So an example of what this would look like is if you call up, say, Milwaukee Tools, right? You are never, ever, neither am I, but most people are never going to get a direct wholesale account with Milwaukee Tools and buy directly from Milwaukee Tools. It's just not very feasible, because in order to do that, you've got to be spending tens of millions of dollars per year on Milwaukee Tools. So if I call Milwaukee Tools and I say, hey, I'd like to open a wholesale account with you guys, they're simply going to tell me no. They're going to flat out say, no, sorry, we don't sell directly to retailers like yourself. Sorry. So instead of just hanging up, I would pivot to asking them, okay, I understand. Well, hey, could you put me in touch with your favorite distributor that sells into Charlotte, North Carolina? All right. And so by asking them that question, it depends on who you're talking to, but I'd say 50% of the time, they're going to say, oh yeah, well, that is XYZ distributor, call them. And instead of taking that as an answer, I'd say, okay, great. Well, hey, do you mind emailing them and CCing me, introducing me to them, and introducing me as a buyer here in the Charlotte area? All right, so there's a few layers of this method, but layer number one is you don't take no for an answer. Layer number two is you ask for a reference to a distributor that services your area. And layer number three is you take it a step further by asking them to introduce you directly to either a sales rep at that distributor or even the front office person at that distributor. So that way, the brand themselves are essentially walking you in the door of that distributor, and you know that that's an authorized distributor because the brand told you to contact them. Okay, so this is a very powerful, very underrated method that simply comes down to asking the brand who their distributors are. All right, this works best when you're dealing with large, very large brands who typically sell through distribution and who are usually too big to sell directly to most retailers. But this can also work really well for smaller to mid-sized brands. Simply calling the brand up, and instead of asking directly for a wholesale account, sometimes I will call a brand and I simply ask them who their distributors are. I don't even ask to open a direct wholesale account. So this is the easiest way to find authorized distributors. This is probably one of the best ways to find authorized distributors because the brand themselves are telling you who their favorite distributors are. Okay? And if you want to use this method to generate even more leads, you could ask the brand for a list of all their distributors that sell into the Southeast, for example. So that might give you 3 to 5 to 10 different distributors that are all qualified, that are all authorized, that you can literally then call down that list and find a ton of distributors who sell, if not directly into your town, well, at least you know they sell into your region. So at the very least, you could find a prep center in your region that could accept shipments from those distributors if they don't ship to you directly. So that is the simple asking brands method for finding authorized distributors. One of the most underrated way to find easy leads. All right, now we are going to take a look at the 3 most common scripts that I like to use when on the phone with distributors. All right, so this is all part of our Master Supplier Scripts Playbook document, which again, you guys can get completely free at the link in the description below. So we've got a couple main scripts here that we'll use when talking with distributors, and you'll see that each script is ideal for this specific type of person. It just depends on who you're talking with. So I like to use script 1 when I'm speaking with a receptionist or a non-salesperson, somebody who is not incentivized to sell me product or who's just not the person that I'm trying to talk to. So a lot of times when you guys call up a distributor, you'll get a receptionist or somebody in the front office. Bottom line, you'll get a lot of times somebody who's not a salesperson. So I like to say, hey, my name is Corey. I'm looking to set up a new dealer account. All right. And the reason we like to use the word dealer is because that is an industry term. We want to sound like we're a part of the industry. We want to sound like we know how to talk the talk. Again, it's just going to make them that much more likely to take you that much more seriously. Then I like to say, could you please put me in touch with the salesperson who covers your city or state, right? Meaning the person calling your city or state. So I might say, hey, my name's Corey. I'm looking to set up a new dealer account. Could you put me in touch with someone in sales who covers Charlotte, North Carolina? Now, usually I'd say probably about 80% of the time, the person that you're speaking with, if they're a receptionist, they're going to say, oh yeah, that's Jim. Either I'll tell him to call you, or a lot of times they'll give you Jim's information so that you can then reach out to Jim. But rarely at this point will they shut you down and say, no, I'm not going to put you in touch with someone in sales, because to them, you're a prospect, you're a potential new customer, and they are going to try to pass that lead on to a salesperson. So when you're speaking with a receptionist or a non-salesperson, the goal is to get in touch with a salesperson, and this script is, in my experience, the easiest way to do that. All right, script number 2. And I like to use this script when we are speaking with a salesperson. So I'll move myself up here a little bit so that you guys can see a little better. So when I'm speaking with a salesperson, I like to say, hi, my name's Corey, and I own a retail business in Charlotte, North Carolina. I'm looking to set up a dealer account with you guys. Okay, again, using an industry term, dealer, talking about the fact that we own a retail business. We're more than just an Amazon seller. We're not just somebody flipping products online. We are a retail business owner. So I always like to lead with, hi, I'm the owner of a retail business and I'm looking to set up a dealer account. Now, if you wanted to take it a step further and make your company look that much bigger, you could say, hey, my name's Corey. I'm the buyer for a retail business here in Charlotte, North Carolina. All right. So that positions your company as a little bigger, because bigger retail businesses have buyers that are responsible for bringing in new product lines. And by you calling yourself a buyer, that's 100% true. You are the buyer. You're the one reaching out and making the connection. So that's just a positioning tip. You could sub out I own for I am a buyer. Next line, I like to say, I took a look at your website and I see you guys carry brands X, Y, and Z. All right. Now, these could be any brands that you noticed on the distributor's website, because the purpose of bringing up brands X, Y, and Z, 3 specific brands, is to show the distributor that you're serious, that you've done a little bit of homework, that you have an idea of what you're looking for. And the beauty of name dropping these brands is they're not going to hold you to purchasing those specific brands. In fact, they're probably going to forget the names of the brands that you brought up in the initial conversation anyways. The goal is just to show, hey, I see you guys sell tools. I see your website. You guys carry Milwaukee, DeWalt, and Makita. That's great. I actually have a list of the exact products and quantities from those brands right here in front of me. What would be needed on my end to get the ball rolling? Again, always finishing with an open-ended question. And the point of these 2 lines right here, I see you I carry brands X, Y, and Z. I have the exact list of products in front of me that I'm interested in. You're showing them that you're serious. You're showing them that you've done your homework and that they should take you a little more seriously than somebody who calls them up and just says, hey, I'd like to open a wholesale account. I'll buy anything that's profitable, right? That was me for the first at least 2 or 3 years of doing wholesale. Is I was never specific with my pitch, so therefore suppliers wouldn't take me seriously. I would literally tell them, hey, I'll buy anything that's profitable. And to them, when they hear that, immediately they think to themselves, this guy is going to waste my time, because how do I know what he wants? He doesn't even know what he wants. All right, so that's the second script, and always ending with that open-ended question like we said. What would be needed on my end to get the ball rolling? So by putting that question to them, they start thinking to themselves, okay, well, he needs to submit an application. We need to get a copy of his business license, his resale certificate, right? So they start thinking, well, how can I help this person, because he knows what he wants, and it seems like he's serious. And then the third script here, guys, is also one that you can use when you're talking with the salesperson. So you'll notice this is similar to the one above, but it goes something like this. Hi, my name is Corey. I own a retail business in Charlotte, looking to set up a dealer account with you guys. Now, this script is one where we start to leverage the competition, and we start to mention the fact that we're talking to other suppliers in their same niche. So again, this is 100% true, because you don't necessarily have to have already made contact with competitor 1 and competitor 2 for this script to work. You can just tell the supplier that you're on the phone with that, hey, this is who I'm planning on reaching out to. So, hey, I'm planning on reaching out to competitor 1 and competitor 2, but I figured I'd give you guys a try first. I have a list of brands and products that I'm interested in purchasing. Do you mind if I send it over? All right. So this script can be pretty dang effective, because what you're telling them is, hey, I'm in the field for these products and brands. I know that I have a few options, right? I know there's a few different suppliers that I can go to, but I figured I would give you guys the chance for the business first. Now I have a list of the exact products I'm looking for right here in front of me. Do you mind if I send it over to you and see what you think? So what you're telling them is, you're not saying, well, hey, I'm ready to buy, I'm ready to place an order. You're almost dangling that carrot in front of the salesperson of, well, hey, I know what I want, but first I need to get some quotes. I'm going to send it over to you. Is there anything you can do here for this to be worth my time? All right. So now you're positioning them as the ones who will be selling you on why you should buy from them. See how that works? Always. Well, I guess this isn't technically an open-ended question here saying, mind if I send it over? But what you could ask instead of mind if I send it over, because mind if I send it over is a yes, no question, but what you could replace this with to make it more open-ended is what would be the best email address for me to send my list to? All right. So that way they can't say yes or no to that. They would say, well, you can send that directly to me, jim@supplierxyz.com, or they might say, oh, send it over to sales@supplierxyz.com. So by asking the best email address to send that list to, that might be a little bit of a better way to end this script. And I'm going to probably replace that here once we're done recording in a second. All right. Script number 4. Now this is the last script that you can use when you're going directly to a distributor. And this is another one that you can use when talking with a salesperson. You'll notice that we don't have any scripts when it comes to distributors that are that involve speaking with the owner of the distributor, right? So for our brand scripts, we have scripts for dealing with the owner or a salesperson, But when you're calling on distributors, rarely are you going to talk to the owner unless it's a smaller distributor. Most distributors have a staff of salespeople, and 99% of the time you're going to be talking with a salesperson. Now, if you end up becoming one of their larger customers and you end up doing a lot of business with that distributor, then you very well might meet the owner at some point. You might be able to speak directly with the owner at a certain point. But with most distributors, you've got to earn that and you've got to work up to that level. Okay, so this is a script you can use when speaking with a salesperson. Again, they're very similar, but they all take a little bit of a different angle. So this one, you start with, hey, my name is Corey. I own a retail business in Charlotte, and I'm looking to set up a dealer account with you guys. So same opening as the other scripts. I see that you guys carry brand X, and there are a few specific products from that brand that I'm ready to buy. Okay, so you'll notice in every one of these distributor scripts, except the one where we're talking with the receptionist, because when we're talking with the receptionist, she doesn't care about what we're looking to buy. We just want to get in touch with a salesperson. But for all 3 of our scripts, when we're talking to a salesperson, we always want to be specific, because when we're specific and we mention a specific brand or we mention specific products, they're already seeing dollar signs in their head. So I see that you guys carry brand X. There are a few specific products from that brand that I'm ready to buy. I have the exact quantities that I'm willing to purchase, which I can send over if you'd like. And if we can come to an agreement on pricing, I can get you a PO as early as this week. What would be needed for me to move forward? Okay, so these last 3 lines here can be very powerful. Now, this script number 4, I made it the last script here because it is a little more direct, and it is one that you would probably only want to use if you built a decent amount of rapport with the salesperson and you have a good feeling that they're going to want to work with you. Because here you're saying, hey, I know exactly what I want. If you can give me good pricing, I can buy this week. What do you need for me to move forward? All right. So this is a good script to use when you're dealing with somebody who has more of a direct personality style. Maybe when you talk to them initially, you can tell they're very direct. They're very straight to the point. They mean business. This can be a really good script to use when speaking with that type of person, because this script is direct to the point. I've got a PO. I just need pricing. If pricing looks good, I can buy this week. Okay. So this is an effective script that you can use with any salesperson, but specifically when you're talking with somebody who has more of that direct, no-nonsense personality type. Okay, so these are our 4 distributor scripts. These are in the same document as our brand scripts. And again, guys, you can get the Supplier Scripts Playbook for free at the link in the description below, so be sure and grab that.
Hey, Corey.
Hey, Floyd. Sorry about that, man. I just missed you. I was on another call here.
No worries, man. No worries. Yeah, so I don't know if you got my voicemail, but with the Grumpus pumps,
yep.
What I was going to shoot you some pricing for a couple of the SKUs. that you would sell, I guess, kind of basically more the residential stuff.
Okay.
I'm trying to think what else I needed. Grumpus is having a price increase January 1st.
Okay.
So I don't know. Are you thinking you maybe want to get an order in before the increase?
Yeah, absolutely. And let me, I guess, if it would be easier for you too, because I know we did this with Liberty, do you want me to send you over the exact models that we'd want to buy so that you could just send pricing on those, or?
You can. I think with where our distribution, kind of that online model, I think I probably had a couple of the SKUs that you had.
Okay.
That you would want to that you wouldn't buy, but if you want to shoot me what you did your research on, I can kind of compare that. If there's something that I can't sell or don't want to sell right now, I'll let you know. But yeah,
okay.
I mean, shoot that to me. Trying to think what else. Oh, and you may have, I cannot remember because I'm driving, not in front of my computer at the moment, but did you send me all your credit references and all that already?
So I don't think I sent credit references. I think we just sent our resale certificate. Yeah, but how about this? So because we would want to get an order in sooner than later, and I definitely before the new year, we're willing to prepay with a credit card just to get things up and running quickly, and then maybe after that first order or two, then look to apply for terms. Then, if that would kind of speed things up, what do you think?
I can talk with my higher ups about that. I would just need to talk to them about that. If you want to do the first one with a credit card to speed it up, but I don't think, for us, I don't think it would have, once we get that, I don't think it's you got to wait, for a time period where you would miss the price or have to pay the increased price or anything like that. I think once we got that, it would go fairly quickly after that.
Okay. Yeah. And listen, let's just do it that way. I wasn't sure if, never mind. Yeah, we can just do it that way. We'll fill out the credit app like normal, and then you just tell me where we need to go from there. And then if you want to just go ahead and send over the pricing that you have, and then I'll just respond with, if there's any that are not on your list that I was looking for, then I'll send over those additional ones. Cause yeah, I think there might be some crossover here in terms of what you have and what we're interested in. And then we'll go from there. How about that?
Okay. Where did you, the numbers that you got, where did you get those from?
So I was pulling some of the model numbers off of their website, and then off of, I think just a couple of random Google searches as well.
Okay.
So, and I don't know.
If you got it from their website, I'm sure they're probably the updated part numbers. There's been a few that have, I guess some newer pumps. I say newer, some pumps that are kind of a upgraded version or model just came out in October.
Okay.
And so, like I said, I'll shoot you what I have, and then with that pricing, and then and go from there. And let me know your thoughts. I'll put in there what they full freight amount, because that's what I want to say. We would not be able to, for us, just with you being online, everything would have to ship to you. Yeah. We wouldn't be able to. You send us an order, ship it to somewhere in Texas or Nevada, it would all ship to you. Is that kind of how you envisioned it?
Yeah. So, we take possession of everything that we have. The only, I guess when you say ship to us, so we use essentially outsourced warehouses. So we use 3PLs. But I assume they'd be able to go to our 3PL, no problem, right? Which is our...
Yeah, to your warehouse.
Yeah. Okay. Yeah. Perfect. Sorry. I just wanted to make sure we were on the same page with that.
What about after the sales support? How do you guys go about that? I guess I'm trying to figure out our exposure, and we're not doing anything bad. It's just, some of our wholesalers are not big on us selling to an online distributor, but everybody else does. And that's kind of the way that it's going. So it's a conversation that we're not shying away from, but we're also not trying to wave a red flag in front of it either. You know what I mean? Yeah,
no, trust me, I get it. So as far as after sales support, we've got contact information across all of our storefronts online as well. And it's pretty easy for customers to get a hold of us after the fact if they have questions, if they have, if there are any warranty complaints, anything like that. We are pretty dang available for anybody that needs support after the fact.
Okay. And we're not running for that. When we sell it, we'll help. We'll help. I guess, for us, and again, just kind of thinking about other reps out there. If another rep gets involved, oh, hey, where did it come from? And then if people start, tracing it back.
Yep.
Then again, we're not doing anything that is outside of the rules or anything like that. It's just,
right.
Hey, we're trying to, we don't want to be waving red flags and just.
Yeah, the goal.
Yeah,
I know that. Trust me, I know the goal is to stay as low key as possible. But like you said,
yes.
Operate within the rules, right? I mean, we would absolutely stand by that and never ask you, nor would we do anything ourselves, outside of the rules. So I'm glad we're on the same page there.
Yeah, no, and then, like I said, we have stuff all the time that gets sold into another market that we get credit for, and so we've got to help with, and that's no different here. With some lines or some products and some manufacturers, it's easier than others, or there's less places where it matters, and there's some places where it matters, or that you're going to have a pissed off competitor,
right?
Or a pissed off wholesaler. So it's not, again, all stuff that if it was outside the rules, we wouldn't do it. But
right.
We are inside the rules. It's just people get their feelings hurt when they find out they lost business. And,
yeah. Yep.
You know what I'm getting at.
So. Yeah, absolutely. No, listen, I like I said, I know we're on the same page, so I'm not worried about that. And if whenever you get the chance, I know you said you're driving right now. If you just want to shoot me an email with that pricing, I mean, I'll take a look at it as soon as I get it. I know I've got another call here around 5, I believe. But it shouldn't run more than 30, 45 minutes, and I'd love to take a look at it today if possible. Otherwise, I'll give you a feedback, first thing tomorrow.
Yeah. So I had my Grumpus guy at Snyder my pump guy, I guess, putting that together for me. So let me make sure that he's got that. I don't, like I've been driving, so I had to check my email. But if I don't have that today, I know I will have it tomorrow. So.
Awesome. Well, I'll keep an eye out, and if there's anything you need, obviously you got my number, so just give me a call.
Okay, man.
All right, appreciate it.
Corey.
Yep, talk to you soon.
Good morning. This is Matt.
Hey, Matt, this is Corey Ganem. How's it going?
Well, I'm doing good. I'm sorry, your first name's Corey?
Yeah, so my name's Corey. I'd left you a voicemail late last week. I had spoke to Tom over in your customer service because and he had given me your information. So we were interested in becoming a distributor direct with ICM. We currently buy through Ari Michael. But my rep at Ari Michael said that there were the couple of part numbers that we were particularly interested in from you guys, or I guess Ari Michael doesn't carry. So my rep recommended we go direct to you guys. That's how I got to talking to Tom. And then he gave me your info and said you cover Charlotte. So I just wanted to give you a call.
Yeah, I'm actually based out of Massachusetts, but I was just in Charlotte 2 weeks ago.
Oh, nice. Yeah, I live here local, and I'm born and raised in Greensboro, North Carolina, so not too far away either. But yeah, I heard you were the guy.
Yeah. Now, I did get your voice message, and I apologize for not calling you back. It's total chaos, this time of year.
Yeah, I get it. No worries, man.
I mean, it is for everybody, right? Hopefully for you too.
Yep, in a good way.
Yeah, exactly. Now, what type of company are you?
Yeah, so we are. So the name of our company is Power Tool Plus. So we're primarily a retailer and distributor of tools and automotive products, but we have started to kind of get into the industrial space. Hence, working with Ari Michael, selling really all kinds of products across that board. So that's why I wanted to give you guys a call directly, because there were, like I said, a few specific ICM part numbers that we were like, hey, we think we can do some decent volume on these, but I guess Ari Michael, 1, doesn't carry them, and 2, I guess doesn't have the ability to special order them. So yeah, that's kind of a quick background.
Yeah, well, that's interesting because they're one of our largest customers nationally, and between me and you, they they can order anything they want.
Well, that's what I thought. That's why, and my rep, he's a good guy. Like, we have a good relationship. We've done good business with him, but he was like, yeah, like, I looked in our system. I don't see these part numbers. So I'm like, well, I guess I'll give him a call direct, but I figured the case.
Yeah, right. And, we can, figure it all out. I want to go on your website. What's your website?
Yeah, so that would be it'd be powertoolplus.com, and power tool is singular.
Power tools, and plus is PLUS.
Yeah, and power tool is singular too. I need to always specify that because people usually default to plural.
Okay. Oh yeah. Okay. So you're selling, you're 100% selling online, correct? Power Tools Plus. Who's your number one customer? I guess. I mean, is it Mr. Jones looking for some adhesive tape?
Good question. Yeah, so to answer the first question as far as the online channel, so yeah, we are 100% online as far as our retail is concerned, right? So we do a bit of distribution as well. We've got about 150 or so dealers throughout the country that we distribute to. So on the distribution side, that's our, I guess, kind of our bread and butter customers, the kind of like the smaller mom and pop shop. And then our retail, I guess our regular retail customer would be exactly like you said. It's Mr. Jones, either he's a DIYer or he's just the end customer looking for that one part number that maybe he's having trouble sourcing through traditional channels, whether that be your Lowe's or Home Depot, or whether that be any of your other e-com channels that he just can't get his hands on that part.
Understood. And like, Milwaukee, are you guys buying Milwaukee direct right from Milwaukee?
So I wish we were. We're actually buying Milwaukee mainly through Medco, and then Delegard are two of the larger.
Sure.
Yeah, and we've been working with Medco for quite a while. Delegard more so over the last 2 to 3 years, but they've been great. So that I'd say those are kind of the two bigger suppliers on the Milwaukee tool side.
Got it. And so I'm just looking at your products. I mean, you're not really. Are you selling any HVAC equipment or accessories?
So not a ton at the moment, as obviously you can see there from the website, but I think I mentioned earlier, that is kind of an adjacent category that we're looking to dive into, because obviously, as I'm sure you are as well, always looking to expand the business. We've done great with tools and automotive for a number of years now, and that's hence the the relationship with Ari Michael and some of the products there. And we've even been in talks with Snyder, who's an HVAC product distributor here locally. And that's just a space that we're looking to break into, which is why I'd mentioned, I was like, well, hey, there's a few specific part numbers that you guys have where I'm like, hey, we're not going to go the full line to start, but I think ICM seems like a good candidate. And I think these specific part numbers are probably a good place to start. And that was kind of like the thought process there.
Right. Got it. I'm just asking these questions just so that, I get a better understanding of, what you guys are doing. And,
yeah.
Do you have a long list of ICM products that you're interested in?
So it's not super long, but I'm looking at a couple of them here just right off the top. And now this is just a short list of kind of the ones that we want the most. But, we did, or at least my team did a deep dive into the catalog. And I think we've got like 10 to 15 or so total on the list, but there was like 3-ish that we were looking to start with. And if those go well, we were looking to expand from there.
Okay. What are the top 3 that you're interested in?
Yep. So the first one here is the ICM 517, the single phase surge protector.
Yep.
And then let me see here on my list. So another was the ICM 493.
Perfect.
and then another was the ICM 281.
Okay, interesting. Yeah, the 517 is actually A at the end, which had a slight modification.
Okay.
To the product, no physical functional difference, but that product there is the best selling, most best surge protection product in the marketplace. And the 493 is an excellent surge protection line voltage monitoring device. So these typically would be installed with inverter technology equipment, ductless mini splits, that kind of thing. Is that where you're seeing these being installed?
Yeah. So, oh, sorry. Go ahead.
Yeah. No, I was just going to say with your customers.
So like I said earlier, right, our customers are mainly on the DIY side. So as far as what they end up doing with the product or how they end up installing it is a little bit out of our purview. But we do survey customers from time to time and say, hey, what lines do you guys want to see as far as repeat customers? What lines do you want to see? How are you using the product? How should we be servicing you better? So we do get some customer insight, but at the end of the day, the majority of the retail side it's more transactional, right? And I wish it weren't, but I feel like that's just the way, some of the retail is going these days, unfortunately.
Right. Yeah. Well, those are three top selling products for ICM. If you didn't know, ICM, we're based out of Syracuse, New York. We are a U.S. manufacturer. So products that you were just mentioning, and a lot of all of our other products are all manufactured right in the U.S.
I love that. That's great.
Yeah, it's really, really cool stuff. Now, what I don't want to do is, irritate, our biggest customer, Ari Michael.
Mm-hmm.
So, if you're currently buying from them, it's kind of a double-edged sword for me. And again, I'm just being honest with you. We would certainly be interested in, selling you. We just have to do a little bit more, get a better understanding from the Ari Michael side that you're again just not a customer trying to buy better, instead of not buying through Ari Michael. Because,
Sure.
I mean, Ari Michael, they've got the 517As, the 493s. Those are in stock in their distribution network. They're readily available, any day of the week.
Well, that's so weird because, like I said, when I talked to my rep, I mentioned these three part numbers by name, and I was on the phone with him, not even over email. He was like, "Yeah, I'm looking these up. I don't see them in our system." I think with the with the 517, I didn't know that there was an A at the end of it, so that's probably why that one didn't come up on his end. But I mean, he literally told me, he's like, "Well, hey, we can't get these, so go directly to them." But it sounds like it was just either a misunderstanding on his part or a miscommunication on my part. So, I mean, we have no issue going through them if that's what's required. Again, I just called you because my Ari Michael rep literally told me to.
Right. He's like, a couple pieces here, a couple pieces there, but at the end of the day, right? Short term, we got to just do a little bit of research, get a better understanding of, what the situation is.
Sure.
But long term, I mean, can we sell you? Of course. There's also other outlets, out there. I mean, we do have minimum freight requirements and things like that.
Mm-hmm.
You can't just order, I want to order one piece.
Yeah, and we wouldn't be ordering just one piece at a time. And just out of curiosity, what is the minimum there? I don't think we'd have any issue hitting it, but just so I know for my buying team.
It's $2,000. It's full freight allowed.
Okay, yeah, easy enough. I don't think there's really any scenario where the opening order would be under that amount, so that should be no issue.
Yeah, I mean, I got $1 million customers that complain. I need one piece. I know, but 600 locations. It's an order.
Right, yeah, exactly. It makes it a lot harder on you guys, I know, from a logistical perspective. When somebody just wants one piece, it's like, hey, you either hit the minimum or you don't, right? So trust me, I know how it is, and I think hopefully you'll come to find that we're a pretty easy customer to work with from that perspective.
Yeah. Now, do you guys have a brick and mortar, office facility that you work out of, or is everybody remote?
So everybody's fully remote. As far as our distribution centers are concerned, so we have a primary DC in New York, and that's in Farmingdale, New York. We've got another over in Oregon for the West Coast of the country, and then we've got one in Indiana as well for the Midwest portion. So as far as like a corporate perspective, we're remote, but from a distribution perspective, 3 primary locations. New York 3PL, Indiana 3PL, West Coast 3PL. So the first one is in Farmingdale, New York, and that's our primary. That's our primary ship to, and most of our orders go to that location because we've just found most of our customers are on the East Coast for whatever reason. Oh, sorry, say that one more time. I think you broke up a little bit.
Yeah, because we're having just a little delay there. But Farmingdale, that's that's New York, Long Island, so that's an expensive real estate there.
Yep, and so we've had, well, I guess it's a location that we've contracted out of for a number of years. But yeah, it's a great facility and a lot of space, great operation there, and that's where we receive most of our deliveries.
Who owns your company?
So I, along with my dad, we actually started it together a number of years ago, and I'm the principal buyer. I'm the kind of chief bottle washer, if you will. And, and he's my partner on the back end. So that's kind of the ownership makeup there.
Okay. Father, son, can't get any better than that.
Yeah, exactly. It's been great. Unfortunately, I've heard some horror stories from people who, they get into father-son businesses or they get into family businesses, and a lot of times it doesn't end too well, but we made a pretty good run of it and we have a good time. So no issues on my end.
Do you have my email address?
Let's see. I don't believe I do.
Yeah.
Let me write that down.
Yeah, it's first initial, last name, so M. Conant, CONANT at ICMcontrols.com.
Got it. Okay, perfect.
And if you don't mind, send me an email with per conversation here, and let me just do a little bit more research, and I'll definitely be back in touch.
Perfect. Fair enough. I will get that email sent over to you here shortly. And I know this week's crazy, like you said, so I'll give you some breathing room, but I might check in with you probably early next week once I get back into the swing of things, if I haven't heard from you, if that's okay.
Of course. So are you the Michael location down in North Carolina?
Yeah, so they've got a few here even in the Charlotte area, but let's see, my rep and the one I buy out of is the one on South Park Boulevard, I want to say, or actually, hold on, let me look. I can give you the address. It is the one out of, Wood Park Boulevard here in Charlotte.
Wood Park.
Yep.
Okay.
And I can give you my rep's name as well, if you'd like.
Yeah, sure.
It is Christopher, and I'm going to butcher his last name. I actually need to look it up, but I think he's the only Christopher at that location. Do you want me to grab his last name as well?
if you got it handy.
Yeah, I do. Give me 1 second here.
AS.
Yep.
Perfect. Yeah, I mean, I'm not going to contact them, but you know, it's just good to have.
Yeah, right. I figured it might help should we need it. So if there's anything else you need, yeah, just let me know. I'll send over that email here in a second, kind of summarizing things. And if you need more information from me, let me know. I'll be working this week up until Wednesday evening. And then obviously taking Thursday and Friday off. We'll be back at it on Monday.
Awesome. Well, great. Well, appreciate the follow-up call. And, you know, if we don't talk, you know, have a nice Thanksgiving.
You do the same. Yep. And I will look forward to talking to you soon.
Excellent. Thank you very much.
All right. Thank you. Bye.
Okay. Have a great day.
All right. Next, we're going to jump into 5 tips that I want you to keep in mind every time you're following up with a brand or a distributor. Now, this might be one of the most important sections of the entire free course because the FU money comes from the follow-up. Follow-up is everything. You're never going to get a really good account on the first outreach attempt. So these tips are going to be critical. Let me jump into my screen and show you exactly what I mean. So first and foremost, when you're following up with a brand or a distributor that you either couldn't get in touch with the first couple of times or they told you no originally, you've got to be specific because what doesn't work is saying, hey, just following up, you know, hey, just checking in. That does not really work. What does work is being as specific as possible and telling them your intentions. So instead of, hey, just following up, try, hey, just following up on that purchase order that I'm ready to place today for 100 units of XYZ product. I can send the PO today. Who should I send it to? Right? That is going to be way more effective than just saying, hey, just following up. And if you're following up with a brand, for example, you could say, hey, just following up because I know last time you said that you had your set of Amazon sellers in place. Well, it looks like the XYZ changes that I recommended they make have not yet been implemented. So I wanted to see what your plan was for getting those implemented here in the next 30 days to take your sales from 10K a month to 17K a month, right? You want to be as specific as possible or they're never going to take you seriously. Second tip is the triple dial method. Now, the triple dial method is exactly what it sounds like. When you call somebody on the phone and they don't answer the first time, you immediately call them back a second time. If they don't answer a second time, you immediately call them back a third time. And 70 to 80% of the time, they're going to answer on the third dial. Now, why is this important and why does this work? Because when somebody sees the same number calling them 3 times in a row, even if they don't recognize that number, they are going to pick up. This happened to me yesterday. I had the same number call me, and not even 3 times, but twice, back to back. The second time they called, I answered because I figured it was something important. And it turns out it was just UPS trying to make a delivery to my house. Now, you might be thinking that the person that you're calling would be annoyed by the fact that you're calling them 2 or 3 times in a row. And most of the time, that's not the case. Most of the time, they're curious as to why somebody is calling them multiple times in a row. They answer that call. As soon as they find out it's you, they're just satisfied because their curiosity has been satisfied. They're not necessarily going to be angry or upset like you might think they would be. The third tip is what I call the combo hits method. Now, this simply involves hitting a prospect, whether it's a sales rep at a distributor or the owner of a brand, whoever it is you're trying to get in touch with, hitting them from different angles at the same time. So what I like to do, what works really well, is I like to call, let's just say we're prospecting a brand owner. I like to call them on the phone. If they don't answer, I like to leave them a voicemail. And right after I leave them a voicemail, I immediately send them an email saying, hey, Mr. Brand Owner, I just left you a voicemail about XYZ. Please get back to me as soon as you can. And then I'll immediately go to LinkedIn and send them a message on LinkedIn that says, hey, I just left you a voicemail and I sent you an email just in case you didn't get the voicemail about XYZ. Please get back to me when you can. So in that example, you're hitting them from 3 different angles. You left them, well, really 4 different angles because you called them, you left them a voicemail, you sent them an email telling them you called them, and then you sent them a LinkedIn message telling them you sent them an email and you called them. Some people might think this method is aggressive. but it works because the chances of you getting a response from one of 4 different outreach attempts is significantly higher than you getting a response from just one. All right, so that is the combo hits method, and it works very well. The 4th tip for following up is take the amount of time that they told you to follow up and cut it in half. Now, what I mean by this is a lot of times when you talk to a brand or you talk to a distributor, if they're a good lead, if they're a good brand or a good distributor, they are going to deny you on the first attempt. And honestly, they're probably going to deny you on the first 3, 5, or 10 attempts. So what I like to do is I like to ask them for permission to follow up. So I say, hey, I understand right now the timing isn't necessarily ideal, but is it okay with you if I check in with you once every 30 to 60 days just to stay top of mind and see if timing is better around that time? Vast majority of the time, they're going to say, yeah, sure, that's fine, because honestly, they don't even expect you to follow up. So when you do, I like to follow up in half the time that I propose. So if I say, hey, do you mind if I check in with you once a month? And they say yes, then I might follow up every 2 to 3 weeks. Now, the reason this works well is because 2 to 3 weeks later, they've already forgotten about you. So they don't necessarily remember you at all. And they definitely don't remember that you said that you were going to follow up every 30 days. So you're not annoying them. You're not going to be pestering them. And if you're following up too frequently, they're going to tell you, hey, Corey, please only check in with me once a month. Please only check in with me once a quarter, right? My very best brand direct account that took me 3.5 years to land, when I was first following up with them, I was following up with them once a month. And they told me very directly, they said, Corey, do not follow up more than once per quarter. You can follow up once per quarter, but no more frequently than that. So I said, sure, no problem. And I followed up exactly what they asked, once per quarter for 3.5 years, and I got the account 3.5 years later. So again, if you're going to tell them, hey, I'll check in with you once a quarter, then check in with them once every 6 weeks. It'll be more likely that you stay top of mind and your timing is going to work out better that way. Lastly, when it comes to following up, especially if you're following up with a brand owner, and if you're taking more of the partnership approach, like we teach inside the wholesale network, then it's going to be ideal to send Loom videos from time to time, explaining to them what the issues or the deficiencies that you're noticing in their listings are. So for example, if you talk to a brand and you realize that their listing sucks, they have no listing images, they're not running any PPC ads, their pricing is fluctuating constantly because their sellers are all undercutting each other, then a strategy that's really effective is to record a quick 2 to 3 minute, no more than 2 to 3 minute video of yourself simply explaining those issues to them. Hey, Mr. Brand Owner, I know you said I know you said the timing wasn't great right now, but I just wanted to follow up with this quick video. If I was you, if I was in your shoes, this is information that I would want to know. Therefore, you got this issue, your listings are, your images are incorrect, or, hey, your sellers are undercutting each other and here's the proof, right? Here's the Keepa graph. Keeping it to 2 to 3 minutes or less can be really effective and explains to them in words that they can understand exactly what they're missing out on. So those are my 5 main tips when it comes to following up. These are very effective. And when you combine these tips into all of the outreach and all the prospecting that you're doing, the chances of you landing these accounts goes up significantly. So I hope this helps, and we're going to jump into the next section of the free course. All right, the next thing that we're going to cover is the most common supplier objections. Now, this is all part of the supplier or of the distributor and brand telephone, basically negotiation and calling scripts. So if you guys, again, want a copy of all of these scripts, all of these templates here, including the top supplier objections, and you can grab that at the link in the description below. Okay, so the most common objection you're going to get from suppliers by far is, sorry, we don't sell to Amazon sellers. Now, this is my most common way to overcome that objection and what has worked best for me in the past. So I will typically agree with them because there's no point in trying to argue with them and saying, well, hey, why is that? Why don't you? I'm different. They've heard that a million times before. So what I like to say is I actually like to agree with them. I like to say, well, I understand, and I don't blame you, actually, since 95% of Amazon sellers are completely clueless. All right, so you affirm their decision, you agree with them, and that probably right off the bat takes them off guard. They're like, wait, okay, well, this guy is an Amazon seller. he's agreeing with me. Is he different? Because why would he be agreeing with me if he wasn't? So next, I like to say something along the lines of, well, I understand, most Amazon sellers are clueless, but that's unfortunate because I have a PO here ready to go. And, this is more of a negotiation technique. You don't necessarily have to use this exact wording, but you could use it and kind of spin it in a way that is true. So you could say, well, I have a call scheduled with competitor one, but I wanted to give you the opportunity for the business first. Now, keep in mind, you don't necessarily need to have a call scheduled with somebody from the competitor on your calendar for this statement to be true. What this could mean is, well, hey, I'm planning to call your competitor this afternoon, right? But by saying it this way, it appears as if you're already engaging with their competitor and they've taken you seriously, so therefore this supplier should as well. So when I say, well, okay, I have a PO ready to go, it's unfortunate, but I've got a call scheduled with your competitor this afternoon. I wanted to give you the opportunity first. And again, always asking that open-ended question, ending with, well, what needs to be done to get this order pushed through today? Right? So you're doing a few things here. One, you're agreeing with them instead of disagreeing with them, which automatically lowers their guard. Two, you're explaining to them that you have a PO ready to go, right? Now, whether or not you do is irrelevant, because if they let you through and if they say, well, okay, well, we can make an exception, you can very easily write up a quick PO for even one product, assuming you get good pricing, right? So you don't necessarily need to have a PO prepared beforehand. This is just a negotiating tactic. And then three, you let them know that you are actively engaging with their competitors. And if they don't want to let you through, then you're just going to go straight to their competitors. Distributors and brands are just like anybody else. They want to win. They want to steal market share from their competitors. So anytime you name drop their competitors, the chances of you getting through the door are that much higher. And then again, ending with an open-ended question. What needs to be done to get this order pushed through today? So that way they're not giving you a no. They can't give you a no. By asking that open-ended question, you flip the script on them, and now they're thinking about how to solve your problem, which is, how do you get a PO pushed through today? Now we'll move on to the next objection here, which is, we require a brick and mortar storefront, right? And keep in mind, all of these objections come in multiple different forms. They might say, well, yeah, we don't take on any new e-commerce customers, or we don't let our people sell on Amazon, or you got to have a retail storefront, right? These can take many different forms, but in general, all these objections mean the same thing, and you're going to see some variation of all of these objections at one point or another during your Amazon selling journey. So when they say we require a brick and mortar storefront, I again agree with them. Okay, understood. May I ask why that's the case? And then let them answer. Because a lot of times they'll say, well, we want our people to have a established presence in person where customers can come in and pick stuff up off the shelves, can get support, can ask questions to the salespeople in your store, right? So I say, okay, well, I realize it's a strict requirement a lot of times for many of the manufacturers that you carry if you're talking to a distributor. But at the end of the day, if I'm able to buy just as much, if not more, than one of your regular brick and mortar dealers, what would the difference be? Again, always asking an open-ended question, because you're saying, well, hey, okay, if you require a store, that is fine. But if I'm going to buy more inventory from you than your average brick and mortar customer, then what's the difference, right? If I'm able to spend money, who cares, is essentially what you're saying. And again, I always like to throw a competitor into the mix and just lean on that competition aspect. Well, hey, I'm in touch with competitor one, and based on the order that I have in front of me, I have a feeling they'll make an exception. All right. So this is a script that some people are not comfortable with because it's pretty direct. It can be perceived somewhat confrontational when you say, well, hey, I'm in touch with your competitor, and they'll make an exception if you won't, right? So you're being pretty direct with them. So when it comes to this objection, there's a few different variations that you can create in order to overcome this objection, but I tend to be more direct by nature, and I tend to have no problem cutting right to the chase. So if somebody says to me, well, hey, we require a brick and mortar storefront, immediately I'm going to say, okay, well, that's fine, but I'm going to spend more money than all of your brick and mortar customers anyway. So what does it matter, right? And if you're still not willing to make an exception, that's fine. I'm just going to go down the street to your customer and work with them, or your competitor and work with them. So that is my favorite response to the brick and mortar storefront objection. And again, guys, there's going to be multiple ways to overcome all of these objections. These are just the lines and the scripts that have worked best for me in my experience. Another common objection you're going to get is we already have our group of authorized Amazon sellers and we're not looking to add more. Okay, so that is really a variation of the we don't sell to Amazon sellers objection. Sometimes they don't sell to Amazon sellers because they don't like Amazon sellers. Sometimes they don't sell to Amazon sellers because they have too many. Sometimes they don't sell to Amazon sellers because they already have their group of authorized sellers and they don't want to add any more. In which case, I like to say, good for you, because most suppliers sell to just about anyone, which causes a ton of headaches for everyone involved, right? So again, we are affirming exactly what it is that they said to us. We're saying, well, hey, you've got your group of authorized sellers, good for you, because most suppliers are not as sophisticated as you are. They'll sell to anybody, which ends up creating a lot of problems for them down the road. All right. And then I say next, well, if you don't mind me asking, what does a typical PO from one of your existing sellers look like? I'm happy to send over an even larger order than what you're used to. How does that sound? So in this case, you're trying to play on their greed and their desire to make more sales. So you're saying, again, you're affirming their strategy. You're saying, great, you've got your existing sellers. That's no problem. But if I can outspend them, if I can outspend one of them, then would you let me come on board? That's basically what you're saying. And a lot of times they're going to say, well, they spend X amount, but we're happy with them. We don't really want to work with anyone else. In which case you just continue to follow up with them and continue to press that button. But what I like to do, like I said, is dangle an order in front of them. Well, hey, if I can send over an even larger order than what you're used to, how does that sound? We can make something happen. All right. And two of the final objections that you're going to get. One of them is, well, hey, your order is lower than our MOQ, right? So let's say you get in with a brand or you get in with a distributor and you go to place that first order, but then they come back and they say, well, hey, the order that you want to place, it's under our minimum, so we can't process this order, which is not as common of an objection because a lot of times suppliers are willing to negotiate on the minimum, but it happens. And so when that happens, this is what I like to say. I say, I understand, but the reason for the smaller order is we like to test the market. We like to determine how many we're going to be able to sell. We like to determine the actual sales velocity that we're going to see. Because until we actually sell the products, it's just an estimate, right? So once we sell through the first order, we're actually almost always able to come back and place a much larger follow-up order, which is true. Once we've placed our test order, once we've sold through our test order, we can come back and buy a lot more inventory. And then always asking the open-ended question, knowing that we'll be ramping up our business with you over time, what sort of exception could be made for this first order? All right. Now, if you get hit with this objection and you hit them with this script, I can virtually guarantee they're going to make an exception and say, okay, well, we can get this order pushed through, or okay, well, maybe you've got to spend a little more than your current order. Maybe you got to come up a little bit, but we can make it happen, right? At the end of the day, suppliers just want to make sales. If you can claim and you can basically sell them on the idea that you're going to spend more money with them over time, then they'll make an exception for you almost every time. Then the last objection that you'll see is we have a strict MAP policy and none of our Amazon sellers are following it. So it doesn't make sense to add any new sellers. All right. So this is a variation of this objection and this objection, right? A lot of objections you see are going to be the same thing, just said different ways. So when they say, hey, we've got a MAP policy, none of our sellers are following it, so we're not going to add any more new sellers. That's when, as always, affirm what they say, affirm their objection, say, I hear you loud and clear. MAP can be a nightmare to police, especially if you have a ton of Amazon sellers, which is true, right? If a brand has a minimum advertised pricing policy, which is what MAP stands for, and if they have multiple Amazon sellers, a lot of times it's difficult for the brand to police that pricing because they have so many sellers on their listings. So one of the questions I like to ask here is, okay, well, of the current sellers that you have, how many of them are actually authorized? And what you'll find is a lot of times brands will say, well, 3 of them are authorized, but we've got these 10 guys on our listing and we don't know who they are. We can't figure out where they're getting the product, right? Which is probably the most common response to that question. Most brands that have an issue with MAP being followed have an even bigger issue with a ton of unauthorized sellers on their listings. So that's when I'll pivot to, well, there are some effective methods for getting back control of your brand that can be implemented relatively quickly. Are you familiar with the transparency program? So talking about the transparency program is a bit outside the scope of this free course, but just know that it is a program that a brand can enroll in at the ASIN level. So a brand can enroll certain ASINs into the transparency program. And what that allows the brand to do is lock down that listing to where only sellers that have certain transparency labels applied to their units can sell on that listing. So when an ASIN is transparency enabled, only the brand has access to the codes. The brand can then decide who gets the codes, and therefore the only people that can sell the product are the people with the codes. Okay, so that is the transparency program in a nutshell. Technically, according to transparency terms of service, every unit that the brand manufactures of that ASIN must be transparency coded. They technically can't just give transparency codes to certain people and not other people. It's a gray area in the transparency terms of service, but it is what many brands do to get around, or it's what many brands do to allow certain sellers to sell their products and certain other sellers not to. So again, read the transparency terms of service. If you go this route, I just wanted to include that caveat because technically it's against transparency terms of service, but thousands of brands do it anyways, and Amazon doesn't care and turns a blind eye. So that is the best method that I'm aware of for getting back control of a listing or of an ASIN that a brand can enroll in relatively quickly. So when you ask this question, are you familiar with the transparency program? This is a yes or no question that you want them to say either yes or no to. In fact, you probably want them to say no, because if they say no, that means they don't know that this is an option, which then allows you to educate them on this option and position yourself potentially as the one who's qualified to help them implement this, and therefore get a spot as an authorized seller in return. All right, so these are the most common objections you're going to face in your wholesale journey, whether you're talking to brands, whether you're talking to distributors. And again, guys, you can get the common objections as well as all of the brand scripts and all of the distributor scripts. This is just the supplier scripts playbook is what I call it, at the link in the description below, completely for free. And we'll jump into the next section. All right, next we're going to look at best practices when it comes to filling out supplier applications. So this is going to be a pretty quick section, but I wanted to include it here because I've seen a lot of people do applications, either fill them out or submit them the wrong way. Now, the first tip I can give here is when you get an application from a supplier, please, please, please fill it out completely. Don't leave any information out. Don't leave any sections blank, because there's nothing that makes you look more unprofessional, and there's nothing that's a bigger pain for the supplier than having to go back to you and having you either resubmit the application or enter in information that you forgot to enter or follow up with you because you didn't complete a certain section, okay? So when you get an application from a supplier, fill it out completely. Do not leave any stones unturned. They're going to thank you for it, and it's going to make the process go a lot smoother, and it makes you look more professional. The second best practice for filling out applications is when you get an application from a supplier, fill it out and return it back to them in 24 hours or less. Okay, this is key because, again, this just shows professionalism. When you move quickly, when you move with speed, it shows that you're serious about your business. It shows that you know what you're doing. And if they send you an application in the morning, for example, then get it to them before the end of the day. Also, because applications can take a few days to process, sometimes longer if you're applying for credit terms. So you want to give yourself the best opportunity to start sourcing products as quickly as possible, and filling out applications and returning them quickly is the best way to do that. Third tip is when you submit an application, so after you've submitted it and your supplier says they're processing it, I like to follow up every 3 business days at least and just check in and make sure that they don't need any more information from you. So what I like to do is when I submit the application, let's say I submit it to my sales rep or even to somebody in the accounting department, for example, every 3 days, 3 days later, I will call them up and I'll say, hey, This is Corey Ganem. I'm calling on behalf of XYZ Company. I submitted my application 3 days ago. I haven't heard anything back yet. So I just wanted to check in and follow up on the status of my application. Is there any more information that you need from me to process my application successfully? Most of the time they'll say, no, we've got everything we need. It's just going through approvals right now. We'll contact you as soon as it's processed. And if you still don't hear back within 3 business days later, call them up, ask the same thing, make sure there's no roadblocks, but stay on top of them. Okay, they will appreciate it because it shows that you're a serious buyer and you're ready to move forward as soon as your application gets pushed through. Lastly, guys, please be honest on applications. Do not lie. If there's a section that says, hey, where are you going to be selling our products? And Amazon is one of the options. And if you're truly planning to sell it on Amazon, which if you're watching this video, you probably are, then check that box, okay? It's better to check that box and have that conversation with your sales rep on the front end than it is to check that box, sell the product on Amazon, and then they find out 30 days or 2 or 3 months later that you lied on your application. Then they cut you off and you've completely ruined the relationship. So be honest. When it asks for years in business, if you've only been in business for 3 months, then put 3 months. If you've been in business for 3 years, put 3 years. Honesty is always the best policy. We don't lie about where we sell. We don't lie about what we're doing. And the more straight up you can be with a supplier, the more they're going to trust you and the more you're going to build that long-term relationship. All right, this is an example of an application from a supplier, oftentimes called a credit application. Okay, so this is going to be example number 1 of 2. We're going to go through one more application as an example, and I'm just going to show you guys what these applications generally look like. Okay, so they're not intimidating. A lot of times they're not super long, but they just usually request the same set of information that you want to fill out completely and accurately, so that way they have no problem in processing your application quickly. Okay, so the first thing that we have here is just the contact name. So this is going to be, well, I guess even before we get to the name, right? You want to put your name of business. This is going to be your entity, your LLC, whatever sort of corporate structure you're using. And then checking the box for what type of company you are. So limited partnership in this case would be an LLC. So this is what the box that I would choose. And then from there, we'd go fill out contact name. That would be my name. Then this would be your business address, city, state, and zip. So anytime they ask for address, city, state, and zip, if they don't specify the type of address, whether it's a shipping address or a billing address, then I always default to my billing address. Next, they want your business phone number, fax number. Nobody here watching this video is going to have a fax, so you can just leave that blank. Email. So this would be where I like to put my purchasing email. So it might be my purchasing@powertoolplus.com. If this is a tool business that I'm reaching out to, this could be your, sales@yourwebsite.com. But guys, please, if you've gotten this far in the series, please tell me you've set up a business professional email and you're not using a Gmail or a Yahoo here, because that just looks unprofessional and makes it likely that they are going to shut down your account or not open you in the first place. So next is going to be your federal ID or social security number. So if you're operating an LLC, that is going to be your EIN number. Partners, owners, or president. So I would just put my own name here. Date established. Again, we don't ever want to lie to make it appear like we've been in business longer than we have. If you just opened up your LLC last week, then put April 2025. If you've been in business since 2017, put 2017. But just be truthful here, because a lot of times if they find conflicting information, they'll be suspicious and might not want to work with you. So here, credit references. This is a common question that people have, and I feel like this is a roadblock that a lot of people run into. Obviously, this part of the application is easy to fill out, no problem. But then people get to credit references and they freeze. They don't know what to put here, or they just don't submit the application because they think that they can't leave this blank. Now, the reason that companies ask for credit references is because if you are requesting terms with that company, meaning they are going to extend you credit or a line of credit, they need to be able to check with other people that you've done business with to make sure that you pay your bills on time. Because if I'm applying for, let's say, a $20K line of credit with this company, Custer Products, they're not going to just give me $20K until they've gone to other companies I've done business with and said, hey, I see you've done business with Corey Ganem. Does he pay his bills? Has he paid his credit invoices on time? What kind of customer is he? All right, so that is that's the information that they're going to want to get when they ask for credit references. Now, most people don't know that you don't have to put credit references because you don't have to apply for credit. In fact, I usually don't apply for credit or terms with my supplier up front until I know that I'm going to be working with them, until I've done a couple of orders with them. So in this case, I might just leave my credit references blank. And when I go and submit my application to the supplier, I say, hey, here's the application. You'll see that I left credit references blank. It's because I prefer to prepay with a credit card until we've gotten a couple of transactions under our belt, and then we can come back and apply for terms. And 90% of the time they say, sure, no problem, that's fine. Sometimes they will say, well, hey, that's fine, but you need to put something on credit references. In which case, if they demand that I put at least something for my credit references, then I will put people like my bank, right? The bank that I do business with. You can simply put the name of your bank, the address of the bank, the main phone number of the bank, and then the support email for your bank, right? Everybody has a bank that they're doing business with. What you could do is you could open up a trade account with Uline. So Uline is a package company. They sell boxes and tape and packing supplies and moving supplies. Anybody can set up an account with Uline and get terms with Uline right off the bat. And so what you could do is you could do that, set up with Uline, and then come back here and put Uline as a credit reference. But really, your bank is going to be enough to suffice, especially if you're not actually applying for terms with this supplier. Now, what you'll see here is that the terms that they offer is 2% 10, net 30 days. That simply means that you have 30 days with which to pay your invoice before it's due in full if they give you credit. Okay, so here, the next part of this application is going to be a W-9 form. And what that simply means, this is a government IRS form that's just a request for your taxpayer identification number and certification. All right. So in order to fill this out, you fill out your entity name. This is not your personal name. This is your company's name. You can leave this blank because it says you only fill this out if it's different from above. Then you can check the box for your tax classification. So for me, I'm a limited liability company. I would check this box. I'm an S corporation, so I would put the word S right here. And then you could simply put your name, or sorry, your address. No, sorry, not your address, your company's, your billing address right here. And then part 1 is where you enter in your employer identification number. So this would be your EIN number. So business information here, EIN number here, and then sign and date here. And then you would submit this form along with your application to the supplier. And all this form does is it lets the supplier check with the IRS internally and say, hey, this business are who they say they are. That's all that means, right? This EIN number here is tied to this specific business. Everything checks out on the application as well. And that's just what allows them to verify your business information. So that is an example of a credit application, as well as how we deal with references. So we'll look at one more application here in a second. All right, this is another example of a supplier application. Now I'm going to zoom in a little bit on this one. And this one is a little more intense as far as what they asked for. And we're going to be going through line by line and explaining what this sort of application, or how you would approach it and how you would fill it out completely. So the first thing they're asking for here is this a parent company? And 99.9% of the people watching this video, the answer is going to be no, because we're just a standalone entity. We're not the parent company, or we're not owned by a parent company. So we put no. In this case, your name, and then attention. So this would be anybody that that maybe does these orders on your behalf, or anybody whose attention should be drawn to your communications with the supplier. I just leave that blank. Here you would put your billing address, okay? So this would be your billing address, and then this would be your shipping address, your ship to. So most applications are going to have a bill to and a ship to. Your bill to is going to be your legal business address, the registered address in your Amazon seller account. And then your ship to is going to be wherever you want the product shipped to. If you're using a prep center, this would be your prep center's address. If you're doing prep out of your garage, this would be your house. So that would be shipped to. Next would be just your phone number, the owner's name, your driver's license number, your birthday, your social security number. Now, that might seem like personal info, and you might be thinking, well, why do they need all that information about me personally? Some suppliers ask for a social security number, some ask for a driver's license, and really at the end of the day, every supplier is going to be different as far as the information they ask for. Just know that I've given my social security number out to suppliers before. I've never had an issue. You just want to make sure that you're dealing with a legit distributor. So as long as you've done your research and you've paid attention to the 3 criteria that we use to verify distributors, there shouldn't be any issues in giving them your social security number. They just use this information, your social and your driver's license, for example, to vet you and make sure you're a legitimate person who, for example, isn't wanted for ripping off a distributor before, right? Maybe opening a line of credit with a distributor and then not paying it. So they're trying to kind of protect themselves by getting some of this information on you. Fax number, I always leave that blank. Accounts payable contact, you can just put yourself here. Federal ID number, this is your EIN number. Resale tax number, this is going to be your resale certificate, which again, we went into detail on how to get that and how to get that number set up in an earlier part of this free course. And they're basically saying, hey, without a sales tax number, you're going to be charged sales tax where applicable. So that's why it's important to get your resale certificate and to get registered with your state Department of Revenue so that you can get that taken care of early so you're not paying sales tax on your wholesale orders. So if you're shipping to a prep center, the only line to keep in mind here is the attention line. So if I'm shipping to, let's say, my prep center's name of the prep center here, the attention line might be the person at the prep center who receives my orders, right? Maybe it's the warehouse manager, or maybe it's my account rep. You don't have to put anything there, but sometimes it's helpful because when they receive the shipment, they can see exactly who should be paying attention to it. Here's the address to your ship to address, your phone number, your buyer's name, fax number, bill to address, and then phone number, fax number, resale tax number. So this is you. I don't know why they have you repeat the resale tax number here, but I would just put the same number here that I put here. And then they've got a couple of boxes and a couple of things down here. So they're saying taxable, yes or no. So because we are a reseller, because we are buying at wholesale, selling retail, and because we are exempt from paying sales tax, if we have our resale certificate, then we're going to check the box no, because we are not taxable. Second, is our back orders accepted? So what they're asking is, hey, Corey, if you order 10 units of these AirPods and we only have 8 units of the AirPods available, then do you want us to ship you the 8 and then keep the other 2 units that we don't have available? Do you want us to back order those and we'll ship them to you when we get them in? All right, some people are okay with that. It really just depends on how long the lead time is. So I like to say, yes, back orders are accepted, but then I like to communicate with my sales rep on an order-to-order basis. If it's going to be a 6-week back order, if it's going to take 6 weeks for me to get my order, then I'm probably not going to want to back order that product. If it's going to be 6 days, then I'm probably okay with that. Okay, so I like to check yes and then have a conversation with my sales rep on an order-by-order basis. Next, they say, is a PO number required? So for me and how we keep track of records in my business, I say yes, because every PO has a PO number. If you are newer or you're just starting out, you might just say no, because that might complicate your record keeping. You just want to send off an order and have them process it. Shipping comments, I don't put anything here. Invoice comments, I usually don't put anything here. But if, for example, maybe you want your invoices to go to a certain email address, like we used to have a specific email address just for invoices. So if in that case, I might say, hey, send all invoices to invoices@CoreyGandam.com, for example. Referred by, so we weren't referred by anybody in this case. We found this supplier just from our regular research. Type of business, this is where I just like to put retail, and then inventory financing source. Here I might put something like just cash, right? Or business line of credit, or business capital, right? The capital that we already have inside the business. Is the buyer's address the same as the ship to address? So because I use a prep center, my billing address is different from my shipping address. So I would put no here. Back order accepted. Again, I don't know why they're repeating some of these questions here, but I would put yes. And then does an affiliate of yours currently do business with us? No, because I'm just a standalone company. If yes, name of location or customer number. That wouldn't apply here. Have you done business with us in the past? No. If yes, name or location. Obviously, we'd leave that blank. And then here they say this section of the application is for the sales manager's use only. So this is where internally, we're not going to see this, but they're going to go in and assign us a salesperson. They're going to give us a certain class of what type of customer we are and go from there and process all this information internally. All right, so this is the credit application. So notice how here at the top, it says if credit is requested, this page must be completed. So because most of you watching this, and myself included, I don't request credit on my first interaction. Usually I don't request credit until I've done a couple of orders with that supplier. So because I don't need credit right off the bat, I would just leave this whole thing blank, okay? You could cross through it, or you could simply reach out to them when you submit your application and say, hey, I left page 2 blank because I'm not requesting credit. I'm going to be prepaying for my orders with a credit card. Now, if you wanted to request credit, you could simply fill this out beginning to end. That's where they're going to ask, well, how long you been in business? What type of company are you? Who runs your company? Who's the president? Who's the vice president? All this information. Who are the partners? Are you listed on Dun and Bradstreet, right? They're going to ask that. Any other credit bureaus that you're listed on, they're going to want to know those. They're going to want to know a reference to your bank, because again, they're going to call up your bank and say, hey, does Corey have liquidity in his accounts? Does he have cash in his accounts, or is he broke, right? They're going to want to know that information so that they can determine how much credit they should give me, if any at all. And then trade references are similar to what we discussed on the first application that we broke down. So trade reference and credit reference, they mean the same thing. These are going to be companies that you have done business with in the past that Lesco can call to confirm that you are a good business person, that you pay your bills on time. Now, the best trade references and the best credit references are ones where you have a line of credit with them already. They have currently extended you credit and you're currently paying your bills on time. So if you put a company here, XYZ Supplier, and XYZ Supplier has given you a $5,000 line of credit and you've always paid it on time, when Lesco calls XYZ Supplier is going to say, yep, Corey's company has a $5,000 credit limit. They pay it on time every time. They've been a good customer. They pay their bills. We like working with Corey. Then Lesco is going to come back to us and say, okay, well, based on XYZ Supplier, based on these other references that you have, we might give you a line of credit of, say, $5,000 or $10,000 or $3,000. It really depends on how strong your references are. And then the last part here is going to be the individual personal guarantee. So this is only going to apply if you are buying on credit. So if you have terms with that supplier, a lot of suppliers will require you to sign a personal guarantee. Now, what is a personal guarantee? A personal guarantee is you as the individual, the owner of your company, separate from your company, you as an individual saying, hey, if my company can't pay Lesco back, if we can't pay our line of credit, then I, Corey Ganem, individually am going to pay Lesco back. All right. And if I can't, then Lesco can come after me and take my assets in order to satisfy my debt. So a personal guarantee is something that a lot of suppliers, again, they will require it if they are giving you a line of credit. You can say, well, hey, I don't sign personal guarantees and cross through this, in which case Lesco might say, okay, well, then we're not giving you a line of credit. So a personal guarantee, just know that this is a negotiating point. Now, if you don't have any trade references or you don't have any experience and you've only been in the business for a month, they're probably going to make you sign this if you're going to request credit from them. They're probably going to say no personal guarantee. Okay, no line of credit. But if you've been in business for a long time, if you have liquidity, if you have a lot of good credit and trade references, well, then they might say, okay, well, fine, you don't have to sign the personal guarantee because we can see your business pays its bills on time and it has a lot of cash reserves. Okay, so just know that that's what an individual personal guarantee is. It's you as the owner of the business saying that you will pay the business's debts if the business goes bankrupt. So that's all for this application. Most applications are going to look similar to one of the two that we've looked at in the series. The first one we looked at was a little simpler. It was pretty cut and dry. This one was a little more in-depth with a few more components, such as the personal guarantee, as well as the entire separate credit application. So I hope this helps you guys in navigating these applications and realizing that they're not that scary. They're not that big of a deal. You just want to know how to fill them out knowledgeably, completely, and fully, and do it on time so that the supplier can approve you quicker. During this next section, we're going to go over what to do once you receive pricing from your supplier. Now, this can work whether you received a list of pricing from a brand. This definitely works if you received a list of pricing from a distributor, because a lot of times distributors are going to have big price lists or big websites with lots of products on them, and you need an efficient way to source that pricing. So I'm going to share my screen and I'm going to go through the three main things we do once we receive pricing from a supplier. So there's three main methods. I'm going to explain each of these three, and then I'm going to show you an example of these three, and then I'm going to go into the pros and cons of these three methods. So first and foremost, the first option we have here is manual sourcing. Okay, now what is manual sourcing? Manual sourcing involves going product by product, brand by brand, comparing pricing from the supplier's price list or website to the pricing on Amazon. Okay, so what does that look like? Let's say we've got either an Excel list of pricing from a supplier, or let's say that we've got access to a supplier's pricing portal like we do here, in which case you could go manufacturer by manufacturer, click on a brand, you can go brand by brand, and start to compare their pricing manually to the pricing on Amazon. So I searched by brand, I clicked on our products. Now we've got all the products from that brand. And so what we would do is we would open up a new tab of Amazon, and you could simply either copy and paste the product name or the part number or the brand name and the part number. There's a couple of different ways you can do manual sourcing, but it is just like it sounds. You're going product by product, looking for matches on Amazon's website and comparing the pricing to see what might be profitable. All right, the next method is called UPC scraping. So that is where if you have a list of UPC codes from your brand or from your distributor on an Excel document, you can simply upload that list of UPCs to your favorite scanning tool. And that scanning tool is going to compare the UPCs on your list to the UPCs of products on Amazon, and it is going to find the matches. So what that looks like, the tool that I use for UPC scanning, it's called Scan Unlimited, and there's going to be a discount link in the description below if you guys want to check out this tool for yourself. But here we had a list of Milwaukee products with, I think it was about 13,000 different products. And we had a list of all the UPC codes of those products as well as our supplier's pricing. Well, we uploaded that to Scan Unlimited here. And what Scan Unlimited did is it took the UPC code on our list, it compared it to the UPC codes on Amazon, and it found all the ASINs of the matching UPCs. So now, for example, this product was on our list with a cost of $142. The price it's selling for on Amazon is $133. So obviously we are not going to be making money on this product, but we didn't have to take all the time to go and match the product up to an Amazon listing. Scan Unlimited did that for us because we had the UPC code already available. So that is the UPC scraping method. And then lastly is the reverse sourcing via SmartScout method, which is when you use SmartScout to narrow down the best brands and the best ASINs when the UPC lists aren't available to do the UPC scraping method. So what that looks like is, assuming you are, let's say you're buying from a distributor and that distributor has a bunch of different brands that they carry. Well, instead of doing the manual sourcing where you go product by product, brand by brand, and if we don't have a list of UPCs with which to do the UPC scraping method, then the best way to source is to use SmartScout, going to the brands tool here, opening that tool, and coming up here and putting in a list of all the different brand names that that supplier has access to. So on the theme of tools, let's just use a few tool brands as examples. Let's just say your supplier has Milwaukee, they've got DeWalt, they've got Makita, and let's say that those are the 3 brands that your distributor carries. So what you can do is you can type in those brand names, 1 per line, and you can search up to 3,000 brands at a time. So this is really powerful because most distributors are not going to carry 3,000 brands. Most distributors probably aren't even going to carry 300 brands. So theoretically, you could put every brand that your distributor carries into this list here, hit apply, and then it's going to pull those brands up here within SmartScout. So what we can do now is we can check the box here and either save them to a custom segment, which we went over during our section on how to use SmartScout, how to use custom segments, or we could simply go brand by brand, clicking on the brand name, which will open a new tab in SmartScout, at which point we can start drilling into the products from that brand and start applying some filters to narrow down the very best products. So if I move myself over here to the left, we can see of the DeWalt brand, there's 5,383 listings for DeWalt on Amazon. Well, I can simply now apply some further filters where maybe I want to see brands that have a certain category rank. Maybe I can see brands that are selling a certain amount or products that are selling a certain amount of units per month, or maybe the ones that Amazon is not dominating, or maybe the ones that have a low page score that I can then go to the brand and help them try to fix that. There's a million different combinations of filters that you can apply here to narrow down the very best products from these brands, the ones that you want to then go after. So we could take this list of 5,383 DeWalt products and narrow it down to maybe the top 10 or the top 20 ones that we want to source based on our criteria. And we simply do that exercise for each brand that we're looking to source if we're buying from a distributor, or we can just do this exercise for the one brand if we're buying directly from the brand themselves. So that is the 3 things that we can do when we get pricing from our supplier. Now, if we go into the pros and cons of each, right, the pros of manual sourcing are that you can find a ton of hidden gems because no one does it. All right, so using this example earlier, guys, there's very few people, if anybody, that is going to take the time to go product by product, brand by brand, model number by model number, and manually search these model numbers on Amazon to find the matches and find the profitable opportunities. Nobody does it because it takes so much time and it's so tedious. However, the people that do it are oftentimes able to find some really, really profitable products that nobody else has found because nobody else has taken the time to do that same work. Okay. Now that sometimes you can go 6 hours or even 6 days of manual sourcing like this and not find anything. Other times you can go 6 hours and find 30 products that are extremely profitable that nobody else has found because nobody has done this work. So that is one of the pros of this method, is that you can find a ton of hidden gems because of how tedious it is and because no one does it. The cons, as I mentioned, is it's extremely tedious and extremely time consuming. It might take you, I mean, this supplier here has, how many different manufacturers do they have? They probably got, I don't know how many this is, but let's just say this is 300 brands, maybe more, and hundreds, if not maybe 1,000 or more products from each brand. So it might take you literally 2 months to go product by product, brand by brand, just for this one supplier. All right, that's a lot of time. So that is one of the biggest cons, is that it takes a ton of time. Now, if you have a virtual assistant or a team of virtual assistants who you've trained in your sourcing methods, like I have, then you can have them do that work for you, right? So that way, you're not the one spending all your time in the weeds going product by product. You're paying someone $5 an hour to do that work when you are out there landing new suppliers as the work that you're doing, which is $100 an hour or $1,000 per hour or $10,000 per hour work. Okay, so manual sourcing can be super profitable, but it takes a ton of time and it's extremely tedious. Next, UPC scraping. Okay, why do we like UPC scraping? Well, we like UPC scraping because it's quick. You can upload that list of UPCs, and even if it's a list of 10,000, 20,000, 50,000 products, it will finish the scan in a matter of seconds or minutes at the most. So it is a very, very quick method. Second thing is that it allows you to identify brands of interest easily. Because if Scan Unlimited came back and showed me, hey, well, every single product from brand X is not profitable, but there are a couple of products from brand Z that are profitable, then I know that I can just completely write off brand X and I can zero more in on brand Z and do maybe even some manual sourcing just within brand Z, because Scan Unlimited went and did a lot of the heavy lifting on the front end to find brand Z as a candidate in the first place. Okay, so you can quickly use this method to find brands of interest, at which point you can then do maybe the manual sourcing method for those brands of interest. And then third, it allows you to find the low-hanging fruit. So if Scan Unlimited can search 15,000, 50,000, 100,000 products in a matter of minutes, well, it's going to find the most profitable and the best products quickly. That also is a con, right? Because it only finds the low-hanging fruit, that means that those are the same products that everybody else found. So while it is quick and efficient, a lot of times that's what most of your competitors are doing too. So one of the cons of UPC scraping is that it misses a lot of really good leads. So if you're only UPC scraping, if you're only using this method, you are missing out on so much opportunity, because UPC scrapers are only as good as the data that they have access to, meaning that if the Amazon listing doesn't have a UPC code, or if the Amazon listing has the wrong UPC code, or maybe your supplier list has some incorrect UPC codes, then the UPC scraper is going to miss those results, which is going to potentially leave a lot of good leads on the table because it's not perfect. All right. Now, another con of UPC scraping, and I fell victim to this for a number of years before I realized that UPC scrapers they don't tell the full story. A lot of times they can lead you to think a supplier is a dud or a complete waste of time when it actually isn't, because some suppliers will not have a list of UPCs. All right. For the first 2 years of my Amazon wholesale career, my thought process was, well, hey, if I can't get a list of UPCs from this distributor, then I'm not even going to bother sourcing that distributor. I'm not even going to bother to manually source it. And because that was my mentality, because that was my mindset, I missed out on so many good potential distributors, on so many good potential leads, because I was only willing to work with the easiest low-hanging fruit, the ones that had the UPC lists available, which again, not every supplier is going to have. And then lastly, sometimes a UPC list is not attainable. So some suppliers will have a list of UPC codes and they will give it to you the first time you ask. Some suppliers do not have a list of UPC codes and you are going to be unable to get a list of UPC codes from them. So sometimes this method isn't even possible for certain suppliers because some suppliers just don't have the data. And then lastly, when it comes to reverse sourcing via SmartScout, one of the pros is that you can quickly exclude brands that are duds, and you can quickly exclude products that are duds, because SmartScout allows you to cut to the core and find the best products and the products that fit your criteria quickly. So you can quickly filter out everything else simply using the filters there within SmartScout. Another pro is that it allows you to find the best products quickly, right? So not only does it allow you to exclude the duds quicker, it allows you to narrow in on the best products quicker, all because we use those filters like I showed you here on the side. Once we drill into a brand, then we set some specific filters, and then we can quickly and easily identify the good products from the bad ones a lot quicker than we could do so manually, for example. And then cons, the data isn't perfect, right? No data tool is. At the end of the day, SmartScout is at the mercy of Amazon's API, and Amazon's catalog is changing constantly. So SmartScout's data is not always going to be 100% accurate or 100% up to date down to the second. You're still going to need to do some manual confirmation, some manual checks to make sure that what you're seeing in SmartScout is 100% accurate. And then lastly, the last con of this method is it can be tedious as well. So at the end of the day, all of these methods are tedious. It's just a matter of how much tedium you want to subject yourself to. But the beauty of all three of these methods is you can easily train a virtual assistant to do this work, to where they are the ones finding the actual products themselves for you to buy, and you are the one out there landing new suppliers and talking to brands and talking to distributors, because at the end of the day, that is the highest level work. Finding the products, sourcing the products, once you get the pricing, that's the easy part, right? The hard part is getting access to the suppliers and getting the pricing. So I hope this helps narrow down the 3 methods we have available to us when it comes to how to source products once you receive pricing. Now we'll get into the rest of the free course. One of the most common questions that I get is, Corey, I found a profitable product. I think it's going to work for me. I think it's going to be a fit for my business, but how many do I buy and how do I know whether or not this is a good product for me to buy? And after going through tons of iterations of, well, it's got to be this sales rank and it's got to sell this many units per month and it's got to be at least this profit per unit. I struggled with so many different criteria for how to buy products over the years that I finally just narrowed it down to a single one-step buying criteria. And in this next portion of the free course, I'm going to break down what that buying criteria is, the exact equation that you can then copy and implement into your own sourcing, and how to really look at this issue from a much easier and much simpler lens. And I'm going to share my screen and share that with you guys now. So at the end of the day, my single one-step buying criteria is, will this ASIN help me hit my monthly target profit goal? Okay. Now, what does that mean? So for example, I want all of my ASINs to profit me at least $250 per month. And again, this is per ASIN. Okay. The equation for determining that is you take the estimated monthly sales of a listing, you divide that by the number of competitive sellers on that listing, and I'm going to define what a competitive seller looks like here in a second, plus you, because you've got to factor yourself jumping on this listing and yourself as a competitive seller, and then you multiply that by the estimated profit per unit that you expect to make from that product. Okay, so if I give you an example of what that looks like here, and then we'll look at a couple of listings to put this equation into action. If a product is selling 500 times per month, if the estimated sales of the entire listing is 500 units per month, and then we divide that by 9 competitive sellers on a listing. So let's say that there's 9 competitive sellers on that listing. And then I add myself into the mix, assuming I jump on that listing and I start selling that product. And then I multiply that number by $5 in profit per unit. If that's my estimated profit per unit, that gives me $250 in monthly profit from that product, right? So again, just to show you guys on a calculator, so let's say it's 500 sales per month, and there are 10 sellers on that listing, including me, right? Our 9 competitive sellers plus me divided by 10. And then we multiply that. So that's basically the number of units that we could expect to sell per month. So I'm expecting to sell 50 units per month. And let's say every unit is going to profit me about $5 per unit. I multiply that number by 5 to give me 250. Okay, so this is the single threshold that I look at to determine if a product is worth me buying or not. Is it going to make me at least $250 in profit per month, or isn't it? And I use this equation to determine it. It's very simple. It's very easy. And let's jump into a couple of Amazon listings to see what this looks like in action. All right, so let's look at this listing, for example. Now, the first thing I want to do is I want to define what competitive seller means. All right, so if we're going to be looking at the number of competitive sellers, well, what makes a seller competitive? Now, to me, the way I define competitive seller is any seller that is an FBA seller that is priced within 2% of the buy box, okay? So we do not include FBM sellers as competitive sellers, because when we are selling FBA, which is all I sell is FBA, then I'm going to get the buy box over an FBM seller pretty much every time. So if we look at this listing to determine, well, first and foremost, what is the estimated monthly sales? All right. So Amazon is telling me this listing is selling over 4,000 units per month. Seller Amp is telling me the same thing, estimated monthly sales at over 4,000. So let's just use the number 4,000 for the sake of our example. So if this listing is selling 4,000 units per month, and we can see that, well, first we got to determine the number of competitive sellers. So what do? Is we come down here, we click on this, and we look at all the other offers. And we're going to filter to show prime and new. Then that tells me that this guy HVAC Pros is in the buy box as an FBA seller. So that is one competitive seller. Right here, Amazon themselves are priced at $13.99, which is definitely within 2% of the buy box. So if we were to figure out, well, what actually is 2% of the buy box, we could take 13.93 times by 1.02. So really anybody priced at $14.21 or less is within 2% of the buy box. All right. Amazon is priced at $13.99. So we would consider Amazon to be a competitive seller in this case. So we've got one competitive seller here, two competitive sellers here. And again, I know that this is Amazon that we're talking about as our second competitive seller. Don't read too far into, well, hey, is Amazon dominating the buy box? Are they not? This is just for example's sake. So basically, we've got two competitive FBA sellers here. And then remember, we've got to add +1 for us. If we jump on this listing, then we would be a third seller splitting those sales. Okay, so let's assume that we've got two competitive FBA sellers +1, which is us, for a total of 3. So we've got 4,000 units per month divided by 3. That tells me that we are expected to sell roughly 1,333 units per month based on the competitive landscape as it stands right now if we were to jump on this listing. All right, now what do we do? Well, we take that number and multiply it by our estimated profit per unit. Okay, so how do we know our estimated profit per unit? Well, we can only know that if we know our buy cost. And since this isn't a product that I'm actively selling or sourcing, I'm just going to assume that this product costs about $5 per unit. Okay, so if we're paying $5 per unit for this product right here at wholesale, Seller Amp is telling us we're going to profit $2.09 per unit. Okay, so what do? We take our 1333 and we multiply that by our profit per unit of $2.09 to come up with a monthly profit for this whole listing of $2,785.97. Okay, now the only question I'm asking myself to determine, is this product worth buying, is this number right here, $2,785.97, is that bigger than my goal number of $250? Obviously it is. It's about 10 times bigger. So for the sake of this example, if our cost really was only $5 per unit, then absolutely I would buy this product every time because it exceeds my monthly profit goal of $250. All right, so let's look at the next one here. We've got, this is a steering wheel control interface. Looks like it sells for $48.99. As always, we are going to run this through our equation and see if it's worth our time. So our estimated monthly sales, Amazon is telling us it is selling over 200 units per month. So we'll just assume 200 units divided by the number of competitive sellers plus us. So again, if we come over here to the offers tab, we want to see how many FBA sellers are selling this product. And we want to determine, well, what makes them a competitive seller? So if the buy box price is $48.99, what is within 2% of $48.99? Looks like anybody priced at $49.97 or less is a competitive seller. So we've got this guy, he's one competitive seller. This guy at $49 is 2. This guy at $49.25 is 3. This guy at $49.99, which is outside of 2%, right? This is more than 2% of the buy box. Everybody from him onward is not a competitive seller. These guys are priced way outside of the buy box. They're priced $20, $30 above the buy box. So we don't consider them to be competitive sellers because they're not getting the buy box. So there's only 1, 2, 3 competitive sellers plus us is 4 for a total of 4 sellers splitting the buy box. And again, if this listing is selling 200 units per month, then we take 200 divided by 4. And that means that we ourselves can expect to sell about 50 units per month of this listing. So we take that 50 units per month and we multiply it by our estimated profit per unit, which again, this is not a product that I'm actively selling or sourcing, so I don't know how much it costs. But if we assume that our wholesale price is $30 per unit, that means that we're going to profit $7.93 per unit. So if we are profiting $7.93 per unit, we take that 50, multiply it by $7.93. which would give us a total of just under $400 per month in profit from just selling this one product right here. Okay, does that exceed $250? It does. So if those numbers were true, then that's all I need to know to buy this product. It's going to make me more than $250 per month. Okay, so that is my very simple one-step buying criteria. If you're a new seller, right, you're new to wholesaler, you're new to selling on Amazon, then your monthly profit target for an individual product to make sense for you, it might be $50, right? You might be perfectly fine making $50 per month off of a single product. If so, that's great, but just make sure that you plug it into your equation accordingly. Make sure that it better exceed $50 per month in profit for you to want to buy it. You might be an experienced Amazon seller that says, well, hey, I don't want to sell anything that's going to make me less than $500 per month in profit or $1,000 per month in profit. If that's you, that's great. Just make sure that you are staying true to your equation and making sure that you are not compromising on that number if that's the number that you've chosen to follow. So I hope this was helpful. I hope this clears up a lot of the confusion around, well, how many should I buy? How do I know what's a good buy and what's not a good buy? This is the simple equation and criteria that I've used for the last few years. It's kept things super simple and made me a lot of money. So I hope that helps, and we'll jump into the next section from here. The next thing that we're going to do is I'm going to break down 3 different Keepa graphs and just give you guys my out loud in action analysis and thought process as I'm reading through these Keepa graphs and just things that I notice and things that I'm going to point out in doing this analysis. So these are 3 listings that I just kind of found at random that are sold by third parties, and we're just going to go through them one by one. So the first one is for this brand called Sex Wax. These are coconut air fresheners. Now, the first thing I'm noticing is this is a variation listing, and Amazon's telling me there's over 1,000 units bought in the past month of just this one variation. So chances are this particular variation is one of the ones that's selling really well here out of all these different scent and size combinations. So if we come down here and look at the Keepa graph, I'm seeing a pretty steady price point. So it looks like for the entire last year, this thing has sold really anywhere from a low of about $12.75 to a high of about $13.95. Looks like the highest this thing gets is about $13.95. So I'm seeing the middle Keepa graph here showing us that just about always this thing's selling anywhere between 800 and 1,000 units per month, just this one variation. And looking at the new offer count here, well, there's only anywhere from 7 on the low end to 10 or 11 sellers max on this listing at any given time. So looking at this Keepa graph, I'm able to make a couple of educated guesses. One, it seems to me like this brand, Sex Wax, is pretty well policed in the sense that, well, because it sells so well, if it was widely distributed, if it was an easy product to get a hold of, there would probably be a lot more than 10 sellers on this listing. And the fact that at no point during the last year was there a huge spike in new offer count or a huge dip in new offer count, that tells me that these 7 to 10 sellers are probably buying directly from the brand, or they're authorized by the brand. Otherwise, if this was like a free-for-all type brand, there'd be a lot more people selling this product. And then lastly, again, there's only, well, let's see how many FBA sellers there are. So pretty much everybody on this listing is selling these FBA, aside from, I think, 1 or 2 FBM sellers. Most of these seem to be bigger sellers, and this brand Sex Wax is probably one that is hard to get. They probably only work with this set number of sellers that they have, which is why there hasn't been a huge fluctuation in new offer count. So if we look at the next one, the brand is It's a 10 Hair Care, and this is a combination listing for a shampoo conditioner bundle. All right, Amazon's telling us it's selling over 1,000 units in the last month, selling for $27.57. Well, if we come down here and we look at the Keepa graph, we can see a few different things going on. So one, it looks to me like this listing itself is the lowest price that it's been over the entire last year. So if we look at even about 9-10 months ago, this thing was selling for $39 to $41, $42, $43 at its peak. Now it's down to $27.49. Okay, so partially that's because of the new offer count. Right now, today, there's 29 sellers on this listing, which looks to be the most number of sellers that there has been over the entire last year. Back when it was selling for $42, $43, $44, there was only, well, 10 to 12 to 14 sellers on the listing. So supply has gone up, and now obviously price has come down a little bit as a result. Now the demand here looks like it's been relatively stable. So the middle Keepa graph here tells us that there's been between 1,000 and 2,000 units sold per month, really for the last, well, since July of last year, and that's been really consistent. So demand hasn't really gone up, but it also hasn't gone down. Overall, this listing is becoming more competitive because that new offer count is continuing to climb. Price is probably going to come down slightly more, even from the $27.49, the low that it's already at. So this is a listing that I'm sure is still profitable, but it's one that's probably going to get even a little more competitive as that new offer count continues to go up. And then lastly, here's a listing for a Head and Shoulders Itchy Scalp dandruff shampoo. Now the price point here is $9.67. Amazon's telling us there's over 2,000 units bought per month of just this one product. And if we come down here and look at the Keepa, we see a couple of things that I noticed. So first and foremost, that price point has been pretty stable just about the entire last year. So the price has been at a low of say $8.09 all the way up to a high of $9.99, right? Just under $10. It's never really gone above $9.99. So that tells me that this listing is relatively stable. Chances are, if you can source this product at a reasonable price, you're probably going to be profitable because the pricing has not fluctuated that much at all in the entire last year. Now, second thing I'm noticing is here in December, it looks like this product really spiked in December, really right around the Christmas season, which it's not a seasonal product. This isn't a holiday product. This is literally just a shampoo, but maybe just more people are buying this product during December. Maybe that's when people have more dandruff. I don't really know, but looks like this product tends to spike around December. If we look at previous years, looks like that hasn't really been the case in previous years. So maybe that was just a fluke here in this past December, not necessarily a seasonal product, something that just really picked up in demand around December of this year. So it has since evened out to about 2,000 to 3,000 units sold in the last month, down from its peak of over 4,000 sold over a 30-day period in December. Now, one thing I notice here is the new offer count. So this new offer count is relatively steady throughout the year. So right now we're sitting at 13 sellers on this listing. There was a low of about 8 sellers on this listing about a year ago, and a high of about 21 sellers on this listing. So right now it's right at about average as far as the level of competition. The new offer count doesn't appear to be going up rapidly. In fact, it appears to be coming down a little bit. And all in all, this looks like a listing that's pretty stable, has good demand. If you can get this thing at a good price, it would probably be a really good product to source. So I hope this Keepa analysis, just kind of talking through some of this stuff out loud, is helpful for you guys. Shows you the kind of stuff that I pay attention to when I'm analyzing a Keepa graph, and we'll move on to the next video in the free course. All right, in this next section, we are going to take a look at some seasonal products, and I'm going to explain why seasonal products can be a huge opportunity for your business and pump tons of cash flow into your wholesale business during certain times a year. So what are seasonal products first and foremost? They're just like they sound. They're products that sell really well during a particular season of the year, and maybe they don't sell so well the rest of the year, or some seasonal products sell well year round, but then they really spike during specific seasons. So we're going to look at some specific examples of seasonal products, and I like seasonal products as not my main business model, but as a complement to my existing business model, because they can really inject a lot of cash flow into my business during the peak seasons of the year. So if I share my screen, first one we're going to look at is this brand here called Immortal Fleur. So this is a brand that, it's a private label brand that a friend of mine owns. And I like using them as an example because this is a really good seasonal example of a product that spikes around Valentine's Day. Now, most people, when they think seasonal products and they think seasonal sourcing, most people think Q4, Christmas products, stuff that does really well during November and December. But guys, the seasonal products sell really well year round. There's a season for every type of different product, and I'm going to explain what that means, and I'm going to even show you guys a seasonal purchasing calendar and give you guys access to that calendar so you can download it and start sourcing for seasons that happen every single month, not just during Q4. So bear with me, and I'm going to show you guys that in a second. But this is a product, it's basically a fake roses, right? Sells really well around Valentine's Day time. So if we look at the Keepa graph here, now this is for back in 2024 because they've since discontinued this product. But if we look at 2024, you see February of 2024, this thing spikes like crazy. So it goes from being ranked 130K, 120K in home and kitchen down to being ranked in the top 2,000 products in the days leading up to Valentine's Day, right? This is a very Valentine's seasonal product, so their best time of year is always going to be in February. You see right there at the beginning of February is when it starts to pick up, and then it really takes off and then levels off right there around February 14th and February 15th, which is Valentine's Day. And then demand goes back down as being seen by the sales rank starting to climb up during the end of February and beyond. So this is an example of a product that, or a type of product that does really well during a certain type of year that most people probably don't think about. So think about Valentine's Day, think about roses, think about candies, think about chocolates. A lot of products do really well around Valentine's Day each year. And that's something to keep in mind for that sort of seasonal sourcing opportunity. The next one that we'll look at, now this brand has an IP alert, right? Which I have the IP alert Chrome extension. If you guys want that, there's a link in the description for that as well. So this is not a brand that I would source because they're likely to file IP complaints according to IP alert, but it's a good example of a seasonal product. So this is just a hard candy. It's an 11-ounce bag of hard candy. So you see right now, there's only about 100 units bought in the last month. Right now, we're in April of 2025. So this is a product that obviously doesn't sell a ton during April of the year. But if we come down here and look at the Keepa graph, it looks like this thing does really well during December, right? So December of each year, this product goes, if we even zoom in on that time period, looking at this middle Keepa graph here, so we go from 200 units sold over the last 30 days to 300 to 400 to 500, 600, then it jumps up to 1,000, 2,000, over 3,000 units sold over a 30-day period during November and December of each year. So this is a product that is clearly a winter seasonal product, and more specifically a Christmas seasonal product, because it crushes it during December, and then here right around the end of December it starts to die down, and we see the number of monthly sold units over the last 30 days starts to drop back down, and again plateaus right around the 1 to 200 a month starting in February. Now, the beauty of Keepa is it allows us to go back and see the whole time that this product has been for sale on Amazon. So this listing has been active for 3,422 days. So if we go and see the entire history of this product, we see that the history repeats itself every single year, right? December of 2021 takes off during December of 2021, dies down again in January and February. You look at 2022, does really well at the end of December of 2021. I guess that previous graph would have been December 2020, and then starts to die off beginning of 2022. 2023, same thing. December does well, January starts to bounce back up. 2024, same thing, right? So it's clear that just by going and looking at the history of all years that this product's been on Amazon, every year since 2016, this product has spiked in December and then hasn't really sold well the rest of the year. So this is a product, and therefore a brand, that come June, July, August of every year, I would start buying this. Now, assuming that there wasn't an issue with IP, right? But let's just assume that this was just a normal product or a normal brand that we could source. Well, I would really start stocking up on this thing around August, July or August of each year. and I'd sit on it, and then I would start to ship it into FBA around beginning of October. So if it's meltable, mid-October, and then have it all at FBA, all ready to sell by December, and then just sell out every single unit in December and do really well on this listing and with this product. So that's an example of a Q4 or a winter/holiday seasonal product that there's hundreds, if not thousands of products just like this one that spike during a holiday, whether it's Christmas, whether it's Valentine's Day, whatever time of year it is, and it does really, really well. Now, lastly, if we look at this product here, so this is for a 4-pack of Peeps. If you guys are familiar with Peeps, it's just like a marshmallow type product that tends to do really well around Easter. Okay, this is a product that is more Easter seasonal. We come down here and look at the Keepa. So Easter was actually yesterday. Today, as I'm recording this, is the day after Easter 2025. And you look at this Keepa graph here, and it really spiked. Yeah, I mean, over the last couple of weeks, right? The demand for this product really started to pick up heading into late March. You see that monthly units sold kicks up from 300 to then 400, 500. Right now, it's over 1,000. Because yesterday was Easter. Now, I'm willing to guess that demand for this product is probably going to decline significantly starting this week because everybody's already bought it for Easter and the seasonal peak has already passed. So those are 3 examples of seasonal products that have different seasons where you can apply this method to any season where people are buying a lot of products either for a specific event or for a specific holiday. And I'm going to show you guys my seasonal sourcing calendar here that shows you just all the potential opportunities for seasonal sourcing. So it's not just Christmas. It's not just Thanksgiving. It's not just Halloween. There's a ton of seasonal sourcing opportunities, many of which you guys probably don't even think about. So think about the month of January. It's New Year's resolution season. What types of products tend to spike in January? Supplements for 1, fitness equipment for 2, workout programs, any sort of fitness or outdoor type product tends to do really well in Q1, specifically in January, because a lot of people are making New Year's resolutions. Supplements in particular really spike in January. All right, I'm not going to go through every one of these one by one, but guys, if you want a copy of this document, of this seasonal sourcing calendar, then you can grab it completely free at the link in the description below. And my advice is to begin sourcing these products at least minimum 60 to 90 days before the date listed here, right? So for example, if the Kentucky Derby usually happens on May 1st each year, then you want to start sourcing Kentucky Derby themed products 60 to 90 days before May 1st. And that is an event or a season that a lot of you probably don't think about. But think about how much money is spent on Kentucky Derby parties and Kentucky Derby outfits and just spent in celebrating the Kentucky Derby. So if you sell apparel or maybe those oversized hats or certain dresses or certain edible products, you can do really well during the beginning of May when it comes to Kentucky Derby. Same thing with Cinco de Mayo. How many people buy products to celebrate Cinco de Mayo, whether it's food products, whether it's decorations, whether it's snacks, whether it's clothing, whether it's hats? These are products that do really well mid to late April and then beginning of May as people are starting to buy to celebrate Cinco de Mayo. So this is one of those tips where if you think outside the box and think about what are people actually celebrating and when, you can really clean up and make a ton of money selling any of these types of products during these times a year. Another great example is Father's Day and Mother's Day. People spend tons of money on their mothers and fathers, as they should, right? For Mother's Day, candy tends to spike, chocolate tends to spike, flowers, cards, clothing, jewelry. So if you're a wholesale seller, start sourcing these types of products in February and March to prepare for Mother's Day. And look at the Keepa graph and make sure that those listings have spiked on Mother's Days and years past. Because if they sold well during those seasons before, they're going to sell well during those seasons again. When it comes to Amazon, history tends to repeat itself pretty often. Same with Father's Day, golf accessories, hunting accessories, tools, outdoor equipment, grilling equipment, automotive accessories. These are all things that dads love that really spike during the month of June. So I think you guys get the point. Again, guys, if you want this full document here, you can grab it at the link in the description below, completely free. This is going to be a cheat code for helping you guys find a lot of really good niche sourcing opportunities that a lot of other people miss, so that you can clean up and make a ton of money during these holidays. All right, so if you've listened to me for any amount of time before, you've heard me talk about the power of going niche when it comes to your wholesale business. Now, there are multiple ways you can approach this question. For some people will say, well, it doesn't make sense to go niche. I'll sell anything that's profitable. Any category works for me. And there's other people who have chosen to narrow in on a niche, specialize in a specific category, and have done well as a result. Now, there's an argument that you can make for either side, but I'm going to give you my 2 cents on why I think it makes more sense to go niche, even from the start. So first and foremost is when you're doing wholesale, and if you're working with distributors part of your strategy, distributors want to work with dealers in their industry. The biggest and the best distributors in whatever niche you decide to play in, they are only going to sell to retailers who specialize in their niche. And I'm going to give you an example. If you call on the biggest grocery distributor in the country, or the biggest grocery distributor in your area, when they go to review your application and vet you to see if you're a good fit for them, if you are only selling grocery, if you specialize in grocery and you are a grocery retailer, they are so much more likely to approve your application than if you sell a little bit of grocery, but you also sell automotive, and you also sell tools, and you also sell sports, and you also sell outdoors. They are going to look upon you more favorably if you specialize in their industry. So that is one of the biggest benefits, if not the biggest benefit, of going niche, is that you just allow yourself to be taken much more seriously by the big players in your niche. And typically generalists, retail stores that sell anything and everything, are not looked upon very well by legit distributors. The second reason it pays to go niche is when you're going directly to brands, think about which of these statements sounds more convincing. You could either say, well, yeah, I help brands grow on Amazon, or I work with any brand on Amazon. Or you could say, well, actually, I work with tool and automotive brands that are doing less than 500K per year in revenue on Amazon. I help those brands grow, right? Which is going to be more convincing if you're talking to a tool and automotive brand? Obviously, the second statement is going to be much more convincing, because when you're that specific and you know your niche, what you've proven to the person that you're speaking to is, okay, this guy specializes in helping companies just like me. But if he just works with just any brand out there, well, yeah, maybe he can help me, but maybe he can't, because maybe he doesn't know my industry. So if you're going to work directly with brands, that's another reason why I think going niche is very effective, because you can speak to their industry, you can speak to the types of pain points that they typically suffer. And as you grow and as you get more experience, you can use other companies in their niche, which are probably their competitors, and say, well, yeah, I work with a competitor 1, or I work with competitor 2, and they're just like you, and we help them do this, so we can probably help you do the same. So it's just a lot more convincing when you can prove to a brand or prove to a distributor that you operate in their specific industry. And then lastly, and this is not to be understated, is when you go niche, it allows you to narrow your focus, okay? Now, when starting out, so many Amazon sellers, a lot of people that I talk to, they have trouble staying focused, because one day they're trying to source tools, the next day they're trying to source supplements, the next day they're trying to source lawn and garden products, and there's no coherence to their operation. There's no rhyme or reason to why they're doing what they're doing. But when you say to yourself, okay, for the next 90 days, I'm only going to source lawn and garden products, for example, then you tend to find a lot more opportunities, because you get a feel for the brands in that niche, you get a feel for the distributors in that niche, you get to learn the industry lingo, you get to name drop competitors against one another as you're doing your prospecting and as you're doing your outreach, and it's generally going to help you be more successful quicker. Now, if you narrow your focus and if you go niche, does it mean that you don't sell any brands or any categories outside the ones that you're focused on? Absolutely not, right? I'm all for going niche. I like the tool and automotive niche, but I still sell some grocery products. I still sell some electronics products. I'm not going to say no to those opportunities if they're good opportunities. I'm just not going to go looking for those opportunities. if that makes sense. So when it comes to the opportunities that I, and therefore the opportunities that you are actively looking for, focus on a single niche, focus on a single category. And if opportunities from outside those niches or outside those categories come to you, then you don't have to say no, but you weren't necessarily looking for them. So it's no loss if you do say no. So that's my thoughts on going niche and why it pays to go niche. Lots of long-term benefits here. And now we'll move on to the next module. Now, when it comes time to place purchase orders with a brand or a distributor that you found doing any of the methods that you've learned in this course, there is a very simple and very short purchase order template that I use to place these orders. Now, I'm going to share my screen and I'm going to break that template down for you. But if you guys want a copy of this sheet, of this template here, then you can grab it for free at the link in the description below. So this is a very simple, very basic purchase order template that I've used for years to send to my suppliers when I'm ready to order a product. So I'll break it down line by line. So first and foremost, you can put your company logo up here. That just makes it look that much more professional when you're submitting your orders. Then I like to put my company name, my billing address, and then my company phone number. All right, so you put all your company information here at the top. Up here in the top right, you could simply choose the date that you're placing the purchase order and then a PO number for your own reference. So our PO numbers are typically the supplier name -001 is where they start. So if it's our first purchase order with that supplier, it would be supplier XYZ-001. If it was our 10th purchase order with that supplier, it would be supplier XYZ-010 or 010. All right. So that is how we determine our PO number. Next, this is where we will put our supplier's information. So our vendor's company name, our vendor's address, and then our vendor's phone number will all go here. And then our shipping information will go here. So this is where we'll put our company name again, our company address as far as our shipping address, and then our phone number. Now the phone number that I will include here, if I'm using a prep center, I'm not going to put my shipping, or I'm not going to put my phone number here in the ship to address. I'm going to put my contact at my prep center. So that way, if the vendor needs to call and say, well, hey, what are your hours of operation? Or if the freight company needs to call to schedule a delivery, they don't need to go through me. I can just put the phone number there to my prep center directly, and they could contact them directly. Next, we've got a field for just the product, either the SKU or the description from your supplier. So it might be product XYZ is the SKU. Let's say it costs us $205.44 per unit. We're going to buy 192 units. The extended price, so it's going to automatically multiply the unit cost by the unit quantity, is going to be shown here. And the same goes for all of the other 2 or 3 products here. And if we want to keep adding products, we can just keep adding rows below. And that is going to allow us to just do the same formula here and just keep building our purchase order this way. It's going to add up the total here at the bottom automatically. And then lastly, the section here, note for vendor. This is where you can put, hey, this is a draft purchase order, right? This is just maybe a quote request. So if you want to make this just more of a quote request as opposed to an actual purchase order, you could put a note that says this is a request for quote. You could put this is a draft. You could put don't process this until a week from today, right? This is just any note that you want your vendor to see, you would put here in the section. And then when you're done, you come up here, you download it as a PDF, and then you can simply email it straight over to your supplier. And again, guys, if you want a copy of this sheet completely for free, hit the link in the description below under purchase order template, and you guys can download this and use this for your own use. All right, now I'm going to briefly explain the FBA shipping process and a little bit of detail. So this is the exact process you'll follow. When you place orders with your suppliers, you go to send these products to Amazon's fulfillment centers. It's a simple 5-step process. I'm going to share my screen and show you guys exactly how that process works. Now, you'll notice that we're not going to do a shipment step by step. I'm not going to go into Seller Central and show you guys exactly how to create a shipment, partially because that process changes constantly. Amazon is always updating Seller Central, changing the workflow. And if you're watching this video in the future, it's probably not going to be relevant. And for the other reason that there's a million videos out there on YouTube on how to create an FBA shipment. So if you want to know the process in detail, step by step, then there are other videos out there that can show you the step by step. This is just the high level overview of how this process actually works. So first and foremost, you are going to order inventory from your supplier. So once you found either one profitable product or multiple profitable products to source and that you want to sell on Amazon, you're going to place the order with your supplier. Next, you are going to have that inventory shipped to either you or your prep center. So we're going to get into what a prep center is, what sort of value they can offer you, how they can take the entire prep and shipping and logistics process off of your plate. But for now, just know that you could have that inventory shipped to yourself, even if you're operating out of your house. So for many months, actually for more than a year, I operated out of my own house. I was prepping products either in my room or in my garage, and wholesale suppliers will ship to your house. Most of them will. Now, some of them might charge what's called a residential surcharge in order to ship to your house, in which case you just pay a little bit of an extra for the shipping and they'll ship to your house, no problem. So you have that inventory shipped to either you or your prep center if you're using a prep center. And then step 3 is you simply create an FBA shipment in Seller Central, or you could use a third-party tool like Boxem. So Boxem is a tool that I like, that I endorse, that good friends of mine, Flips for Miles and Fields of Profit. If you guys have watched me, you've probably seen their content. They created the Boxem tool. And quite honestly, it's easier to use and more user-friendly than creating your shipments in Seller Central. So if you guys want to check out Boxem, you can grab a discount at the link in the description below. Or if you want to choose a free option, you can simply create the shipments yourself inside Seller Central. And so what this step involves is whether you're using Boxem or whether you're using Seller Central, you are going to log into your account. You are going to tell Amazon exactly what you're sending them and how many of them you're sending. And then you're going to fill out a little bit of information about the weight and the dimensions and how many boxes and a little bit more information. And then Amazon is going to tell you where exactly each of these shipments are going. They're going to tell you how many units need to go in a box. They're going to tell you how many boxes are in this shipment, and they're going to tell you exactly how to take it from there. The fourth step is you are going to apply your box labels, your FN SKU labels, and your shipping labels. So box labels are 4x6 labels that go on each box in your shipment. So if you're shipping either via UPS or even if you're shipping on pallets, every box still requires a box label. So you will always attach a box label to every box in the shipment. Next is your FN SKU label, which is just a fancy word for a barcode that goes on each individual unit in your shipment. So if you are shipping, let's say 100 units of these AirPods, every AirPod would get an FN SKU label. So there'd be 100 FN SKU labels because there's 100 units of this AirPod. So it's just a barcode that goes on each unit that tells Amazon this is exactly what this product is. And then lastly are your shipping labels. So if you're shipping just a normal shipment via UPS, this is just a label that you're going to slap on every box. And again, it's just like a normal shipping label. It just tells UPS how big the box is, how much it weighs, and where it's going. And that's a process every time you create a shipment. And if you're just shipping via what's called SPD, small parcel delivery, which is just another word for shipping boxes via UPS. If you're shipping freight shipments, meaning you're shipping them on pallets and they're going, either LTL, which stands for less than truckload, or FTL, which stands for full truckload, the process is similar. The only difference is that each box is not going to have a shipping label. Each pallet is going to have pallet labels as opposed to each box having a shipping label. Each box will still have a box label. So without getting too deep into the weeds, and certainly don't want to confuse you on that, because I'm assuming most people watching this free course are probably only sending individual box shipments via UPS. So if you want more detail on how to ship an LTL shipment, otherwise known as a freight shipment, then I do have other videos on that topic. You can simply search Corey Ganem shipping on YouTube. All right, and then lastly, you are going to simply arrange a UPS pickup, or if you're shipping freight, you arrange a freight pickup. But again, that's a little outside the scope of this guide here. So you can arrange a UPS pickup for, I think, as little as $4 or $5, and UPS is going to come and pick up all your boxes from your location and take them to a sorting facility, or you can simply drop your boxes off at a UPS store, which is free, but obviously that's going to take more time. That's going to take more effort. And if you have a lot of boxes as you start to scale this business, you're only going to want to schedule pickups because dropping every box off at the store is not going to be feasible. Now, I do want to touch on the option for your suppliers to actually ship your orders directly to FBA for you. So most of my suppliers, in fact, the majority of the products that I now buy from my wholesale suppliers get shipped straight from my supplier to FBA. They don't go to my prep center. They don't come to my house here locally. My supplier ships them to Amazon for me. And how is it that they do that? Well, you can simply send them your box labels and your shipping labels, and then you can pay Amazon to apply the FNSKU labels for you. So as of the time of the recording of this video, you can pay Amazon 55 cents per unit to apply an FNSKU label for you. And again, you simply forward your supplier your box labels, your shipping labels, they slap them on the boxes and they go on a shipment straight to Amazon. So you're saving that extra step and you're saving money by not having to ship either to you or to your prep center. So this can be a really good method for saving money on shipping and saving time. And also, if your supplier is giving you free shipping normally, then this actually saves your supplier money because now you are the one paying for the shipping if they're going straight to FBA. Now, the only thing to keep in mind is this method, when your supplier ships straight to FBA for you, it does not work if you are selling an ASIN that is a bundle or a multi-pack, because most suppliers are not going to be willing to bundle products for you or to multi-pack products together for you. And because of that, Amazon will not do that for you either. So you couldn't pay Amazon to apply an FNSKU label to a bundle or multi-pack. So this method works really well if you're just selling individual units, one product at a time. Again, these AirPods would be a great example. If you're sending 100 units of these AirPods to FBA, well, you could simply tell your supplier, hey, I will send you a box label and a shipping label, slap it on the case pack of these AirPods, send them straight to Amazon, and then you pay Amazon 55 cents per unit to apply an FNSKU to each individual unit. One of the most common questions I get is, should I have my own warehouse or should I use a prep center, otherwise known as a 3PL? And 3PL stands for third-party logistics. So I'm going to share my screen and go over, this is actually going to be one of the slides from the Wholesale Challenge course that we do live. We haven't done it in a while, but basically this is one of the excerpts from the course, and I think it illustrates this point very well. So we're going to go into the pros and cons of using a 3PL versus having your own warehouse. So again, 3PL and prep center, those words are basically synonymous, and that is just going to be a company that receives your shipments from your supplier, preps them for you, labels them, puts them in boxes, and then sends them to Amazon FBA for you. Having your own warehouse is just like it sounds. It's where you have either a warehouse space or a storage unit or somewhere where you're doing your own prep. So when it comes to having a prep center, some of the pros of having your own prep center is the business can be fully remote. So I live in Charlotte, North Carolina. My main prep center is in New York. I have another prep center in Oregon, and I have not personally touched or seen my inventory in years. So this allows me to be fully remote. I can travel across the country. I could travel across the world if I want and never have to see or touch my inventory. So that is one of the big pros of using a prep center versus having your own warehouse where you're locked into the same location and you're having to show up every day. Another big pro of using a 3PL is it allows you to focus on your core competencies, allows you to focus on what it is that you do best. So for me, what I do best is negotiating with suppliers, placing purchase orders, managing my team. What I do not do very well is manage a warehouse, manage low-skilled labor in a warehouse environment. So by having a 3PL, it gives me a ton of bandwidth to focus on the stuff that I'm good at, the things that I just mentioned, and I don't have to focus on the stuff that I suck at, which is running a warehouse. Now, one of the pros of having a 3PL is also one of the cons. So I'll give you both sides of the coin here. So using a 3PL is a variable cost. So it's not a fixed cost. And what a variable cost is, it means that as you scale up, as you're doing more business with your prep center, your costs go up, right? And that can sound like a con, but when you're newer and when you're starting out, that's actually a pro, because if you don't have a ton of products and you're just in the early stages of your business, well, you don't want a big fixed cost of say $2,000 a month or $5,000 a month to have a warehouse. you'd rather be paying $1 per unit for maybe the 200, 300, 400 units per month that you're doing as a newer seller versus, like I said, having that overhead hanging over your head in the form of a warehouse lease each month. Now, this doubles as a con because as you scale and as you're doing big numbers in wholesale, using a prep center actually ends up being much more expensive than having your own warehouse because it's a variable cost, because the cost scales as your business scales, whereas a fixed cost remains fixed no matter the size of your business. So one of the big pros of using a 3PL is it allows you to have economies of scale. So what that means is, as you're scaling up and as you're doing more business, yes, your cost of prep is going to go up because it's a variable cost, but you also have more leverage. You have more negotiating power when negotiating with your prep center. So if you're a newer seller and you're paying, let's say, $1 per unit for prep for your prep center, well, as you're scaling up, as you're doing 5,000 units a month or 10,000 units a month or 20,000 units a month, you can get your prep cost per unit down to 80 cents per unit or 70 cents per unit or whatever it is that you negotiate with your prep center. So as you scale up, even if you're using a prep center, you still have economies of scale. Now, some of the cons of having a prep center are that, like I said, because it is a variable cost, it is expensive at scale. So as you're scaling your wholesale business with a prep center, the bigger your business gets, the more expensive it's going to be for prep if you're using a prep center. Now, I put this here as a con because choosing the wrong prep center, choosing a 3PL that's not professional or that doesn't communicate or that does a poor job can be disastrous for your business. To the tune of, it could potentially get your Amazon seller account shut down if your prep center makes too many shipping mistakes, or if they ship in boxes that are overweight or oversized. Amazon can revoke your FBA shipment ability for days or weeks at a time if your prep center makes too many mistakes. And even though this wasn't your fault, even though it was your prep center's fault, Amazon will still revoke some of these privileges because of that. So choosing the wrong prep center can really be bad for your business. You want to make sure you vet them thoroughly and choose the right one. And here in a future module, I'm going to show you exactly how to vet your prep centers and how to choose a good one. Now, another con of having a prep center is you always have to be what I call managing the manager. So even though your prep center is taking over and handling the full prep process, the full logistics process for you, you still have to manage the prep center and make sure that they're doing their job and doing it at a high level. So having a prep center is not set it and forget it and you just send them inventory and then you don't have to do anything again in your life. You've still got to be checking in with them. You've still got to be staying on top of them. You've still got to be making sure they're doing their job at a high level, because if they're not, then it's your business that's at risk, not necessarily theirs. All right, so when it comes to having your own warehouse, there's pros and cons to this as well. So when you have your own warehouse at scale, it's much cheaper. And it's because of what I mentioned earlier, that having a warehouse is a fixed cost versus using a prep center is a variable cost. So as you scale your wholesale business, as you're prepping more and more units per week and per month, having your own warehouse actually makes your overhead cheaper because your warehouse cost is going to be fixed. Let's say it's $5,000 per month. So if you scale from 10,000 units per month to 20,000 units per month, well, technically it's a lot cheaper for you to own your warehouse and for you to operate your warehouse, because your overhead is now divided by 20,000 units instead of 10. So as you scale, having that fixed cost can be an asset versus having a variable cost, which can end up being a lot more expensive if you're using a prep center. Another big pro of having your own warehouse is the quality control aspect. So when you have your own warehouse, you have the ability to receive all of your inventory from your suppliers. You're able to verify that everything was in good shape when it arrived to your warehouse. You can verify that you weren't shorted any units or that you weren't shipped the wrong units. It just gives you a much higher degree of quality control that you don't get when you use a 3PL. So when you use a 3PL, you're hoping that they have good quality control processes in place, and most good 3PLs do, but when you have your own warehouse, you have control of the quality control process. And then the last pro, in my opinion, this is a huge pro of having your own warehouse, is if you have a big, legit warehouse operation, this can help you land some big wholesale accounts. I know multiple people that have leveraged their own warehouse to invite distributors in or invite brands into their warehouse and show them, hey, look around, this is our operation. We're a serious business. Look at Here are my employees. Here are our packing stations. Here's our shipping station. Here's our receiving station. It just shows that you are that much more legitimate than a lot of the other Amazon sellers that are calling into these accounts every day. So having your own warehouse operation and having one that is clean and that is run well and that's efficient is a huge sign of competency that you can then use to land bigger wholesale accounts with either brands or distributors. Now, of course, there are going to be a few cons with having your own warehouse. So this is probably one of the biggest cons, in my opinion, is that you're dealing with low skilled labor when you have a warehouse operation. So you're going to be spending a lot of time managing employees that you're paying $15 an hour, $17 an hour, $18 an hour. And I hate to say it, but when you are dealing with employees of that caliber, they're just more of a headache. They require more oversight. They sometimes are slacking on the job because it's just lower skilled labor. I mean, I have a friend, he ran a huge warehouse and he caught one of his workers smoking meth in the bathroom, right? Like that's the type of stuff that you run into when you're dealing with people that you pay $16, $17 an hour. So it's a huge headache. The right person, it's great for them. But for me, I personally just don't want to have to deal with that. And even finding a really good warehouse manager that you're paying 60, 70, 80K a year is really hard to find. And ideally, they would be the one managing that labor for you. But even finding that good warehouse person is incredibly difficult and incredibly rare. Another con is that having your own warehouse operation and having employees in your warehouse, it's a fixed cost regardless of the workload that you have. So I know people that have big warehouse operations on behalf of their wholesale business, and they have to buy, sometimes they have to buy inventory at break-even prices just to keep their employees busy so that their employees don't go and find another job and leave them. So if you don't have very good deal flow, or if you are just in the scaling phase, you want to make sure that you've got enough deal flow and enough product coming in and out of your warehouse to keep your people busy. Otherwise, they're going to go and find another job. Another con of having your own warehouse is that your warehouse operation is never going to be a profit center. So the way that I view a warehouse operation is it is basically a business it's a business by itself, right? You've got your Amazon business, which makes you money. And then you got your warehouse business, which isn't technically its own entity, but it needs to be run like its own business because it's its entire own operation, but it's never going to make you money. The best your warehouse operation is going to do is save you some money. So you're spending a lot of time, a lot of effort, optimizing your warehouse, making it as efficient as possible, doing everything that you can to make sure that you're operating at peak efficiency. And the very best you can hope to achieve is to not lose money. For me, that's a lot of effort for something that I could just pay someone else a little bit of a premium to do. And even if your warehouse is operating at top peak efficiency, it usually takes multiple years to get your warehouse to that level. Now, another con is that it takes significant time and money to operate efficiently. That's kind of one of the points that I just alluded to. The best case scenario is your warehouse prevents you from losing money. And to get to that best case scenario, it takes years to where you're operating at peak efficiency. So again, I personally would rather pay a small premium for 3PL to handle all of that headache for me and not have to deal with that myself so that I can spend all my time focusing on building my team of sourcing people and purchasing people and creating really strong relationships with suppliers. And then lastly, to have your own warehouse, it takes a large capital investment. So I had my own warehouse for probably 7 or 8 months, and it cost so much more money than I even realized at the time. So you think that you're going to sign a warehouse lease and then you just pop in there, throw down a couple of chairs, get a couple of label printers, and you're in business. But in reality, you've got so many costs that you don't anticipate. You've got to pay for garbage disposal. You've got to pay utilities. You've got to pay Wi-Fi. You've got to pay workers' comp insurance for your employees. You've got to make sure that you are up to code for the fire marshal. You've got to pay for packing supplies, pallets. You know, I can't tell you how much money I spent just buying empty pallets, pallet jacks, forklifts, tape, bubble wrap, plastic, like poly bags. There's just so many costs that go into having your own warehouse, and it gets expensive and it adds up and it really eats into your profit margin. So those are the pros and cons of having a warehouse versus having a prep center. Me personally, as I said throughout the course of this module, I would prefer to have a prep center for all of the reasons mentioned before. I liked the ability to be remote. I like to not have to show up to a warehouse every day and manage low skilled labor. And I'm willing to pay a small premium for that ability. And again, at scale, it's more expensive for me to use a prep center than it would be for me to have my own warehouse, but that is a trade that I'm willing to make. So as you're going through this process, ask yourself, do you want to have the absolute best margins and be as efficient as possible, but be tied down to a single location? Then if that's you, then a warehouse is probably the best bet for you. If you're like me and you say, well, hey, I'm willing to pay a small premium, maybe have lower margins than average, but have the freedom and the flexibility to do only the things in the business that I love to do and be able to travel as needed as I wish, then a prep center is probably the route for you. So I hope you enjoyed this module, and we'll jump right into the next one. All right, the next section is going to go over virtual assistants, how to use virtual assistants, and how to leverage them to scale yourself out of the day-to-day operations of your Amazon wholesale business. Now, this is going to be a very powerful section because I've seen the results of this firsthand. My virtual assistants run my entire Amazon business. I literally spend less than an hour per week working inside my Amazon business because I have some really solid virtual assistants. So I'm going to share my screen and break down the main roles that you're going to have within your team when it comes to hiring virtual assistants. And I'm going to show you exactly how to find them and what to do once you have them. So when it comes to virtual assistants, right? It's a sexy term. A lot of people want to jump right into the business and hire a VA on day one. And I'm telling you, do not do that. That is a terrible idea. You are only going to set yourself up for failure, because while a good virtual assistant is worth their weight in gold, 99% of the time, they are not good on day one. When you hire a virtual assistant, you still have to train them. You still have to hold them accountable. You still have to meet with them weekly, and you have to invest a lot of time, effort, and energy into making sure that they develop into a world-class employee. It's just like any other employee you would hire in any other business. You've got to develop them. And if you look inside my Google Drive for my company, we probably have anywhere from 1,000 to 2,000 hours of training that I've conducted with my virtual assistants over the last 5+ years. So it's taken a long time to get them to where they can run my entire business. But that's what can happen when you invest in your employees, just like you would any other employee. So when it comes to hiring virtual assistants, there's a hierarchy of tasks that we outsource in a certain order. So a lot of people get this hierarchy completely backwards. A lot of people, when they look to hire their first virtual assistant, they look to outsource sourcing first, when in reality, sourcing is the absolute last thing you should be outsourcing in your business. Now, why is that? It's because sourcing is the one task in your business that actually makes you money. It is the most important task in your business, and therefore it is the one that you should outsource last. You yourself, as the business owner, should be doing all of the sourcing in your business until you are a world-class sourcer yourself, and you can then teach somebody else how to do it for you. Okay, so when it comes to the hierarchy of outsourcing to a virtual assistant, the first thing that you outsource is prep, right? And again, prep is not something you're going to outsource to a virtual assistant, but it is something that you should outsource to a prep center. If you've watched the module on prep centers versus having your own warehouse, you guys know that I'm a big advocate of using prep centers. I personally don't like having a warehouse, but I know a lot of very successful Amazon wholesale sellers who have their own warehouse. But if you're following my model, the first thing you're going to outsource is prep, and you're going to outsource that to a prep center, not a virtual assistant. But the first virtual assistant hire that you'll make is an admin. Okay, and in a second, we're going to scroll down and I'm going to tell you what each of these roles is responsible for and what you should have them doing in your business once you have them on your team. So once you get prep off of your plate and you're paying a prep center to do that for you, the next role that you're going to hire is an admin virtual assistant. The admin virtual assistant is one that does all of the blocking and tackling, all of the low-level administrative work that you were previously doing yourself, so that can free you up to focus more on sourcing and to focus more on operations. Once you have a good admin VA in place, then you're going to hire an operations VA. And again, in a second, we'll get to exactly what that operations VA is going to do, but they're going to do things like managing FBA shipments, making sure the admin and the sourcing just making sure the admin is on the right track, that they're following their SOPs, they're creating SOPs, they're basically keeping the trains running on time within your business. And again, I'll explain the exact roles they have here in a second. And then lastly, the very last thing you are going to outsource in your wholesale business is sourcing. Because again, sourcing is the most important task in your business. It's what makes you all your money. So it's the last thing you should hand off, and you should not hand off sourcing until you yourself are a master sourcer and you know exactly how to find profitable products all day, every day. Okay, so if we look at what each role is going to handle, so once you have your admin VA in place, this is what they're going to do for you. All right, they are going to manage your FBA shipments, which means not necessarily creating them and getting them to the finish line, but they're going to make sure that your FBA shipments were received on time, that there's not any FBA shipments that have gone missing. They are just going to make sure that once your FBA shipments have been created and sent to FBA, that they actually get to FBA, get received, get checked in, and are processed accordingly. The next thing they're going to do is they're going to manage all aspects of your seller central account, everything from your account health and submitting invoices and submitting documentation to Amazon to get any account health violations cleaned up. From that, all the way to answering customer questions using a set of templates that we'll use for the most common customer questions that we have, and all the way to adding new products to your catch-all PPC campaign, which is something that we'll go into later in this video. The next thing your admin is going to do is they are going to manage your repricer. They're going to make sure that all of your products are being repriced properly. They're going to make sure that your minimums and your maximums are set correctly on your best ASINs to make sure that you're making consistent sales at profitable prices and that no inventory is left sitting stagnant, costing you money in storage fees and not making you any sales. Your admin is also going to be responsible for the management of any spreadsheets and tools that you're using within your business. So for example, we have a purchase order tracker sheet that tracks all of our purchase orders and the status of all those orders. That is something that the admin manages. We have a sheet for our budget that manages our cash flow, when our credit card bills are due, when our payments to our suppliers are due. That is something that our admin manages as well. And then any tools that we have access to, such as SmartScout, Seller Amp, Keepa, any of the tools that we use in our business, that is something that the admin is going to be responsible for managing and making sure that we have, that the tools are working properly and that we're still actually using them. Because if we're not using them, then we're going to go and cancel those subscriptions to make sure we're not paying for any tools unnecessarily. And then lastly, the admin is going to be responsible for any new supplier outreach and follow-up. So what that entails is, and listen, you guys have probably heard me talk about, well, hey, call suppliers on the phone, don't bother emailing them, don't bother submitting contact forms on their website. And I stand behind that wholeheartedly, especially as you're in the early stages of your wholesale business. But as you start to scale, you as the business owner are going to be spending a lot of time sourcing, and it helps to have your admin doing some of that initial outreach for you. So what the outreach portion of the admin's duties looks like is a lot of times the admin is going to send a very specific, very targeted email outreach to specific brands or to specific distributors with the goal of setting up a phone call between you and a representative at the brand or a representative at the distributor. So the admin can do all of the initial research and sending of that initial outreach. And then once we can get them on the phone, that's when you as the business owner get on the phone with them and get them to be where they're a closed account that you can now source from. All right, next is your head of operations. So this is a critical role and it's very difficult. I'll be honest, it's very difficult to find a virtual assistant that can handle this role effectively. So don't be discouraged when you might have to go through 1, 2, 3, 5 different virtual assistants to find a head of operations that is truly competent and that's truly going to be a good fit for your business. Because your head of operations is going to, like I said earlier, be the one responsible for making sure the trains run on time, which just means that your business is operating efficiently, you're not running into any bottlenecks, and you are continually and repeatedly placing orders for profitable inventory. So one thing that my head of operations does is she will draft purchase orders for our existing inventory to our suppliers. So she will draft a purchase order, and that draft is something that she will then put in front of me so that instead of having to go through and pick out all the products and figure out what it is that we're going to buy, I'm looking at her suggestions and I'm able to either give a yes, a no, or a, hey, change the quantity here. All right. So she can take what might take 30 minutes or an hour or more to draft that purchase order of my time and condense that down to 5 to 10 minutes, where all I have to do is go and either approve or deny the purchase order. So that is what your head of operations is going to do once they're trained and once they're at that level. The next thing they're going to do is they're going to actually physically place the orders for you once you, as the business owner, have approved the PO. So what the workflow looks like is your sourcing team member, which we'll get to in a second. Once you get to that point, the sourcing team member is going to find products to buy. The head of operations is going to then go in and vet those products and put them into a draft purchase order. And then you, as the business owner, are then going to look at that purchase order, approve it or deny it. And if you approve it, then your head of operations will then take your approved purchase order and go and actually place that order with your supplier. Okay, so all you have to do is come in, give your thumbs up, and then your head of operations gets it ordered, gets it shipped out, gets it to the prep center efficiently and on time. The next thing your head of operations is going to be responsible for is just day-to-day communications with your suppliers. So I'm still involved with my best suppliers. I will still follow up on the phone with my best sales reps every 2 to 3 weeks, just to give them a call, just to say hello, just to check in. But when it comes to the day-to-day communications, whether it's talking about an order or coordinating a shipment or communicating with the prep center, that is something that my head of operations will handle. She will have those in the weeds conversations with my suppliers so that I can just have the high level relationship building, rapport building conversations with my suppliers. Next thing your head of operations is going to do is they're going to be responsible for managing and training new team members. And you're not going to have that many new team members, right? My business does multiple 7 figures per year in revenue, and I literally only have 2 people on my team because my head of operations person doubles as my sourcing person. But if you decide to scale further, if you decide you want to hire more of a larger team, your head of operations should be the one who's managing those people and training them and getting them ready for the role that they are going to then take over for you. Your head of operations is going to be the one who conducts a lot of your new supplier research. So while your admin is the one who actually does the outreach, your head of operations can either find the suppliers for your admin to reach out to, or they can collaborate with your admin, put their heads together, and jointly find some new suppliers for you to reach out to. Because if you have a good head of operations and a good admin, you can simply give them a criteria of the exact type of suppliers or brands that you're looking for. They can go out and find them. The admin can then do the initial outreach, and then you just come in to talk to them on the phone and close the deal. And then lastly, your head of operations is going to be responsible for submitting what we call RFQs, which simply stands for request for quote. And what that is it's typically when you're working with a distributor, there's a certain product that you want, but they don't carry that product, but they have access to the brand. You simply tell the distributor, hey, I'd like a quote on 100 units of this product, 200 units of this product, 300 units of this product, etc. So your head of operations will be the one to determine which products we want to get quotes on, the quantity that we'd want to buy, and then they then submit that document to your distributor so that your distributor can give you a quote, and then you can determine if that's a product that you want to buy based on the quote that you got from your supplier. And the last role, this is the absolute last role you should outsource. Like I said, this is only once you have a really good admin and a really good head of operations in place, and you yourself have mastered sourcing. Only then should you be hiring a sourcing virtual assistant. Now, that sourcing virtual assistant, their only job, their only role is to find new products to buy. Okay, that's the only thing that we care about them doing is how many products have you found that we actually ended up purchasing? Okay, so that's their only goal. Their only thing to do is for them to find new products to buy. And you can see how this kind of works in a cycle where your head of operations and your admin are collaborating to find new suppliers and new brands. Your admin is reaching out to the brands. You're stepping in to close the brands and suppliers on the phone. And then your sourcing person then gets access to their pricing and starts sourcing that pricing. And it goes around in a circle in a beautiful cycle. Now, when it comes to, okay, how do we find these virtual assistants? How do we hire them? What do we say? Well, in a second, I'm going to go over the exact templates that I use to these are the job posting templates that I will use whenever I post a job offering for these roles. So we're going to go over those exact job postings here in a second. But one thing I want you to do, if you want a 26-minute in-depth A to Z video guide for exactly how I find and hire all 3 of these roles, then go on YouTube, search Corey Gannum Virtual Assistant. That is all you have to search, is Corey Gannum Virtual Assistant on YouTube. And it is this video right here. It is called The Best Way to Find Virtual Assistants for Only $6 per hour. This video only has 1.4 thousand views. It is criminally underwatched because this is literally A to Z, sharing my screen, talking through my templates, exactly how I've hired all of my people over the last 5+ years. So that video is going to be step by step. And what we'll do is we'll link it either in the description, or we'll have a card that pops up on the screen for you to go and watch that video for an in-depth view of exactly how to find those virtual assistants. All right, now we're going to get into the exact templates that I will use to post job openings for my virtual assistant. So we're going to go over 4 specific job posting templates that you can use. You can copy and paste these. You can steal these for yourself, because I'm going to give them away completely for free at the link in the description below. So if you guys want these, I'm just going to include a PDF in the description for you guys to use yourself. Now, if we jump into my screen, we're going to go through a couple of these, and I'm going to talk through why I have them set up the way that I do. Okay, so the first job posting template you'll see here is for an admin virtual assistant. So remember, this is the first role that we hire when we're in our hierarchy of roles to outsource in our Amazon business. So I like to hire people from onlinejobs.ph. That is a job board for Filipino employees looking for virtual employment. So this is the exact template that I would use. Literally copy and paste this into onlinejobs.ph, and you'll find a lot of really good applicants for an admin virtual assistant. So the title of my job posting is Admin Assistant, E-commerce Retail Business. And this is what I like to say in it. Our e-commerce company is growing quickly. We're looking to hire an admin assistant. Our business is focused on Amazon's FBA program. As an admin assistant in our business, you will be working alongside X other VAs. Now, obviously, you would replace the letter X with however many VAs you have in your company. And I like to include that line because if I've got other VAs in my company, then I want the VA that I'm potentially hiring to know that, hey, you're going to be working alongside a team. It's not just going to be you on your own. So if you don't have any other VAs working for you already, then you can leave this line out. But I found that VAs like working with other VAs and they want to be a part of a team. So if you have an existing team, including this can oftentimes make people more interested in your role. Now, this next line here is critical. This is the most important part of this section, so do not skip this. I always bury this exact line at some point in my job posting, right? You can bury it here, you could bury it down here, but it's critical that you include something along these lines of, hey, please reply with banana in the subject line if you've read this far. Okay, just this one simple sentence here. Because what you will find is when you post this job posting on onlinejobs.ph, you will get anywhere from 1 to 300 applications. All right. And if you don't include this line here, then you're going to have to go through all 200 or 300 applications one by one to see who's a fit. But if you include this line here, then you can only review the applications where the people included the word banana in the subject line. And the reason this works so well, and my thought process behind this is, well, if the virtual assistant, if the candidate is not disciplined enough to read my entire job posting, which means they didn't put banana in the subject line, then I'm not willing to even interview them. If they haven't taken the time to read my post, why would they be a good employee for my company? So this simple line right here will disqualify, I'm not exaggerating, 80% of people. If you get 200 job applicants for this post, I guarantee you that only 20 to 40 will actually include the word banana in their subject line. So by including this line here, you will cut down on your workload by about 80% when it comes to reviewing potential candidates. So from here, we say your role will include the following tasks: monitor the CEO's email so he can focus on higher level tasks. This is something that was specific to me. So this is not something that you have to include in your template. This is just what I was hiring for at the time. Managing your repricing software, data entry, filling out supplier applications, spreadsheet management. You can pretty much copy the list of tasks here if you would like. This is just the specific tasks I wanted my admin when I was hiring at the time. And then from here, I say the ideal candidate is extremely detail oriented, an excellent communicator, very well organized. Training will be provided. Again, if you don't have an existing VA, you can leave this part out, but this is where I like to say you will shadow our existing VA so you can learn from watching them. And we will also provide SOPs and training videos for you to use. Now, oops, this is a duplicate here. So this is the part that is also very important. This will further disqualify a lot more people to keep you from wasting your time with candidates who didn't even take the time to read your job posting. So this is where I say, if you're interested in this role, please reply with the following information. Your application will not be reviewed if you do not include this info. And I like to tell them, hey, include a screenshot of your internet speed and include a 30-second voice sample on why you're the best fit for this role. So again, by including this line here, you're going to automatically disqualify 80% of people, which is good. You don't want to waste your time with people who aren't even going to read your post. And then with these lines here, you're going to further disqualify another 10 to 20% of people. So if they send me a screenshot of their internet speed and they send a 30-second voice sample, and if they put the word banana in the subject line, then I will take the time to interview them because it's clear that they read my full post, they can follow instructions, and they're worth my time to interview. And knowing their internet speed is important because you can tell if they have terrible internet, then they could be the best VA in the world, but they're not going to be good at their job because their internet isn't quick. And then the 30-second voice sample does two things. One, it will show you if they are able to succinctly and concisely convey why they're good for the job. And two, it'll show you how good their English is. So if they're good English speakers and they can, in 30 seconds or less, tell me why they're a good fit, then again, all the more reason for me to interview them and see if they're a good fit. So that is our application, or that is our job posting for an admin role. I'm going to go through the next ones a little quicker. So this is for a lead generation role. Now you'll notice from our hierarchy here, we don't have lead generation as one of our roles. I consider lead generation as someone who is only finding brands or distributors for us to contact. That's their sole job. So this is something that if you want to hire a standalone lead generation VA for your business, one that their whole job is to find new suppliers for you to contact, then this can be a really good template for you. And this is kind of just a bonus template, but it starts out very similar as the first one. We're growing quickly. We want to hire a lead gen teammate. You'll be working alongside other VAs. Please include banana in the subject line, like we said. And then your role will include the following tasks: finding brands based on our criteria, finding distributors based on our criteria. You'll be required to use the following software programs. Experience with these programs is desired: Keepa, DS Amazon QuickView, Google Sheets, and SmartScout. Now, I don't necessarily require my VAs to have prior experience. In fact, usually I prefer that they don't, so that I can teach them the way that I do things from the ground up. Because a lot of times if they had previous Amazon experience, chances are they weren't taught very well or they were taught the wrong way. So then I've got to spend time almost relearning them and reteaching them the way that I do things, which ends up being more difficult and takes a lot of time. Now, for a lead gen role specifically, I like to then ask them, if you're interested, you should reply with 4 links to Amazon products that meet the following criteria: not sold by Amazon, at least 3 FBA sellers, at least 20 sales per month, and then a sales price above $15. Now, I'm, again, with all of these requirements that I ask of them, I just want to see if they can follow instructions. So when they reply with the 4 links, I don't really care what the leads are, what the brands are, as long as they meet these criteria, because all I'm trying to evaluate at this point is, can they follow instructions or not? And then as always, I include this at the bottom: your application will not be reviewed unless you include this information: screenshot of your internet speed and 30-second voice sample. All right, the next template is for a product sourcing employee, which, remember, is the absolute last hire in our hierarchy. But when it comes time to hire this person, this is a template that you can simply copy and paste and use. It starts off exact same as the other ones. We always include the banana line. If you've read this far, reply with the word banana in the subject line. You will be responsible for the following tasks: you'll analyze product list, You'll add profitable products to a spreadsheet for analysis by the operations manager, and you'll use Keepa to determine the viability of a product for purchase in our business. You'll be required to use the following software. Experience is desired, but like I said, it's not required. And a lot of times I actually prefer they don't have experience. But that's where I'll list out Keepa, DS Amazon Quick View, Seller Amp, Google Sheets, and SmartScout. So those are going to be the main tools that they're using in my business to help me source profitable inventory. And then as always, we include the disqualifiers, screenshot of your internet speed, 30-second voice sample on why you're the best fit for the role. And those are our templates there. So this, again, this resource is going to be completely free. I'm going to put this entire PDF in the description below, so you can click that link, grab it for free, and use it when you're hiring your own VAs. And we'll jump into the next section of the free course now. All right, the next topic that we're going to touch on is a fun one because I like talking about this, and that is credit cards, and specifically cashback credit cards, and how they can add a ton of extra money to your bottom line every single year, tax-free. All right, so I'm going to be going over my 2 favorite credit cards, my exact credit card stack, my exact strategy for how I use these cards and how I leverage them to get higher limits and make a ton of money in cash back, as well as miles. And if you guys want to check out either of these credit cards for yourself, there's going to be links in the description below where you can get one or both of these cards. And if you sign up using my links, then we both get some bonus points. So I believe if you use my links, you'll get more bonus points than you would if you just Google the card names and signed up that way. So be sure to use my links if you're going to check out these cards. So we're going to talk about why using cashback credit cards are critical in an Amazon wholesale business, okay? But first, let's talk about the 2 best options when it comes to credit cards for a wholesale business. So anybody watching this or anybody who's been in the Amazon game for any amount of time knows that this is a capital intensive business. You have to spend money to make money. And at scale, you've got to spend a lot of money to make a lot more money. So the 2 best options for credit cards, and these are my opinion, right? But I prefer cash back over points or airplane miles because I just want cold hard cash in my pocket. So if you're trying to optimize for cash back like me, the 2 best options are going to be either a Chase Ink Business Premier card or a Capital One Spark card. Now, the reason I think the Chase Ink Business Premier card is the holy grail of cashback credit cards, it is the best option by far, is because it gives you unlimited 2% cash back on all your purchases, regardless of what you're buying. There's no rotating categories. There's no certain threshold you've got to hit. It's unlimited 2% cash back no matter what. But the kicker is you actually get 2.5% cash back on any purchases over $5,000. And for me, where I am in my business and at my scale, and for some of you watching this, chances are a lot of what you're buying, in my case, everything that I'm buying, my inventory is going to be over 5K. Rarely, if ever, are we spending less than 5K at a time. So that extra 5% cash back ends up being a significant addition to your bottom line, to the tune of where that extra 0.5% in cash back can add, in my case, hundreds and sometimes $1,000 or more per month than just using the 2% cash back that you would get with a Capital One Spark, for example. Which leads us to the second option, which is Capital One Spark. Now, this is a great option. It's where I started. I still use my Capital One Spark card all the time. And the reason that this is a great option is because it's a little easier to get. It's a little easier to qualify for than the Chase Ink Business Premier. To get the Chase Ink Business Premier card, you tend to need to have really good personal credit. And even if you get the Chase Ink Business Premier, they're going to start you at a lower limit than they probably would with the Capital One Spark. But the Capital One Spark is still a great option, and it gives you unlimited 2% cash back on every purchase with no cap on your cash back. And I actually talked to my Capital One rep from time to time, and he tells me he's got a customer that spends so much money on his Capital One Spark every month. This guy is getting $80,000 per month in cash back using his Capital One Spark card. Now, I have no idea what business this guy is in, but clearly it's incredibly capital intensive. He's making 80 grand a month just in cash back. And Capital One nor Chase, neither of them will limit the amount of cash back you can get. So if you spend $1 million in a month on your credit card, then you'll make the $20,000 in cash back. That would be 2% of that. So if we go into my credit card stack, these are the exact 2 credit cards that I use for inventory. So my Chase Ink Business Premier card has a limit of $143,000. Now, when I first opened the card, my limit was only, I think, $13,000. So over time, as I spent money on the card and I paid it off, and I spent money and I paid it off, I would occasionally request credit limit increases. So they raised me from $13K to $25K to $30K to $50. Now I'm up to a limit of $143,000 for my Chase Ink Business Premier card. And in 2024, using just this credit card, I made over $16,000 in cash back. All right. So that is cash back that went straight into my personal checking account. Don't take this as tax advice, but I don't claim this income on my taxes. So it's essentially tax free. And like I said here, Chase allows you to direct deposit your cash back straight into your bank account. So I didn't have to wait for a check. I didn't have to wait anything in the mail. I just was able to direct deposit that straight into my account. Whereas the Capital One Spark, they will send you, you can either claim it as a statement credit. So they'll either knock the cash back off of your credit card statement, which I don't recommend. What I have them do is just send me a check in the mail. Usually it takes 1 or 2 weeks. And then since the check is made out to my personal name, I will then go and cash that check for myself and just keep that money for myself. So my Capital One Spark, like I said, is still my most used credit card, mainly because my limit is so much higher. So I have a $200,000 per month limit on my Capital One Spark. And what I found is that is actually a soft limit. So I have been able to spend up to $250K in a month or more on my Capital One Spark before that card gets declined. So the Chase limit of 143K is pretty solid. I can't go above 143K, but my Capital One Spark limit is a soft limit, and I can typically spend up to 250K if I need to without my card getting declined. And in 2024, the Capital One Spark card made me over $26,000 in cash back. And again, this is money that I just pocketed and used for vacations or to buy stuff for myself, whatever I wanted. It was just personal funds. So total 2024 cash back was over $42,000, right? That's more than some people make in an entire year from their W-2 job. And that was just from credit card cash back. So the reason I say this is I just don't want you guys to underestimate the value of these cashback credit cards and how much additional money they can make you, especially in a capital intensive business like wholesale. So if you don't have either one or both of these cards yet, guys, go to the links in the description below, apply for one or both of these cards and start using them ASAP, because they're going to make you so much extra money that you can then use to spend on whatever you want. And just to show you an example, so this is my Capital One Spark cashback history from the last 8 days. Okay, so this is literally, today is April 23rd. This is from what, April 16th until today. And this is a total of, I think, $481.15 in cash back just over the last 8 days, because this is what we're spending on inventory here. And this is how much cash back we're getting as a result of that spend. So again, really powerful strategy. If you're buying a lot of money, or if you're buying a lot of inventory, you want to be using a cashback credit card. Now, the tips that I have when it comes to leveraging these credit cards, both to their highest potential, but doing so responsibly, is to always pay your statement balance, okay? Now, what I don't do is I don't pay my cards off in full every month. I just pay the statement balance, which is the amount that I need to pay in order to not have to pay interest. Okay, you never, ever, ever, ever want to pay interest on a credit card. If you are having to pay interest on your credit card, then you are not using credit cards responsibly, and you should not be using them at all. You always want to pay your statement balance in full on the due date every month. And in order to make sure that we do that successfully, we've never ever missed a payment, is to set up auto pay and make sure you have enough cash in your account come statement day, the statement balance due day, to cover that statement balance every single month, and do not miss it. And if for some reason you do miss a payment or you're late by even a day, call the credit card company and tell them, hey, sorry, I missed the payment, but I paid it today. I'm less than a day late. Can you please knock that off my credit history? And most every time they will do so if you have a history of always paying your bill on time. The next tip is to periodically ask for credit limit increases. The reason you don't want to do this too often is a lot of times they will do a soft pull on your credit, which can pull your credit score down temporarily. So you want to ask for increases to make sure that you can keep increasing your limit, but do so periodically, every 2 to 4 months. And over time, you will build up a higher limit, which will allow you to scale quicker, which will be a compounding effect in and of itself. And then you can get even higher limits than the ones that I have, or, some people have limits of $500K, $1 million on their credit cards. They can spend a ton of money, but to get to these higher limits, a lot of times the credit card companies or these banks will ask for financial statements in order to give you those higher limits, which makes sense because the bank wants to make sure that you have a strong balance sheet, that your business isn't underwater, and that you have a history of paying your bills on time and actually making money if they're going to give you higher limits to then go and spend their money. So those are the tips that I have when it comes to credit cards. Please optimize for cash back. It's $42,000 extra went in my pocket in 2024 from this strategy. Apply for the Chase Inc. Business Premier. Apply for the Capital One Spark at the links in the description below. It'll be the best decision you make because there's nothing sweeter than just earning money on the money that you're already going to spend. All right, we will now jump into the next module. So when it comes to leveraging credit cards for earning cash back for your Amazon business, the other thing that you can use your cash back for is you can actually convert those to points depending on the card that you're using and the credit card that you're using. And you can then use those points to get free travel or free hotels. And I have done this successfully to really not have to pay for travel in a very long time because my Amazon business earns so many credit card points. Now, I'm going to show you guys a website that is a huge hack that you can use to make your credit card points go so much farther. And I'm just sharing this because I love this service. I don't have an affiliate for it. I don't make any money from promoting it, but I think it's something really cool that I want you guys to learn about. And I think it's going to be super valuable, especially for those of you that are racking up a ton of credit card points. So I'm going to share my screen here, and the website is called point.me. Okay. Now what point.me does is it's essentially a travel hacking website where you can input the trip that you're going to go on, and it will tell you the best credit card points and basically the cheapest method for using your credit card points to go on that trip. So to show you guys an example of what that looks like, so I typically fly out of the Charlotte warehouse, and sometimes we will go to, let's say, Turks and Caicos, Providenciales on vacation, right? That's a place I've gone on vacation a few times. Let's say I'm going to leave May 3rd, and let's say I'm going to return on May 8th. So if we search, it's going to search all the flight options, and it's going to compare all of the credit card and travel point programs to show us the cheapest possible rate. So if I want to see any flights that are nonstop, so here we have an American Airlines flight. It's a nonstop flight that would retail for, this one, for example, would retail for $273, but I can use 12,000 American Airlines points to pay for that flight, plus $16 in fees. So usually the points comparison is like 12,000 in points would normally be about $120 worth of credit. But now it's telling me there's even an option to use built points, only 7,500 built points, transfer those to Alaska's mileage plan, pay $29 in fees, and get a $273 flight for only 7,500 points. Now, anybody who's used credit card points to travel before know that that's an absolute steal. Here, same thing. This was a much more expensive flight, would be $552 retail, but you could simply use 27,000 American Advantage points, plus paying $16 in fees to pay for that flight in full. So again, this is a website that I have no affiliation with, but I've used it successfully in the past. In fact, last time I traveled to Turks and Caicos, I used point.me and got an $800 round trip flight for what was the equivalent of $200 worth of credit card points. So I pay $15 a month for point.me. I'm on the whatever the standard plan is. So basically that $15 per month subscription saved me $600 on that one single flight. So you can see how if you travel a lot or if you use a lot of points and you book a lot of flights or hotels, this can really pay for itself and be super lucrative and saving you time and saving you money. Now, something else that's cool that they have is you can input all your reward programs into point.me. So this is where you can simply hook up your Chase rewards or your Capital One rewards or your Amex rewards, and it can tell you based on the points that you have, hey, this is the option that you should choose, right? This is going to be the best option for you. Another option they have is a concierge program, which is expensive, which if you have an executive assistant like I do, wouldn't really be worth it for me. But for those of you who want to really buy back your time and have the most efficient travel plans possible, you can pay Point.me to custom build you an itinerary and basically research the best flight times, the best transfers, the best ticketing, and do all of that for you using your points, which will end up still saving you money in the long run. So again, I get nothing out of promoting this. I just think it's an awesome service and one that I've used to really stretch my credit card points way farther than I would if I booked through like Amex Travel or Chase Travel or Capital One Travel. Again, that website is point.me. Check it out for yourself, and hopefully it saves you guys a lot of time. All right, and that wraps up the complete Amazon wholesale blueprint. Well done for making it to the end of this video. And if you're still watching this, you're clearly very serious about crushing your goals on Amazon with wholesale. So the very next step that I want you to take is I want you to join our Wholesale Accelerator School community. Inside that community, you're going to get direct guidance from myself and our team of 7-figure wholesale sellers. You're going to get a new resource every single week, and these are going to be things like supplier call recordings, SOPs, templates, and so much more. And you're going to get a complete 8-module Wholesale Accelerator course that is going to teach you how to start wholesale A to Z in 2025. It's updated, and it's going to get you there quicker. So whether you're just starting out or whether you're already doing 6 figures, the Wholesale Accelerator School community is going to give you the roadmap, the community, and the resources that you need to take your Amazon business to the next level. So head over to wholesaleaccelerator.io to join, or you can simply click on the link in the description below, and I'll see you inside. Thanks for watching.